2025, the largest Bitcoin conference in Asia. We're live at the Bitcoin Magazine News Desk presented by BitPlanet. I'm Pete Rizzo, president at BitcoinTreasuries.net, and we are making history today with the largest conference in Asia. Price down from all-time highs, but expectations are high. You're going to see a stacked lineup if you're watching on YouTube and Rumble. We've got Eric, Trump, Simon, Garovich, Balaji, Srinivasan, Adam Back, Changpeng, Zhao, and many more over the next 2 days. I'm joined now for a lightning talk before we get into the programming. We've got Frank Corva, senior business correspondent at Bitcoin Magazine. We've got Stephen Livera, host of the Stephen Livera podcast, and Mike Jarmusch, CEO at Lightning Ventures. Guys, digging in, we're down a bit from the all-time high, $124,000, nigh 10 days ago. But expectations, of course, are that the fall will bring a return to the markets. Stefan, let's lead in with you. Why are you bullish on Bitcoin for the rest of 2025?
Well, I think, you know, every now and again we take a beat, we have a consolidation period, and then, you know, people keep stacking, and eventually the pressure builds and we pump it up again. So, I mean, none of us knows, are we going to, you know, everyone's asking this question, our 4-year cycle's over, and I don't know, like, I just think we're in this new era, and it's not saying that we're not going to have bear markets again or, like, drops again, but, you know, I think my guess is we are going to kind of extend the cycle out a little bit longer this round.
Frank, over to you. Obviously, it is August. Maybe expectations should be lower. Traditionally, not a boom time for the traditional markets, and Bitcoin has kept steady. We're still over $100,000, knocking on the door of all-time highs. Why are you bullish about the rest of the year?
I mean, if we're looking at it from you know, the amount of institutions that are coming to the table, governments coming to the table, it seems like everyone's stacking now. We have, you know, state-level stacking happening. But also, I think if we look at the 4-year cycle, which I personally don't necessarily think is dead, we usually see the best part of that cycle into the fall of the, what is it, about a year and a half after the halving or so. And
this period coming.
This period coming, the next 3 months, if history repeats itself, should be relatively exciting. Will history repeat itself? I don't know. We saw an all-time high in Bitcoin before the halving, which was unexpected. It was the first time we saw something like that before this recent halving. So I don't know. I'm bullish. I don't know. I feel like spirits are high. Like I said, institutions are here. It's not necessarily what excites me most about Bitcoin, but it is what's happening right now. And I think, you know, we got David Bailey sort of letting us know on Twitter just how many institutions are coming and just how many nation states are coming. So I'm going to take his word for it, if you will.
Mike, over to you. You've got the VC marketplace side of the perspective. Obviously, the price down a little bit. You're expecting a return to form in September, correct?
There is nothing to be bearish about.
Boom.
Nothing.
Right.
There are so many buyers that I don't think that we're ever going to really have as steep of a correction as we've experienced before.
This time it's different? Is that what you're
the Darth Maul candles are over, guys. Okay, it's over. All right, there are just too many buyers on the sidelines right now waiting to pick up cheap Bitcoin. Nothing but tailwinds. There's literally no bad news anywhere.
Love it.
And you know what it makes me the most bullish is all the trolls. All the trolls saying, cycle top. Cycle top. I want more of that. Every time I see somebody online talking about the cycle top has maybe happened, that just makes me more excited. And there's just no way that
Well, of course, the price now $111,000 in USD. Stefan, over to you. Of course, we haven't seen a slowdown in the larger crypto markets. We've seen a number of those other coins. So you'll hear about them today, maybe reaching all-time highs, again, knocking on the door. Let's talk about this Bitcoin focus. This is a Bitcoin conference. Why Bitcoin particularly? And as you're talking to these new entrants that Mike is talking about, how are you delineating between Bitcoin and crypto?
Yeah, it's a great point around Bitcoin and crypto. Here in Asia, it is there are a lot of people who are into crypto, and they haven't really deeply studied Bitcoin, so they wouldn't be able to fundamentally tell you why is Bitcoin different, right? Like, what are the Bitcoin fundamentals? Okay, it's the credible limited supply. It's this decentralized network of nodes. It's this aspect of it's, you know, it's free, it's online, it's 24/7. It's all of these components that make it special. So if you start a shitcoin treasury company, it's just not going to have the same. You're building on
NAR, right?
You know, it's just going to be the wrong. You just got the wrong base. You need Bitcoin to be the base of whatever other things that you're doing. And even with the all-time high thing, I think it's important for people. I will mention this in my talk as well, but price things in Bitcoin, and you'll see that the typical cycle, what you'll see with shitcoins is they might have an initial pump, and then they'll have some echo pumps, but those echo pumps in Bitcoin terms are not, you know, it's rare that it comes back. So I think even with the premium altcoins that you see, they don't recover their Bitcoin all-time high.
Could I piggyback on that, Stefani? I think Stefan makes a great point. And also, when we talk about ETH reaching its new highs or Solana reaching its new highs, whatever, if we look at ETH from its peak, let's say ETH versus Bitcoin in 2021, I think ETH is down like 70% versus Bitcoin if we look at that time frame. So again, we like to zoom out a little bit, lower the time preference. So when we look at things from a broader scale, yeah, we might see some excitement around these things, but I think that's just a matter of, okay, maybe people feel that they're dollar richer, they have more purchasing power in Bitcoin. Human beings like to speculate. We like to bet on stuff. We like to bet on smaller cap. People bet on smaller cap altcoins and this kind of stuff. But we've seen these pumps before, and we know that over time when we measure things in Bitcoin, as Stefan said, there's we're seeing these short-term pumps as we always do at this point in the cycle, but I don't think it's something that's going to last for very long.
Well, I'll take us back to Bitcoin Las Vegas. For those joining us on the stream, back in May, there were hopes that there would be no alt season. People on this very desk declaring that alts were over, that crypto wouldn't make a return. So, Mike, over to you in this conversation. It seems like the idea that this could be a Bitcoin-only cycle now, given this return and this other treasury companies and other assets, might be off the table. What are your thoughts on that?
I don't think that it's the alt season is over, sadly. I don't know if it's time to really have the funeral procession of all of the coffins. I think that they're going to be around for quite a while, and I think that they'll probably take as much of the playbook as they can from the Bitcoin treasury angle and come out with all sorts of things, and try to do a lot of the same case.
Yep.
And I don't know, you look at the dominance chart, and, I don't think that is out of the 4-year cycle. I think that we're still going to see, I just looked the other day, Solana's over $200. I couldn't believe it, and I don't know. I don't think that there's use cases for much of it, for much of everything, but it's the gambler mentality, and that's, we're here in Asia, we're
across the water from Macau, right?
Yeah. We're ready to go. I'd rather put it in one of those things in Macau anyway.
Yeah.
Let's maybe switch gears and talk about a subject you'll be hearing a lot of over the next 2 days, the rise of the Bitcoin treasury company, these public market vehicles that are acquiring Bitcoin. This has been appropriated to other assets within the space. You talked a little bit about those weaknesses, Stefan, but if you're watching at home, why avoid that segment of the market?
Because the case for these treasury companies absolutely hinges on adoption of the underlying asset. And I think that's why, obviously, we're all here. We're all bullish on Bitcoin. We believe it's going to, whatever, millions of dollars a coin or tens of millions of dollars per coin. And so a company who is levering and using the fiat system, doing financial engineering, whether that's equity ATM or convertible notes or preferred shares, they are using that to then buy Bitcoin. And so it's like you're building, a castle on sand, right? Like you need a sound foundation, and Bitcoin is the sound foundation. So that's bottom line, and that's why I would advise anyone, like, just make sure you're focused on Bitcoin, because that's where the long-term value is. Right now, yeah, sure, like to Frank's point, sometimes people just want to have a gamble, and they're like, but I would say for listeners, think, are you chasing a short-term pump, or are you making like a medium to long-term bet?
Well, this introduces new dynamics, right, for folks joining at home, watching on YouTube and Rumble. They may be thinking, should I buy Bitcoin, or should I invest in strategy and MSTR? Should I buy a share of a Bitcoin company? So maybe, Mike, over to you, to the folks at home. Why put their dollar in Bitcoin versus a Bitcoin treasury company?
I don't hate the treasury companies, okay? I think that there's two classes of it. And by the way, as a Bitcoin-focused venture capitalist, they invented the Bitcoin treasury companies, right? If you're investing in a private, small, Bitcoin startup, all right, they already have Bitcoin on their balance sheet, right? Just because you have Bitcoin on your balance sheet, that doesn't make you a treasury company. So I think we should separate these treasury companies into two categories. A hotel in Mexico that buys 11 Bitcoins is not a Bitcoin treasury company, okay? And I don't think that you should race out to buy that, right? Wow. But companies that are doing, cash secured puts, a lot of the stuff that MetaPlanet's doing, Dylan LeClaire, he's a fucking beast. Yeah. And a lot of the strategies that they're using, right, are putting some of that Bitcoin to work, maybe via a routing node and earning some sort of.
Do you feel like that's fair though? If I go out and buy 11 Bitcoin, I'm a Bitcoiner.
You are not. You're going to get a press. You're going to get a press release and a pump for your one hotel in Mexico. I just don't think that that's an actual strategy for acquisition. Strategy has done it best. I think it's going to be hard to do. I think Nakamoto's interesting with the ecosystem and the other stuff that they're trying to put together. I think it makes for consolidation in the space. I think that they'll eventually acquire some actual real Bitcoin companies.
But I think the question was about retail participants who are coming in, right? And they're now greeted with a different opportunity that looks different. It's Bitcoin flavored.
Yeah, I'd like to touch on this. I think this is really important. I was having this conversation with our news editor, Nick, and I think retail, a lot of people coming into Bitcoin, you see a $100,000 price tag for Bitcoin, $100,000 plus price tag for Bitcoin, and I think some people are probably thinking I missed it, but I haven't.
Why not buy the $5 share
Correct.
of the Mexican hotel company?
We call that that's unit bias, right?
Right.
We think because you have there's this bias because of the lower unit price. But the other thing to I think keep in mind, and I tell a lot of newer entrants into Bitcoin this, if you were getting into Bitcoin when Bitcoin was much cheaper, the conviction around the asset was not there. So the stress around holding Bitcoin, is it gonna, the cycles were much bigger, the volatility was much higher. So I would say, okay, maybe the returns, maybe the dollar amount returns on Bitcoin if you're holding it are not going to be what they were if you were buying Bitcoin in 2013, but it's also a bit less stressful. It's more of just a macro asset. It's less of a taboo asset at this point. So it's almost like, okay, maybe the returns aren't as high, but sort of take it easy, stay humble, stack sats to quote Odell. And if you have that speculative urge, sure, play around with the $5 stock for the Mexican hotel company, but set that base in Bitcoin to Stefan's point. Stay humble, stack stats.
Yeah, Stefan, maybe I'd ask you this question. How much Bitcoin should I acquire before I start investing in these Bitcoin treasury stocks?
It's a good question. And look, there's no one answer because I'll say it like this. There are some people who are, let's say, earlier in their wealth building journey, and maybe they have a higher risk tolerance. Or other people just naturally, they can weather the swings. I'll give you an example. Like, so for me, the way I think of it, I should keep, I see it, at least, again, not financial advice, think for yourself, but the way I see it is I want to keep sort of 80 to 90% of my stuff in Bitcoin cold storage, and sort of maybe 10 to 20% is where I think about, okay, am I going to do a treasury company, some into treasury companies or other aspects of it. But I have let's say, I have like some friends who are high net worth people, and they see it the other way. They're like, no, they want to be like 80% in like treasury companies and only 20% in BTC. Now, everyone's got their own view on that, right?
Mike, where are you? Are you 80% Bitcoin treasury companies at the moment?
Yeah.
These equities are really a wrapped Bitcoin for the future 2.0.
Now, Bitcoin flavored, right? It's a Bitcoin percent juice.
But
right?
the power of your margin account, okay? The power of being able to buy MicroStrategy or a Bitcoin ETF, okay, and then take a 50% orderly leverage, right, with something that's maybe 6% annually if you have an interactive brokers account or whatever. That's being able to put that to work to play with some leverage, right? And not like a BitMEX, you're wiped, it's gone. Like you get an email, you have 4 days to cure your margin account, sir. Okay, thank you. And I think a lot of people like that. I think they like the liquidity of it. I think if I'm going to buy, I can either buy 2 Bitcoin right now, or I can buy a crap load of a Bitcoin ETF. If I buy a crap load of a Bitcoin ETF, I can borrow 50% of that and buy some Bitcoin and throw it there, and then cure that margin if it comes. I think people are really using it as, what does Sailor say, intelligent leverage. I think that's where it comes in.
Well, speaking of Sailor, we'll end on that note before transitioning over to some commercials, but MSTR strategy really defining this cycle, now knocking on the door of the S&P 500 potentially being included. We should hear in September definitively whether this will happen. Frank, as you're watching these markets, is this a milestone to look forward to this fall as you think about what excites the market?
Yeah, I think that there is something really special about this idea of MSTR being included in this financial device that people use to preserve their wealth. The S&P 500 is the average thing that people dollar cost average into, and the fact that this will be now partially underpinned by Bitcoin, a company that holds, 3% of the Bitcoin supply?
Now over 3%.
Shout out to BitcoinTreasuries.net. Some great research over on that website over there.
We'll go to the rankings later.
Yeah, I think that there's something exciting about that. So I think about my no-coiner aunts and uncles that think I've gone crazy being in this space. I used to be a college lecturer, for those who don't know, and I'm now here dedicating my life to the evangelism of magic internet money. But I like this idea of Bitcoin being something, it's part of now what's underpinning the S&P 500 via MicroStrategy.
We're going to be hearing a lot about magic internet money. We're here in Hong Kong. We're sending it over to the main stage. It's happening right now in Bitcoin Asia. We'll see you back here after this opening remarks.
Hello, hello. Yeah. All right. The mic is working, so I guess it's the time for the opening remark. First, welcome to Hong Kong and welcome to Bitcoin Asia. Thank you for coming. I'm BTC Viv. I'm the event director and the lead producer for this year's Bitcoin Asia. And I'm very much honored to be here and deliver this opening remark for all of you. At Bitcoin Asia, this year, we're welcoming guests, exhibitors, speakers, and attendees from over 100 countries and regions. This year at Bitcoin Asia, we're here to deliver signal, inspire innovation, and create legacy with all of you for a better future for Bitcoin, for Asia, and the world. Our team has worked very hard to deliver this show, and we sincerely hope you can learn, collaborate, and celebrate with all of us at Bitcoin Asia and have tons of takeaway and enjoy your time very much. So without further ado, let's let the show begin. Thank you very much. Enjoy.
Testing. Hello, hello, hello. Good morning, everyone, and welcome to day one of Bitcoin Asia 2025 here in Hong Kong. I'm Regine, your host today. This year, we are excited to get such an amazing community with over 200 speakers, 100 sponsors, and over 20,000 Bitcoin believers all around the world to come here. 大家好，欢迎来到我们今天 Bitcoin Asia 2025年香港站的第一天。我是你们今天的主持人 Regine。今年大会非常的荣幸能够邀请到超过200位讲解，100多个赞助商，然后超过2万名比特币的爱好者来到这边。To officially kickstart the event, please welcome our first speaker, BTB, Director of the Bitcoin Association of Hong Kong, with his keynote, Debunking the Top 10 Bitcoin Myth from Disbeliever. 现在我们有请我们第一位的讲解 BTB， 香港比特币协会董事，然后给我们第一场主题演讲，破解10大关于比特币的迷思。Welcome BTB.
Thank you, Regine. Okay, good morning, everybody. For those of you coming from overseas, welcome to Hong Kong again. 本地嘅香港人，早晨同埋歡迎。My name is BTB. I was born and raised in Hong Kong. Today's topic is about the top 10 myths of Bitcoin by disbelievers. Actually, let me ask you a quick question first. Hong Kong, Berlin, Munich. How are these three cities similar? What do they have in common? Olympic Games? I wish. Actually, all these three cities host the longest running Bitcoin meetups in the world. They are probably top 3. I still need to verify that. And today's content are coming from all my engagement with my colleagues and friends in all the public meetups and show the top 10 Bitcoin myths. My presentation today comes from people from all walks of life, but to be authentic, I want to maintain some of the original language, and therefore some of my presentation will be in Cantonese, some in English, but the slides are bilingual. Okay, before I talk about the top 10, there are a few myths that are common globally, but not so relevant to Hong Kong people. So if you go to AI and search top Bitcoin myths, these things might probably pop up, but Hong Kong people do not care. The first one is, okay, it's used for illegal activities. As Hong Kong people, we all know, more than half of our crime cases in Hong Kong are scams. They just use fiat currency, and they just use mobile phone. They don't use Bitcoin. And we all know using Bitcoin for bad things is really bad idea because your records are there forever. Number 12, 政府一定會禁止嘅。Oh, okay. 要禁嘅就已經禁咗啦，來都來了， 就例如中國政府，要擁抱嘅亦都擁抱咗啦，就例如美國政府，咪睇下佢邊個贏咯。我哋唔需要憂慮太多嘅。Number 11, Bitcoin mining is spoiling the ocean is claimed by Greenpeace and activist NGO. As Hong Kong people, we are smart. We are not scared of global warming. If you don't believe it, just go outdoor in summer and feel the heat and humidity. And also, we are smart as Hong Kong people. So all this ESG nonsense, we just do not care that much. Okay, here comes the top 10. This comment is from a housewife. 比特幣係一個龐氏騙局嚟嘅喎，聽講好多問題嘅喎。OK，housewife 家庭主婦，俗稱師奶啦，佢哋通常咧係最容易接觸到一啲層壓式嘅推銷術嘅。但係比特幣就唔同，通常層壓式嘅推銷術、龐氏騙局咧，需要有新人入錢，然後將啲錢就俾舊人嘅。Bitcoin 又唔同喎，其實大部分新嘅生產嘅比特幣咧，連 ETF 去物嘅購買嘅需求都應付唔到，基本上係供不應求嘅。而且比特幣係唔靠新人嘅，其實啱啱相反。喺我經驗裏邊，我接觸嘅比特幣嘅 Bitcoiners， 大部分人都唔想賣比特幣嘅。你其實要佢去花比特幣去買嘢咧，佢都係好勉強。所以呢個唔係唔成立嘅。Number 9， 比特幣只係小玩意啫。呢個 comment 嘅人係一個外幣投資者，但係我想 show 一 show 呢樣嘢。日本人口係1.24億，今日比特幣嘅用戶人口就大概有1.04億。咁既然日元係全世界第3大嘅流通貨幣，點解比特幣仲係小眾呢？又睇下英國，英鎊係全世界第4大貨幣，佢人口只不過少過7000萬。出年呢個時間，比特幣用戶嘅人口應該已經超越日本。咁你仲姊妹下比特幣係一個小眾玩意呢？仲有今年5月嘅時候。Coinbase 就加入咗 S&P 500， 不久將來可能 MSTR strategy 亦都會加入。到時候你估全世界有幾多人揸住 S&P 500咧？幾多基金、幾多個人、幾多退休金咧？所以間接擁有比特幣嘅人口分分鐘超越過成個歐洲嘅，所以絕對唔係一個小玩意。Number 8, this is a comment from a banker. Okay, my fiat money works just fine. I don't need Bitcoin. Well.You're lucky to be living in a city like Hong Kong, especially when the Hong Kong dollar is pegged to the US dollar. But just because you don't need Bitcoin doesn't mean that Bitcoin is not needed by the world. Have you actually noticed in the news? Deficit and debt crisis, global money printing, fiat debasement. They are all actually the same thing. Perhaps by the time you realize you actually need Bitcoin, it might be too late for you.Number 7， 比特幣都冇內在價值嘅 ，there's no intrinsic value。呢個 comment 係一個黃金持有者嘅講法，我哋叫佢 gold bug。Well， 既然係一個 gold bug， 當你手上揸住一個金幣，就代表背後有人開採、提煉、鑄造、銷售，就係 proof of work。Bitcoin 一樣，如果你揸住自己嘅 private wallet。揸住比特幣就背後代表好多人花咗人力、物力、電力去生產呢個比特幣，亦都係 proof of work。所以其實我有另一個諗法嘅，所謂 intrinsic value， 以前我都有呢個懷疑，覺得 money 需要有 intrinsic value 啊。但係如果你諗一諗，以鹽嘅故事嚟做例子，喺古代嘅時候有段時間歐洲人係用鹽做貨幣嘅，所以 salary 嗰個字係 come from SAL， 拉丁文即係鹽啦。
We're back at the Bitcoin Magazine News Desk presented by MetaPlanet. You just heard from BTB, Director of the Bitcoin Association of Hong Kong. BTB, we're joined again by our special panel of analysts. We've got Frank Corvus, Senior White House Correspondent, Stefan Livera, host of the Stefan Livera podcast, and Mike Jarmus, CEO of Lightning Ventures. So I want to get back to what we were talking about for the folks at home joining us on Rumble and YouTube and X and across the globe, talking about market dynamics, talking about excitement for this fall. Obviously, there is a global understanding of Bitcoin now that is awakened with the Trump administration and the U.S. policy being so pro-Bitcoin and pro-crypto. This is reverberating around the world. Stefan, your take on what's happening?
So we are, as we were talking before, we're seeing more sovereign adoption. We're seeing more news about things like sovereign mining occurring, where maybe some nation state has excess energy and they decide, hey, let's get some Bitcoin. And some of these things are they're getting doxed or getting announced, or we're seeing, as an example, in the filings with things like IBIT, it's found that, some sovereign wealth fund has ownership of IBIT, the
Swiss central bank, I believe. And
yeah, so we're starting to see this all around the world. It's becoming normalized, but everyday, normal people, it may not be normalized for them yet, but it's a process, it's a journey, and we're expanding our base of people who are invested in Bitcoin or some form of Bitcoin instrument.
Well, Mike, obviously Hong Kong, progressive, but there are certain areas of the world where Bitcoin is still viewed with skepticism. What do you expect to hear today from people reacting to what's happening in the U.S.?
Well, it's nice to finally have the U.S. be supportive of what we went through for the past 4 years.
Yes.
I mean, many of the companies that we invested in couldn't even have even a simple operating account to make payroll, just the championship belt for getting debanked. So it's good to see that coming to an end, and hopefully just a more supportive environment for digital assets, or whatever they're calling it. And it's just positive. And I actually don't know what the regulatory framework is like here in Hong Kong. I'm excited to learn more about how supportive they are. I know that they're writing a lot of the laws, and I know it's different than what's going on in the mainland, but I'm excited to learn more while I'm here about how their government's viewing it.
Well, Hong Kong, of course, implementing its new stablecoin ordinance this month. Frank, you have a unique view on this, obviously, from your purview as the White House correspondent for Bitcoin Magazine. You're up close with the administration. What message are they sending to the world?
I'll give you guys some behind-the-scenes stuff, if you will. So there's some nights I'll be working, and I'll get a call from the White House, and they'll say, hey, we'd love to have you in the press room tomorrow to ask some questions about Bitcoin. Kind of look at my phone, think to myself, is this real life? And then get on the train down to D.C. and go ask some questions in the press room. But I think to echo the point that Mike was making, it's one thing, it's amazing to see them be pro the technology Bitcoin, but I think just having that antagonism taken away, what the Biden administration was doing, Operation Choke Point 2.0, lawfare as people termed it, regulation by prosecution and all this kind of really terrible stuff, seeing that for the most part come to an end. We're still seeing some stuff with the Samurai trial and the Tornado Cash trial. Certain things still need to be worked out, but generally speaking, in the land of the free, in America, the land of the free, we need to embrace freedom money, right? And I think that the Trump administration taking steps to do that, it's the right way to go. And I think even if you look at the laws that sort of protect our right to have Bitcoin, the freedom of speech, right, in the Constitution, our right, things are codified, our laws enable us to hold our private keys. We should be able to not only do that, but build industry around this asset. And I think we're seeing more of that now happen under this administration. And the world is paying attention, no question.
Well, the topic is the global regulatory landscape. Stefan, over to you. Have you been surprised by the reaction from the world after the Trump administration has been so positive? We really haven't seen a ton of conversation, maybe out of Europe and South America and different areas. Maybe still waiting and seeing.
Somewhat kicking and screaming. It's I think someone correct me if I'm wrong, but I believe even in the UK they started allowing things like the ETP, exchange traded products for Bitcoin. Here in Hong Kong, I've heard. The last few years, they've slowly been trying to be more competitive. Like, I think what's happened is in Hong Kong, what I'm hearing when I talk to people is that they sense that they've maybe lost a bit of competitiveness because of like the lockdown era, and some of that energy went to maybe Singapore and so on. And so now there are efforts being made to try to bring it back in terms of at least crypto per se, and be open for business. And they're trying to obviously expand the opportunities, or try to attract, let's say, family offices or businesses to come and set up here in Hong Kong. And so that's what we're seeing, I'd say, here in Asia, even in other parts of Asia. So even in Korea, there's a bit more excitement there. We're starting to see, obviously, the treasury company play is happening in different countries. I think there was one in Thailand recently. One
India, a bunch of them in India.
Yeah.
Yep.
So, it's a mix of things, but it's a slow but steady, let's say, awakening and an opening to Bitcoin and Bitcoin-related companies. And for now, sometimes there's a bit of excitement about things like stablecoin, which obviously we see that as kind of orthogonal, but still.
Yeah, let's talk into that. Obviously, for people watching at home internationally, they may know that the U.S. spearheaded the Genius Act, right? So stablecoins now a regulatory framework for banks and financial institutions to participate this fall. I'm assuming we'll see a big rollout, and the names are big. Amazon, PayPal, Walmart, these are companies that are talking about issuing stablecoins. So as we're talking in the market in the fall and looking forward, this is going to be a big change for the Bitcoin market, no, Mike?
Well, I think it comes back to what is the saying? The U.S. Innovates, Europe regulates, and China copies, right? And I think that's basically what's going on with the Genius Act. And, you know, we're going to have Tether on Lightning here soon, if it's not already there.
Not yet. Soon.
Soon. We have the Taproot assets. So, you know, it keeps Bitcoin in the conversation in terms of stable coins in the future. And, I mean, stable coins are definitely here to stay. I don't know why. What's different than in Amazon credit versus an Amazon stable coin? I don't understand that, right? If I have a $35 credit in my Amazon account, what is the difference? What are they going to do? How are they going to look when a retailer? How does Walmart stablecoin look? I just don't think it's too early to actually see.
Well, Frank, I know you've seen some of this close up, talking to the participants who are thinking about this market. Stablecoins coming and distracting from Bitcoin?
I would say yes, but at the same time, I think we also need to pay attention to the market. So Tether didn't just become this immense global thing because they had a good marketing department. People around the world demanded Tether. They wanted to use it. People in Latin America, Africa, people who... so it's interesting because the world got introduced to both Bitcoin and then tokenized dollars soon after. I lived in Venezuela. I knew people wanted dollars. It's now easier to get those dollars. Bitcoin might be something that they're still coming to terms with, that they're understanding. I personally have mixed feelings about Tether, stablecoin proliferation, all of that kind of stuff. Part of me wishes that people would just adopt Bitcoin, but also people can do what they want to do. It's a free market. You want to use Tether, you want to use Bitcoin, it is what it is. I just hope, the one thing that I hope, and I do push for this in my writing and when I talk about things, Bitcoin is money. It's not just a capital asset. There are people around the world in circular economies like Bitcoin Beach, Bitcoin Nakazi, Bitcoin Dua in Ghana, where people use Bitcoin as money. So if you want to use stablecoins, that's fine. I think we're going to see stablecoin proliferation. I subscribe to the dollar milkshake theory. I think a lot of other fiat currencies are going to disappear in the next 5 to 10 years. Dollars are going to sort of suck the liquidity out of them. They'll get destroyed, weaker currencies. But then I think after that, we see something that I think we would all refer to as hyper-Bitcoinization.
Right, well, that's the global conversation now. I'm assuming we'll be hearing about it today here in Hong Kong, efforts to promote stable coins, hearing that in South Korea, hearing that in Russia. Stefan, curious your take. How does this change the global dynamic, right? We're used to a world in which, you know, the U.S. dollar is king, but there's still a vibrant ecosystem of other competing currencies. We're here in Hong Kong using the Hong Kong dollar. How does that change as a result of what's happening?
So I guess one of the big questions is, and this is kind of like the rumor that you're hearing is like, is there gonna be some kind of, you know, Chinese, you know, coin that has some kind of gold backing or whatever? This is kind of like a rumor, but totally, you know, who knows, right? But for now, I think most people around the world want some form of US dollar exposure, and that's why these stable coins are very popular.
Yes.
And even in the early years of Tether, like a lot of the early users, I think it was in China. That was actually where the...
Is that right? Yeah.
Yeah, some of the early adoption of Tether was actually in China because they were having trouble either getting money out or getting money in and out of exchanges like BitPlanet and so on. And so that was kind of... That's where Tether had built up this kind of distribution, like of hundreds of millions of users around the world. I think the question will be, will... you know, the Amazons and Circles and PayPals of the world be able to replicate that kind of network? And we'll see. I mean, because there'll be different regulatory...
We will see some big players enter the space. The biggest one, perhaps, JP Morgan, you know, making the announcement that they're working on a stablecoin product. This comes after years of our speaker BTB talking about the misinformation that's come out there with Jamie Dimon and the financial folks on Wall Street being negative towards Bitcoin. So how do we feel about that turn of events, right? It seems like Wall Street is embracing Bitcoin to some extent, right?
100%. They love it. They love every tick down in the price. They're ready. It's manipulation. It's the options. I mean, Wall Street's all about it. The Circle IPO was an absolute banger. I mean, they priced it at 30. I mean, it came out that day, I think, at 100. I think it traded at 300. I mean, it's just absurd when you look at what happened. I mean, clearly the market loves stable coins. I mean, it's been the best performing IPO in probably a few years. So
we're going to throw it back over to the main stage of Bitcoin Asia. It's all happening in Hong Kong. Stay with us on X, Rumble, and YouTube. We'll see you over at the Nakamoto stage. We'll be right back after this.
Oh, look. Welcome, Polly. Welcome, Paul. Welcome on stage.
Hi guys, can you guys hear me? Super excited to be here. My name is Paul Lee. I am excited to be here to talk about the first global institutional Bitcoin treasury company in Korea. First, let me share a little bit about myself. I studied at Stanford, started my career here in Hong Kong, actually, at Lehman Brothers. After the financial crisis, I went to Harvard Law School, became a lawyer. I was lucky to represent Galaxy and Grayscale in their early days. Got orange-pilled pretty quickly. I left law to focus on venture investments. At places like Republic and BitGo. But a big part of my investment thesis has always been Bitcoin ecosystem. I'm also Korean. I'm Korean through and through, and also Bitcoiner. It's been difficult to watch. It's been difficult to watch that the Bitcoin narrative has not yet taken its root in Korea, the country I frankly think needs it the most. But now you can really feel the momentum changing across the board. Retail investors, institutions, policymakers, they're all paying attention to Bitcoin as the only macro asset that can address a lot of issues the country is facing. Declining population, high real estate price, underperforming, underfunded pension funds, and discounted public market due to poor governance and low ROI. And I truly believe Korea is at an inflection point in recognizing Bitcoin as the only answer. And for access, what we need is a bridge, the bridge between old financial securities infrastructure and Bitcoin. And whoever builds that bridge, I think, will unlock the next wave of value creation in the Korean financial industry. And that's why I'm incredibly excited to announce the launch of BitPlanet, the first institutional global Bitcoin treasury company in Korea. Just 2 days ago, our investor consortium acquired 62% of SGA, a Kosdaq-listed SI provider, and taking full control of the company and the board. In 2 weeks, we will rebrand the company into BitPlanet, deploy over $40 million of fresh cash into the Bitcoin strategy on day one. Most importantly, we did not raise any debt in this transaction, making the company's financial extra lean and light. I will serve as the co-CEO to lead the company's Bitcoin strategy. The existing CEO of SGA, Mr. Jae-hyun Park, he will stay as the other co-CEO to lead the company's traditional SI business. So what's our plan? First off, we are a Bitcoin first, Bitcoin only company. Our priority is to stack as much Bitcoin as possible, as quickly as we can, and measure our performance only in Bitcoin terms. Along the way, we will innovate. We will challenge the status quo to generate safe and sustainable yield for our shareholders without putting our Bitcoin at risk. And we'll do it by the book. We will be, all of our infrastructure, including custody, will be in Korea. We will be fully compliant with local regulations, in close communication with regulators and government, and 100% transparent to our shareholders every step we take. And if we strike the right balance between innovation, risk management, and compliance, I really think we have a unique chance to set the gold standard of the Bitcoin treasury business model. And that is really our vision. That is our North Star. We will share detailed milestones of the company in the coming weeks, but our direction is pretty clear. We will move fast and go big. We will sprint towards our short-term milestone of accumulating 10,000 Bitcoin and becoming one of the top 10 corporate holders of Bitcoin globally, and build the foundation to build a company that will be around 10, 20, 50 years. And that is our 10-10 plan. I get a lot of questions on how is BitPlanet different from dozens of DAT companies popping up around the world, including Korea. Why is BitPlanet Korea's best strategy? I can think of 3 reasons. First is our experience and network. Our main investor is Sora Ventures, who has an experience of setting up a high single-digit number of Bitcoin treasury companies around the world. There's no one more experienced in setting up and operating early-stage Bitcoin treasury companies. And we will be a part of a pan-Asia network of the biggest Bitcoin treasury companies across major capital markets: US, Japan, Korea, Taiwan, Hong Kong, Thailand, the list goes on, all working together, creating synergies. Second is our underlying business. In Korea, if you are setting up a Bitcoin treasury company, finding the right partner, finding the right platform is probably the most important step. SGA, now BitPlanet, is a real operating business with real customers. They're a strong system integration service provider. It has been in operation for 28 years. It's been listed for 24 years, has 120 employees, generates a stable revenue of $20 to $30 million. Nothing about the business will change. The key management will stay. We're not going to shut it down. We're not going to sell it out. The current CEO will also stay. That continuity will give us a strong, stable basis to support the long-term Bitcoin strategy. And we have the best partners. We are not a group of opportunist hedge funds. We are in this for the long term. We're in this for the long game because we believe in the long-term value of Bitcoin, and which is why the right strategic partners matter. We are fortunate to have an incredible list of investors backing our vision across the globe. Sora Ventures Taiwan, Asia Strategy, Parafai Capital, Simon Jerovich in MetaPlanet. By the way, huge shout out to Simon and his team for what they've done in the space. Cliff Capital, Thailand. Of course, our sister public companies, Moon Inc. in Hong Kong and DV8 in Thailand. We are also very close to finalizing investments from major Bitcoin media group and the global multi-billion-dollar fund focused on the Bitcoin ecosystem. Last but not least, we have KCGI as our local partner, who will also join the board of the company. KCGI is one of the leading financial groups in Korea. If you know anything about the legendary Chairman Kang, who's actually here, you know there's no one in Korea who understands the company, the public company investment and governance better. He's fully aligned with our vision, and we're honored to partner with KCGI in our journey. That's it, guys. I'm super pumped about this. Hope you're too. That's our X profile page. Please follow us, and look forward to connecting with you during this conference. Thank you.
Thank you, Paul. Thank you so much.
Bitcoin Magazine News Desk presented by MetaPlanet. You just heard from BitPlanet, launching the first institutional Bitcoin treasury company in South Korea, announcing that they'll be buying $40 million in Bitcoin on the day of their forthcoming launch. We've got a packed panel of analysts here to break down what you're hearing and prepare you for all to come. We've got Frank Korver, Senior White House Correspondent at Bitcoin Magazine, Amanda Fabiano, CEO at Nakamoto, Bitcoin Treasury Company, and Mike Jarmus, CEO at Lightning Ventures. Another Bitcoin treasury company, this time launching in South Korea. This is really going global in terms of the movement. Amanda, can you bring us in? Why is this such an exciting opportunity right now?
I think the time is right? So we saw it kind of kick off in the U.S. because you saw the rise of institutional adoption, right? You saw the regulatory barriers fall, and it just becomes a thing where you're like, hey, maybe Bitcoin is the right asset to start to look at. It's kind of a surreal journey if you think about, like, you guys have all been here for a while in Bitcoin and just thinking about how much it was difficult to get institutional adoption at the beginning, and now, you know, we're seeing more ETF flow than Bitcoin being mined in a day. That's crazy.
Right.
So, and then you see all these treasury companies pop up. You start to think about like, where is the price going to be in the future?
Well, people are rightly, I think, asking, there's so many announcements, so much buying, and the numbers are huge. People coming out buying billions of dollars worth of Bitcoin, but we're still in range. We're still not over all-time highs. We haven't seen maybe the breakout that people are expecting. So, Mike, maybe over to you. Why aren't the Bitcoin treasury companies, why isn't that demand translating into immediate price movements?
Do you work for a treasury company?
Yeah.
Okay.
Yeah.
That's like a fairly new thing, right? Wasn't it like a big okay, I'm just making sure that wasn't
Checking.
just
He's
glossed
checking.
over.
Yeah.
Well, when is it going? I don't know. Why is it not being reflected in the price? Who knows? Is it the large OG whales? Is it those concentrated dumps? Everything that people say. Is it games that they're playing with options? Are people distracted with treasuries and MNAVs and everything else? I have no idea why the price is not $316,000.
Well, we're not going to ask Mike. Frank, over to you.
All right.
In terms of why, maybe we haven't seen Bitcoin reach the numbers that people are talking about yet. So what's going on here in this market?
There's probably a lot of dynamics at play, but also just Bitcoin is a huge asset. It's a $2.2 trillion market cap at this point. It's a huge asset. This isn't trying to move a $100 million market cap asset anymore. So like to see Bitcoin go from what? Let's say it goes from what we're at today, 112,000. Let's say at the end of this cycle, we're going to maybe, and I still believe generally speaking in the 4-year cycle, let's say we're going to 175, 200. We're talking about adding another $1.something trillion to the market cap. This is a tremendous amount of money. Yes, there's a lot of money flowing in from institutions, from governments, but at the same time, we have to keep in mind, we have entities like the German government selling 50,000 Bitcoin last year. We have Bhutan who's mining Bitcoin. They had 13,000 on the balance sheet, but we see them selling it. So yes, there's a lot of buying going on, but at the same time, people also still need cash, they need stuff to operate, so if Bhutan's mining Bitcoin, it's not that they're just hodlers, right? They have a government to operate, and they're using probably some of the proceeds from that mining to do that. So yes, while there's a lot of buying, there's also selling. This is how a market works, and I think that while there's some new players in that market, it doesn't necessarily change the dynamics that are sort of the tale as old as time.
Well, the BitPlanet announcement in the books, we're sending it over to the main stage again. You're going to hear from Will Kasarian from Damus making an announcement about Nostr. We'll be right back after these messages.
On your app. This is what I built at Damus iOS app. So this it's basically just like Twitter, but allows you to send Bitcoin over the Lightning Network instead of a like. But what's cool about this is that, this technology, this Zap technology, it'll work in another app that does long-form articles. It'll work in another app that does, live streams. It's actually an open standard. It's an open technology, very similar to Bitcoin. So this is something I've been exploring lately because I think this is truly the key to getting Bitcoin into more people's pockets because anyway. And as a really good person who's been a good mentor to me recently, he also thinks it's a pretty good idea. So if you see down here on the QR code on the bottom left, this is a cryptographically verifiable note that Jack Dorsey did in fact say this. And that is not something you can say about any other social media platform. And you can zap that note. You can go to that and send him, you can send Jack Dorsey money. I don't know why he needs more money, but you could, I guess. And it's not just Damus iOS. So Damus iOS was the first app that I launched in 2023. But there's now over 100 apps. They all have Zap integration. So if you go to this QR code, you can actually explore this entire open ecosystem of apps. People are enjoying it. There's so many people I've onboarded onto Bitcoin through Nostr. They just go on the network, they get their first app, and it's like, holy crap, that was easy. Anyway, so that's just like to kind of, it's a quick whirlwind tour of everything that we've been working on in the past couple of years, but I have something very special to announce just for this crowd, exclusively for you guys at Bitcoin Asia. This is the first time we're launching it. Let's roll the clip.
I am unstoppable. I am unstoppable. I am unstoppable. I am unstoppable.
to the Bitcoin Magazine News Desk presented by MetaPlanet. You just heard a special announcement from Damas, the company at the center of the Nostr movement. Of course, much more to come here at Bitcoin Asia as the day unfolds. We've got another packed panel of guests here. We've got Frank Cora, Senior White House Correspondent at Bitcoin Magazine, Amanda Fabiano, COO at Nakamoto, and Mike Jarmus, CEO at Lightning Ventures. So obviously social media, other areas where Bitcoin is having an impact. People have seen maybe Jack Dorsey come out with BitChat. Bitcoin having a larger impact on technology globally. Maybe Frank, we'll start with you. What's happening here with Nostr? Why is this at a Bitcoin conference? What's the message we're sending here?
I am a big Nostr proponent. I love Nostr. I like to refer to Nostr as the world's biggest Bitcoin circular economy. I love doing posts on Nostr. I like sort of double dipping, if you will. So I publish my work through Bitcoin Magazine where I take my salary, and then I take that work, I publish it on Nostr, and people send me sats
Wow.
for being such an incredible
paid twice for your
Yes, I
incredible
get
work.
double dipping, ladies and gentlemen. You heard it here first. You sign up for, I use Primal. Primal's the one that I use most, but I also use Damas. I love the work that Will is doing. But I think Nostr is an amazing permissionless way to tip content creators. So imagine you're on Instagram or Twitter and it's very easy for people to just send you some Bitcoin. Hey, I found that information useful. Here's some Bitcoin for it. I get a lot of that as a journalist and I really love using the platforms. Damas, Primal, there's different photo apps now that they're building on Nostr. Wavelake, I think, is a music app that's actually a Nostr client as well. Lots of innovation, and that innovation, there's Bitcoin flowing through it right now. As to the point that you were making, Bitcoin was sort of underpins a lot of this technology.
Bitcoin integrated into messaging. Mike, is this an area you're focusing on as a venture capitalist in the space?
Well, a lot of the innovations there came from Operation Choke Point and the fact that it was so difficult to actually have simple transactions in a custodial sense. So they had to come up with all these clever ways, and Nostr is just perfect for that. It's perfect for a non-custodial way to tip people, perfect for micropayments, of course, and just a way that these apps can operate. Nostr Wallet Connect, and giving them a way to be able to
Permissionlessly send money?
Right,
Yeah.
and something like Wavelake and a lot of the Nostr startups are actually not even referencing Nostr. It's happening in the background. You don't even know. You sign up for a Wavelake account. They don't call it Bitcoin. They call it like a eCash, and you're basically creating a Nostr account. You're logging in, but it's not right in front of you. You know, and I think that that's what we're going to see. And to your point about Bitcoin basically infiltrating all parts of the world, you know, I mean, there's companies that are doing remittance plays. It's happening instantaneously over Lightning in the background, nearly free. Okay, you're sending money, the easiest way to send money to India. Okay, no mention of Bitcoin on the company's website. Those are my favorite Bitcoin startups because Bitcoin's powering it under the hood, and Aunt Mary and Uncle Bob, they have to send $3,000 to their family in India. They have no idea that that's happening instantaneously via Lightning. So I'm excited about that.
Well, Amanda, of course, these are use cases in some sense. We've been hearing about these forever, maybe since as far back as 2013, 14. The idea that Bitcoin payments, Bitcoin would be embedded in applications, still happening at the edges. Are you bullish on this application?
So I am a little bullish, but also a little not.
I think you can only be a lot.
Yeah, we're extreme here. We like to keep it extreme. We like to be hyperbolic over here at the live desk. Yeah.
It seems
Tentatively bullish.
Yeah.
it seems like it's the payment rails have been getting better, but so this is going to be a very hot take. When I spend money in Bitcoin, I instantly buy it back.
Okay. Spend and replace, if you will.
Yeah.
Yeah, I like that.
So I just see Bitcoin as like this long-term store of value asset, and I don't want to give up my Bitcoin.
I like that.
So, like, will people have that type of mentality with Bitcoin, or will that shift happen?
Right.
And so I have a hard time with the shift,
Okay.
unless I could just get Bitcoin again. But I think that's like a hodl mentality. I don't think everyone will always have that.
Right. There are parts of the world where this is needed at maybe a
Yes.
higher level than in developed markets like the US and Hong Kong. Frank, I know you've spent a lot of time around the world where there are no options other than Bitcoin for these kinds of types of applications.
Just last year, I want to give a shout out to Afrobit Kibera. So I'll give a little background on this. The BBC just did a special on this. It was actually inspired by an article I wrote. Unfortunately, it wasn't for Bitcoin Magazine, but it was for Forbes. So I was in the largest slum or informal settlement in Africa, and within that informal settlement, there is now a Bitcoin economy. Part of the reason for this is because many refugees live in this slum and they're not allowed to have a digital ID, which allows them to interact with M-Pesa, which is the local sort of mobile money system there, the fiat mobile money system. So it's a necessity, right? But what I'm seeing when I go to these areas, whether it's Bitcoin Akazi, a township in South Africa, or an informal settlement in Kenya, is that communities, so they're using it as money, but it's becoming essentially a store of value for the community. So now you have people meeting up, mothers meeting up, talking about saving for their children. I'm going to use this money that we're using to transact every day amongst us to put our kids through school. When you hear these stories, it'll bring you to tears. It's super moving. And even part of the work that I do at the White House and in politics, it's partially because we need to see good regulation happen in America so that this spreads globally, so that stuff like we're seeing in the circular economies, when politicians and regulators start to see that it's happening, we don't want them to crack down on it and say, hey, why aren't you guys, I don't know, paying taxes on this or doing that? We want to see that stuff be protected and proliferate.
Well, Bitcoin adoption happening at the institutional level, but also grassroots as well. We're sending it over to the main stage again. You're going to hear about Bitcoin meetups. The heartbeat of adoption. Will be back with much more. The Bitcoin Magazine News Desk. Stay tuned.
与会嘉宾有 Michael Lim， 博雅互动独立非执行董事 ，Able Show Bitco 亚太区总监 Karen Shen 证监会中介机构部经理。Welcome.
Take a seat first, gentlemen. Welcome to Hong Kong and welcome to our panel discussions. I think this is my great honor to moderate the panels here. I think we are centering the policy of Hong Kong specifically related to the Bitcoin and digital assets. So today we have guests from various fields, including our regulators from Clarence from SFC, our prestigious infrastructure companies, Able from BitGo, and also Marco from Boya Interactive, which is one of the biggest Bitcoin holders, listed company in Hong Kong. So I think everyone knows Hong Kong has already launched a digital policy from 2022, starting from the Hong Kong virtual asset statement. So I think including the virtual assets trading platform and also the service provider licenses, we have already get a lot of effort on the policy. So I think not delayed, I want to ask a few questions with my special panelist guest today. So I would like to start with Clarence. Could you please share with us the latest development and update on digital assets regulations in Hong Kong? And also I would like to ask Marco and Abel, as the key participants in Hong Kong and the industry, what are your thoughts and what area do you believe could be further advanced and prioritized? Clarence first.
Thank you, Casper. So to start out, I think the key characteristics of the Hong Kong's regulatory regime, in particular the SFC's regime, is that we are predictable and consistent. This means that since we set out trying to regulate crypto assets back in 2018, we've gradually built up a comprehensive regulatory framework that covers a wide range of activities. These now include centralized trading platforms, dealing, advisory, fund management, and other activities. And more recently, in 2023, thanks to the government and legislators, we've been able to implement a mandatory licensing regime for virtual asset trading platforms. And all of these regimes actually are based on the same principles, same business, same risk, same rules. And although the history of SFC's regulation isn't as long as BTC, what we can see here is that we've been trying to do incremental improvements and changes. So based on our regulated entities, including these trading platforms, custodians, fund managers, and dealers, what has happened recently is that in 2024, we've managed to approve spot ETFs, which is one of the first in Asia. And they also have unique features that are not commonly found in other jurisdictions, including in-kind redemption and subscription. And all of these new innovations have been based on our comprehensive regulatory framework, which has included created regulated ecosystems. And right now, we have over 10 trading platforms licensed, over 40 fund managers, over 40 dealers involved in these different activities. And more recently, we have over nearly 10 spot ETFs dealing in different kinds of crypto assets. And even more recently, we have not been resting on our laurels. What has happened is that recently in February, we announced an expired regulatory roadmap. What this means is that there are 5 pillars, A being access, S being safeguards, P being products, I being infrastructure, and RE being relationships. And there are 12 major initiatives under our roadmap that covers items such as derivatives trading, borrowing and lending. Our aim is to build up Hong Kong to be a trusted nexus of liquidity, including Bitcoin liquidity. And then based on this Aspire roadmap, in June, just now, 2025, we, together with the government, has announced a public consultation based on regulating virtual asset dealers and virtual asset custodians. And after this regime is finally implemented in Hong Kong, we expect there will be many more players that will be licensed and regulated, thus expanding the ecosystem for everybody here as well.
And Marco and Abel, I think you guys are the industrial leaders and participants in the industry. What do you have the experience or your thoughts about the Hong Kong policy regulations in the coming future?
Maybe I'll go first. The first thing to say is obviously that it's a very admirable job that the SFC has done, and it's not easy. Having to satisfy what the industry wants to see as or being perceived as sensible regulations in place. I think consistency is something you mentioned a lot that is very obvious and helps distinguish the Hong Kong regulations from the rest of the region. And unlike other parts of the region where we see a lot of distrust, a lot of suspicion between the industry and the regulations and the regulators, in Hong Kong, that consistency has allowed people to decide one way or the other how they want to do business, when they want to do business, and why they want to do business in Hong Kong, which hopefully is a very self-explanatory market, one with huge potential, and obviously serves as a gateway to a lot of the North Asian region as well. So it's a really admirable job over there that you've done, and we've got a lot of respect for it. I guess I can provide a view as an outsider, not based in Hong Kong, that for infrastructure, as these verticals are coming out and clarity around these verticals come out, it helps the business to decide how you want to plan for your expansion in Hong Kong and the greater sort of North Asia region as well. And obviously with that competition between Hong Kong and Singapore, it also helps businesses to decide how you want to allocate those resources, why and when as well. So I think that's a really good thing that eventually helps the pie to grow in totality and helps businesses to decide whether they want to invest in that pie as well.
Marco?
Yeah, I think, also applause to the SFC and Hong Kong government putting, as quickly as the framework. If you guys recall, in 2023, that was when the financial secretary come out and say, hey, Hong Kong wanted to be turning into a Web3 hub. We really don't have what we have said, right? So we come all the way from very little regulations to now complete regulations on not only VATP, which is the trading platform exchanges, we have the OTC as well, and also we have the custodian license upcoming as well, which are important to Boya because we need somewhere to store our tokens, right? Right now we can have very limited choices of dealing with the Hong Kong exchange, the Hong Kong VATP license at the moment. But when this framework open up, then we have more choices on dealing with different counterparties. We can buy tokens from the OTC license as well, not only restrict to the VATP license. So I guess that framework is pretty much very complete, and it's gone very far away because I also come from a crypto managers as well. I think when I started in this in 2019, there's little framework in Hong Kong, and they're not that crypto friendly back in the days, to be frank. And right now, looking back, Hong Kong is now have 10 over ETF. We have Boya, which is one of the biggest treasuries company in Hong Kong. So Hong Kong is not saying no for treasuries company as well. As long as you comply with the Hong Kong EX rules, we can actually do it as well. They are not allowing people to buy, companies to buy crypto assets, including Bitcoin as well. So I think that's a big signal to the world to say, hey, Hong Kong is actually here open for business. We have the license which try to protect the investors as well, but at the same time, we wanted to welcome more overseas institutionals to come and work with us. And looking at Boya, we have a huge amount of institutional investors actually in our cap table as well. And that shows that Hong Kong is already making way to become one of the key players in this Web3 or crypto industries.
Yeah, I think three of our special guests have shared it. The whole ecosystem of Hong Kong has been built by our industry leaders and also the government. I think apart from not only the licenses, and also for your reference, the Hong Kong government 2 years ago has distributed 50 million Hong Kong dollar to Hong Kong Cyberport for building the whole ecosystem for example, like inviting like BitGo, infrastructure company, and also some of a lot of prestigious asset management company in Hong Kong. So I think today our three of the special guests are all maybe facing the retail or facing the public during the launching the policy or doing the cryptocurrency policy. So I want to jump into another topics is about investor protections, because I think a lot of like regulation all over the world in Hong Kong, when we push a policy specifically trading cryptocurrency in Hong Kong or Bitcoin, so we need to protect our investor. Then in terms of listed company, infrastructure company, and also the regulatory body, what do you think about like what we can do more about the investor protection or education in the coming future? How about start from Marco?
Sure. Besides being Boya, independent non-executive director, I also teaches in Hong Kong U Space and Hong Kong SI, which is a body that educates for financial institutions as well. I think the education's level on Hong Kong investors are a bit behind compared to, I think, global. We have to say, like, compared to Korea, we're just speaking about it. Korea, much more higher population which own crypto at the moment. I think Hong Kong is still a market that is slightly undeveloped because out of all the 8 million populations, I think only 2 to 3% right now own crypto. Even though we already have ETF and we have VATP, I think it's the education level. We have all these tools now for them to invest, but I think we need to do much more on education rather than protect them. But I think right now, they're not even in the, most of them are not even in the game yet. So we need to educate them. Hopefully they come in to have some crypto exposures, and then we will talk about protections. I think right now, SFC have done a good job in setting out the protections already, but it's the education, the investor education. Why do they want to invest in this asset class? That is the most important thing that we should, going forward, that we should do more of.
Yeah, I guess from our point of view as a pure B2B business with roughly 4,000 institutional clients around the world, we see things from a sort of more broad perspective, right? And that educational piece tends to begin with the top down, right? When we educate and speak to regulators, engage with them, guess what? They find that very quickly they see us as on the same team as them, right? You want investor protection, we're all about security, we're all about giving confidence to our clients. We're on the same team, right? So if we can find a way to work together harmoniously, that sets the standard already, right? And then for a lot of the downstream effects of that, the institutions that we're now finally seeing coming to crypto with the ETFs, with stablecoin issuance, they had to start somewhere as well. So that educational process, from our point of view, started 3, 4, 5 years ago. And then what next, right? Securities firms, high net worth individuals. And my message to them is always, hey, keep an open mind, right? Bitcoin has been around for quite a while now. It's not going to go away, let's face it, right? So if you keep an open mind, you try to learn and decide for yourself whether you want to get involved or not, make an informed decision, right? And then when those downstream effects follow, eventually to retail as well, at that stage, hopefully, there will be a sufficient level of buffer, right, on educational level, not just in Hong Kong, but around the region as well, that people can fall back on and use as a way to tool themselves up to get familiar with Bitcoin.
Yeah, I echo what Marco and Abel just said. Investor education is definitely very important, and I guess that's one of the reasons why the four of us sitting here on the stage today as well. Part of the reason could be that some people could learn stuff that they didn't know beforehand before coming to listen to our talk. And I have to emphasize that SFC's current goal is definitely to enable innovation while maintaining investor protection safeguards. And similar to how Marco just talked about how even his company needs to find an appropriate custodian, way back many years ago, we've already identified that intermediaries risk related to crypto is quite important to address as well. And this includes, for example, a custodian risk, basically. Who is holding your keys to your cryptos and your Bitcoin in particular? And what we have done here is that we have tried to build a robust regulatory framework, in particular, that addresses this issue. In fact, just earlier this month, we also issued an additional circular and regulatory guidance on how we think the custodial infrastructure could be strengthened and become more robust. And this is an example of how we are constantly trying to improve our regulatory framework and fine-tune everything based on the Aspire roadmap. And I guess on a more retail and public specific side, what we've been trying to do since early on is that we've identified that it doesn't matter if these crypto assets or Bitcoin in particular are securities or not. In certain cases, same business, same risk, same rules needs to apply. And that means that, for example, we ask intermediaries to assess the knowledge of their clients. We ask intermediaries to conduct sufficient due diligence on the crypto assets that are listed on their platforms. All of these we started out based on the same mission, being investor protection. So I guess our aim here, and what we want to emphasize, that regulations we do not think is necessarily slows innovation, but what we do is that we try to make sure that these innovations land safely and become widely adopted as well.
I think besides the regulations of, I mean, in terms of protection, investor protection, I have a questions to ask Abel about the infrastructure company. I think one of the way for protecting our investors specifically is including the digital wallets or some of the tools in our area. So how we can, I think in terms of a infrastructure company, how we can ensure, I mean, the KYC, AML, something like this kind of tools to make it to in the, I mean, the financial tools or in the wallets to make sure all the investor protection in terms of infrastructure.
Yeah, it's a really good question, and it's an ongoing improvement by, the knowledge base that needs to be built up among users. It needs to be, from the infrastructure side, a continuous improvement and reinvestment on what we do. And then there's the whole thing, right, around travel rule, KYT, AML, and there's no perfect answer to that as well, right? Different jurisdictions and different countries have taken different approaches to how they want to govern and set parameters and guardrails around this. And I think from our point of view, depending on the jurisdiction in which we're licensed, in which we're regulated in, we just have to comply, right? And we have to be the first to put our hands up to say, even if we don't have the answer for you today, we'll do our best to get there, right? Because it's also in our interest to protect our business, our reputation, and subsequently our clients and their end users as well. If we fail at our level, then everything else downstream is not going to work as well. And that's going to be a big issue for all of us involved.
Thank you. I think our panel and the summit today, I think we are fostering the development of Hong Kong and or even all the crypto and Bitcoin development all over the world. So I want to make the questions more open. I think for the further development, no matter it's for Bitcoin and digital access in the coming future, I think a lot of participants and Bitcoin holders today. So I want you guys to, for example, have any few words to share with our guests to see whether you can have some of the insights in the coming future.
I'll go ahead and start first. I think the future is, right now you guys are seeing so many digital asset treasuries company. I think that's only the beginning of emerging traditional finance or capital markets into crypto. This year we really seen it. And I think right now we're only seeing stock prices go up, but I think what I will be seeing next year is these digital asset treasuries company with their huge treasuries, they're going to do much more with it. Not only, trying to accumulate the tokens as well, but I think they're going to use that tokens to build the ecosystem, which the listed company is supposed to do, right? I think not only trying to accumulate a massive amount of it, but I think this year everybody's going for the race of trying to accumulate more tokens in their treasury company. But But looking forward into that, I think is to go back to the very basic, is how we are supposed to develop a healthy ecosystem. Not only try to accumulate the tokens, but how to use that into incubating the ecosystem as well. So I think these big capital companies going forward should be thinking about already going forward to see how to deploy the treasuries that they have to incubate the ecosystem, so the ecosystem actually grow bigger. If this is just a purely company that accumulate crypto, then I think that defeats the purpose of building a very healthy ecosystem. So looking forward, I think that's actually healthy, because we've seen that institutional market come in because of these digital treasuries company. But I think going forward, they will use that as a gateway to talk to these institutional and make them understand that it's far beyond only speculative. We can build a big ecosystem around Bitcoin or crypto asset as well.
Yep, I think it's a very similar theme as well that we see. A lot of it is to do and confirm the fact and the reality that institutions are here. They are coming. And we've been very blessed over the last 9 to 10 months now with the wave of changes that we've seen in the US and the spillover effects of those changes now coming to this part of the world as well. And with those spillover effects, a lot of it is coming to do with innovation that comes along with that clarity as well. Innovation in the form of a range of digital asset treasury plays. I think that's only a good thing for the industry. Sure, some people may say, there's a bit too much hype, there's a bit too much going on over here, it could get frothy quite soon, potentially. But with a lot of these things in our industry, without innovating and having the first iteration, the second iteration, you never know where that's going to go. But one thing for sure is that with the institutions coming, their deep pool of capital being allocated to the business, the innovation taking place, things will get very interesting. And I'm very excited to see what's going to happen over the next 3 to 5 years.
And on the regulatory front, I think what we've been seeing in SFC is there's been a convergence globally in terms of regulations. We see many major jurisdictions moving from a more light touch regime to a more investor protection oriented and centric regime. And Hong Kong and SFC in particular is playing a key role in this change as well. We've been actively participating in many different multilateral organizations and bilateral communications with different regulators. What Hong Kong and SFC is trying to do is that we're not just a participant in the global change and the global regulations, but we're an active player and an active writer of the global rulebook.
I think you can see the Hong Kong environment and the Hong Kong policy is proactively, progressively developed in the coming future, and I think it will be more than better than nowadays. So I think the time is running out. So I think thank you for Bitcoin Asia having us, and thanks for joining us this panel. Hope you guys enjoy Hong Kong, and welcome to Hong Kong again. Thank you very much.
Thank you.
Thank you.
I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal: increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up. And our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from MetaPlanet, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
We're back at the Bitcoin Magazine news desk presented by MetaPlanet. You just heard a deep dive into Bitcoin adoption in Hong Kong. Over 10 ETFs active in the market. The Boya Bitcoin Treasury Company climbing up the leaderboard. The message, Hong Kong is open for business. Here to unpack everything that's going on, we've got a packed panel. Frank Corva, Senior White House Correspondent at Bitcoin Magazine. Amanda Fabiano, COO of the Nakamoto Bitcoin Treasury Company. And Micah Jarmus, CEO of Lightning Ventures. The message very much on that panel that institutional investors' sentiment on Bitcoin has changed. This is now an accepted asset. It's part of the marketplace, and it's becoming part of portfolios. Amanda, your take on what barriers are left? Is Bitcoin mainstream now in the institutional world?
Yeah, it's kind of bizarre to think about it, right? Like if you think about going back to when you first started in Bitcoin and you would have a conversation with someone that had a fund or a family office, or even like I was at Fidelity and I would say things and people would think that I was insane, right? And like now you have people that are like constantly trying to think about new products that they can bring to market surrounded by Bitcoin or wrapped in like some type of Bitcoin exposure. It's pretty cool and surreal to see how far it's come. I just like wonder how far it will go. Like what other products will people create? Like where else in the world will we see some like hubs kind of popping up? And that's something that at Nakamoto we're kind of looking at, right? Like where are the hubs, where are the groups around the world that are doing something pretty cool?
Well, the big question I think is, what are the next dominoes to fall? We've seen BlackRock come out now, a top holder of Bitcoin, of course, Strategy now amassing, its portion, the strategic reserve of the United States, now holding Bitcoin, not selling Bitcoin. So, Mike, who are the next group within Wall Street or globally that you think are going to become part of this adoption story?
Well, gosh darn it. Let's think. Can I use Bitcoin to pay for my Uber right now? Can I use it? I mean, without buying some clever gift cards, right?
Right.
Can I log into the Bank of America account and actually buy Bitcoin? Yeah, I could have a Merrill Lynch account, and then I got an ETF and some guy that I got to talk to, right? But we haven't seen that level, right? And that's what I think is coming, okay? And with the Airbnbs of the world, when is it going to happen where it's not like some gift card circumvented, yada, 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 but you can actually, Vanguard, still holding out. Vanguard is holding out for freaking all eternity to add the damn thing.
Well, thanks for mentioning Vanguard. I think they were sort of chief in my mind. Who are the new obstacles and opponents for Bitcoin, or is the reality now that Bitcoin is accepted amongst institutions, Frank?
Yeah, I'm going to quote Odell again. I think you can't ban Bitcoin from your institution. You could ban yourself from Bitcoin, and I think the people who keep doing that are sort of feeling the pain of it. Let's talk about Sherrod Brown. Sherrod Brown coming out this week. Now, this was someone who was very much a part of Elizabeth Warren's anti-crypto army, coming out saying, oh, did I say that about Bitcoin and crypto? Actually, I didn't really mean that. And because you saw what happens. The voters turned against him. He lost his Senate seat in Ohio. So I think, but to go back to Mike's point, we need to see Bitcoin integrated into everyday apps, whether it's Uber, whatever it is that you're using, just as a payment option, just as another option. So you want to pay in fiat, you want to pay in Bitcoin, whatever it is. And to that point, we need to see things like a de minimis tax exemption, which Trump himself, President Trump, has talked about in the press room, talking about a $600 value de minimis exemption. So I think we need to see good policy like that, and then we'll see more integration into everyday apps.
Well, of course, there is a convergence going on. We're hearing from the E-Trades of the world talking about coming out and adding Bitcoin. So maybe, Amanda, over to you. When do we see this integration when you start being able to log into banks and see a Bitcoin? Do we need more regulation? Has that been solved? Or is it just a question of this being added at this point?
I think, we live a little bit in a bubble where Bitcoin is all of our world, right? Mm-hmm. So we understand it so much, and we know that it's not as difficult to use as people, see it. But even when you talk about Nostr earlier, I'm like, I wonder, I don't have a Nostr. I'm like, how hard is it to set up? I've heard it was kind of technically complicated. And to your point, it has to be easy to use in order to make it usable, right? As an actual medium of exchange. So I don't know. I think it's great that we're getting all of this institutional adoption. I think that we need to have tools that make Bitcoin more usable and easy to use. And I think there are some out there. But I don't know, my mom knows what Bitcoin is, but I don't think she'll ever, unless it's easy to use, will she use it? Like Venmo is really easy to use, right? Like people will use that all the time.
I think to that point, sometimes people look at the competition, they think about like one Bitcoin app competing against another Bitcoin app, but that's not the right framing, right? It's like, it's really, is this Lightning app as good as Venmo? Is it as easy to use as Venmo? I think that's a really important point.
Well, I think we're hinting at a divide currently in the space between this idea of Bitcoin as everyday money or Bitcoin as capital. And so maybe, Frank, over to you. It sounds like you're on the team of we need Bitcoin to be everyday money.
I think Bitcoin is both. I think if you want to use it as capital for your company, that's totally fine. And there are people around the world that we know need Bitcoin as everyday money. We talk about activists, like people who work with Alexei Navalny or other, prominent politicians who have been debanked. Debanking wasn't just a thing that happened to crypto companies in the United States. This is something that activists around the world deal with on a day-to-day basis, or other people around the world who don't have access to banks. They can't use a bank account because they don't have enough money to have a minimum balance. Bitcoin doesn't charge you a fee for having only a small amount of sats or something along those lines. So I think that it's both. If we want to use it for a treasury company, fantastic. If you want to use it in a circular economy somewhere in Southeast Asia or Latin America, fantastic. It's freedom money, it's freedom capital, however you want to however you want to think about it in your mind.
Isn't that like the beauty of Bitcoin, though?
Yes, 100%.
You get to use it how you want it.
That's right.
You get to store it how you want it.
Yes.
On your risk level.
That's it.
You can do what you want with it. You can have something that is like you are custodying it, or you can have like a full-on custodian.
And we
You can use it as money. You could use it as a bank account.
Well, I think one of the things I was hinting at in the question, right, is we saw BlackRock come out. It's only 2 years ago, 2024, where BlackRock entered the market. We've seen the success they've had. Larry Fink becoming a spokesperson. We really haven't seen that again from another institution in terms of someone coming out, embracing it, building a market-leading product, and then becoming an evangelist, right? Larry Fink coming out, speaking very openly that Bitcoin, could compete on the global currency stage, comparing it to gold. So the question I think here is, what is the next institution, or what's preventing more institutions from taking that kind of approach, Mike?
Well, first off, you still have not, there's the regulatory hurdles, right? Nobody wants to be first. I mean, Jack Dorsey was talking about Cash App payments or Square payments for, 5 years or so, right? And we're just starting to see that now to the millions and millions and millions of people that are going to be able to add that. That's a flip the switch overnight sort of thing. In terms of the institutions, it's no surprise. I mean, it's got to be Fidelity. Fidelity's going to lead the way. Fidelity is going to be deposit Bitcoin. It's going to be shown there. It's going to actually be an asset that you can collateralize and borrow against, and in your margin account. That doesn't exist anywhere. I think Fidelity is going to lead the charge on that. But you also think about like using Bitcoin. None of these things are going to happen. You're never going to pull out your Fidelity app for the Lightning beer tap, right? You're always going to have the pocket money in the other apps. It's still going to be an ecosystem. You're always going to have your Bolt cards and everything else, but Bitcoin is designed as the pristine collateral, okay? And the fact that like I can go get a signature loan based on my credit score at like a normal interest rate, but I'm going to over collateralize and send a bunch of Bitcoin in to pay like 13.5%. It makes no sense. It makes no sense right now that we have this perfect pristine collateral asset, and the interest rates and the lending and those type of things, it just hasn't happened. But I think Fidelity is going to lead the charge.
Well, appreciate everyone watching on YouTube and Rumble. Zooming out a little bit, really the question I think that I was asking was, what is preventing adoption now at this moment, right? I think if we've removed some barriers, what barriers remain? So Amanda, maybe the question over to you, what is in Bitcoin's way from becoming, even more widely used than it is at this point?
Isn't it widely used though right now?
It is.
We have treasury companies in a lot of markets. We have public companies that have some sort of Bitcoin, like there's lots of Bitcoin mining companies, right? You have lots of private companies, you have lots of private funds. You have, the president talking about it. Like, haven't we kind of done it?
I think there might be also, maybe there's a slightly, I think the points you're making are really important, but I think also volatility is still a thing for most people. When we're measuring Bitcoin in fiat terms, Bitcoin going from 125,000 to 110,000, while that's not like the sorts of moves we used to see, 30% downtrends during bull markets and all this, or totals of 80 to 90% downtrends, this is still very volatile compared to most assets out there. So I think it's hard for most people still to look at it as money because most money isn't that volatile.
Yeah, we're used to it.
Exactly.
Yeah.
We're just sort of psychopaths that have sort of like, our nervous systems have adjusted to this being our reality. So, yeah.
Well, flipping the topic here, we're going to talk about something that has been in the news, but maybe not so much discussed in Bitcoin. This idea that there's record amounts of Bitcoin being sold by some of the OGs, adopters from 2009 to 11. We saw an 80,000 Bitcoin sale earlier this summer at Galaxy. This is a early last week. We saw 20,000 Bitcoin be converted over to Ethereum, and so maybe we are seeing some of the people who have been with Bitcoin the longest say, you know, maybe we have reached mainstream adoption. Maybe we have succeeded. It's time to cash out. Frank, what's your opinion of these market
Pete,
dynamics?
I'm gonna bounce this one right back to you. Pete Rizzo, the Bitcoin historian on X. Pete, you know this stuff really well. So a lot of these people who got into Bitcoin early, 2010, getting Bitcoin for maybe even in some cases a fraction of a cent if they were some of the earliest people, or if they were mining it, buying it for even under $1, right? These people are richer than they ever imagined being, right? So on some level, you have to imagine that this isn't just ideology for them. Like, they don't need to have this much Bitcoin. Maybe they want to go and buy property. Maybe they want to go and do philanthropy. Who knows what they want to do? But I want to bounce it over to you. What do you think they're doing? What's going through their minds?
Well, yeah, I think, you know, you hit the nail on the head in terms of, you know, how much more success can Bitcoin have. You know, some of these early adopters, you have to remember, you know, they're mining this on their computer for essentially free, right? Yes. You know, so this person who mined 80,000 Bitcoin themselves, you know, they may have paid $0 for that amount of money. And I think that in some cases, you know, I've spoken to a lot of and interviewed these, people who were part of the space back in the day. You know, they may feel like at this point that, you know, it's hard for them to conceive having more wealth than they currently have. And they're starting to ask questions about how they make a broader impact in the world, right? To think about how can they fund things that are aligned to their ethos and personal missions, and how can they actually build a better world with some of the value they created. So, you know, this 80,000 Bitcoin whale, you know, we don't know that they sold all their Bitcoin, right? They could have a secret stash somewhere and maybe, you know, using that part of it for something else. But I think, you know, we're going to see Bitcoin OGs, you know, come out and reshape the world, right? There is a huge capital redistribution happening.
Yes.
There are many kind of old-time hodlers who are, you know, very ideological, right? They want to see Bitcoin change the world.
Yep.
I think we're going to see more investments in those types of projects over time, and so I would imagine that that story will continue. But also, yes, there are some, you know, people who are comfortable saying, you know, hey, I've made $5 billion. You know, maybe I can sell a few Bitcoin. I think what's more interesting is the fact that this being warped and sort of weaponized against Bitcoin, right? So you're seeing a lot of maybe these kind of proponents of these Ethereum treasury companies and sort of crypto treasury companies say, hey, you know, these old-time Bitcoiners, they no longer believe. It's time for you to abandon Bitcoin and sell your stash as well. So I'm curious what people think about the market signal that this sends. Should people still be confident even though people are selling their Bitcoin?
I see Amanda smiling there.
My smirk tells it all. Like, we called ourselves psychopaths, but if you are selling Bitcoin for ETH, like, I don't know what to call you, because that is, like, insane thing.
Those are fighting words.
They are fighting words, but I've always been very focused on Bitcoin. I see the long-term value. I understand that people have alternatives, but we've seen this cycle happen before, and Bitcoiners always end up winning.
Yeah, it's fair.
But maybe, Mike, we know that your ethos is more towards the grassroots part of the community. Do you think that there could be a dissatisfaction with Bitcoin's trajectory from sort of the group that was more ideological, you know, came from those cypherpunk roots of Bitcoin as an anti-establishment technology that's now establishment?
Well, there's always fighting, right? there's always something to argue about. But you just think about, like, what would you do, right? And that was a tremendous amount. To your point, you have this.
I don't think I would have sold it all at once.
Yeah, I don't think he did. I think I read that they had like 96,000, and this was maybe 20 up to 96,000. Really? But, you know, it's a tremendous amount of money, you know, and you had to have been a nut job back in 2010 to mine it all anyway. Like, he's already a nut. So what can he do with this money now, right? Now, rotating into ETH, boy, I mean, that's really, I don't even know how to
different type of mental illness.
Yeah, okay, there you go. Maybe he lost it, you know, maybe went full on. No, but look, it's a necessary thing that has to happen. It has to be distributed, and you can't blame people that are selling. And I think that we're going to see that until it is.
Well, I think one of the amazing things is just how liquid the marketplace is. I mean, if you're thinking about, you know, I think about my, you know, work kind of in the archives and history of Bitcoin. You know, there's this early mythic event called the Bear Whale, right? This early participant in Bitcoin selling 30,000 Bitcoin. This was an event. People wrote songs. They made art about this. You know, it lasted for years, this idea that the market overcame such an obstacle. Now you have somebody who just sells 80,000 Bitcoin in a single day. the market absorbs it, moves on. We're still at or near all-time highs, and this is really a testament to how deep and liquid the market is at this point.
I think Galaxy did a good job at selling that too, right? Like they did it responsibly, which is nice to see.
How did it work, if you don't mind me explaining?
I actually have no idea. It didn't move the market in a way that it could have, right? And so they obviously were responsible in how they did it. I mean,
right,
they have
and
like
maybe to stick with that, you were able to liquidate $4 billion worth of Bitcoin without the price moving at all.
Yeah, I mean, and I think that is like proper risk management on a trading desk.
Yes, agreed. Yeah, the team at Galaxy, shout out to Alex Thorne, Mike Novogratz,
We love you, Alex.
Yeah, Bitcoin OGs, and it was amazing to see, but also we've seen this also, like I mentioned it earlier, the German government selling off 50,000 Bitcoin, and at some point, we don't know what was happening under the Biden administration, but at some point it seemed that the U.S. probably had closer to 200,000 Bitcoin. Now, based on the FOIA request, we see that the Marshal is only holding 28,000. Maybe we have some Bitcoin being held in other areas of the U.S. government. We don't know yet. But if they did kind of quietly sell 170,000 Bitcoin over whatever time frame, again, that's an amazing amount of Bitcoin for the market to absorb. And, we're still here trading just a few percentage points under the all-time highs. So.
Well, the Bitcoin marketplace alive and well here in Hong Kong. There's so much more in store. We want you to stay tuned here on Rumble, YouTube, and X. We'll be right back after these messages with more analysis, news, and content.
I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal: increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up. And our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from MetaPlanet, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
Bitcoin Magazine news desk presented by MetaPlanet. Bitcoin invading balance sheets, but also the world of boxing. Here with a special announcement, we've got Heather Richmond of Bitcoin Boxing, Maurice Lee, professional boxer and businessman. And Heather, I'm going to turn it over to you to introduce Bitcoin Boxing.
Yeah, awesome. Well, thank you for having us here today. Like, it's kind of crazy because you look around and the audience is absolutely wild. It's so great to see so many Bitcoin faces in here and familiar faces in the industry. And we're really excited because today we're actually doing the announce of Bitcoin Boxing. We are the first Bitcoin Boxing promotion organization. We're excited because this is a spot where fans can actually participate and purchase tickets in Bitcoin and merchandise in Bitcoin. Fighters get paid in Bitcoin. And we're really building this around that culture and community of Bitcoin, right? So our mission is to extend the energy of Bitcoin at these conferences, right? To have something very cool to kind of bring people together. And I think really also extend that to people in the boxing community where we have over 400 million boxing fans worldwide. Right? So very cool that we have the opportunity to be here, bring a lot of that boxing culture in, and essentially turn these boxing fans into Bitcoin holders, right?
Well, Heather, Maurice, I got to say, you know, how did you get the Bitcoin bug and what inspired this idea?
Oh my gosh, that's a big one.
That's a long story. I would say our partners, Bitcoin Arabia, it started in Las Vegas for Bitcoin 2025, and I took the orange pill.
Yeah, which is fair enough to say, and it's amazing. Bitcoin Arabia kind of like thrust us into this world. We've both have been business, you know, individuals for a long time. You know, I've actually a big supporter of Bitcoin, but really getting involved in the community, I have to say, was like with our partners, and here we are now, and I'm like so grateful to be on this stage with you all.
Yeah, can I ask you a question if you don't mind?
Yeah.
So I'm curious. I love this idea. And we're seeing a lot of professional athletes come along. We have Okung in the NFL and all this sort of trend of professional athletes coming to Bitcoin. What sorts of questions are you getting asked when with the boxing community, whether it's the fans from the community or other professional athletes that are maybe thinking about taking their salary in Bitcoin? What sorts of concerns do they raise? What sorts of questions do they have?
Yeah, that's a great question. I'd actually leave that over to Maurice, right? As our in-house partner and professional boxer, I think he'd be a good one to answer that.
Yeah, I think there's a lot of fighters that just don't have the knowledge of what Bitcoin actually is. And bridging that gap is really what our main focus is. And you get a lot of fighters retire very wealthy and lose it all.
Is it because are they saving in fiat? They're not preserving their wealth with investments or something?
Yeah, just not preserving, not putting their money in secure places, bad investments.
Okay. Understood. Yeah. That's inspiring to hear. Yeah.
And I will tell you, we've seen a lot of excitement around it, right? You have some of these large professional athletes, even outside of the boxing world, but even in the football world. I mean, I believe we have one of the biggest who's here today at the conference who's been taking his pay in Bitcoin. So I think now that we're seeing more of these professional athletes, just more society as a whole adopting what Bitcoin is and really like taking hold of it. We have a lot of excited boxers and professionals in this industry that are like, I'm in, right? It's clear that like Bitcoin is not going anywhere and Bitcoin is here to stay. So I think there's a lot of excitement and enthusiasm around it. So we're just happy to be a part of that.
So maybe take us and set up the stage. You know, December, Abu Dhabi. How's this going to work? This is going to be a tournament of sorts. Is there a main prize? Is each boxer sort of competing for a prize? What is the competition here and what's at stake?
Yeah, it's going to be a traditional boxing event. There's going to be a main event, co-main event, and probably like 8 to 9 undercard fights. Every fight, there will be a mixture of different fighters, but every fight will be exciting, and it's to the, you know, the knockout, the decision. Tournament-wise, it would not be a tournament for this. That's a good idea. You might have to take that.
I'm just thinking of a group of people, you know, maybe we can have one today. If you want to have people fight for a Bitcoin, you know, we can sign
me up. Where do I sign up?
Yeah, 100%. Hey, and I want to pose this out to anybody who's in that Bitcoin community. If you are somebody who's a big Bitcoin holder and you feel the fire and fury and you want to get yourself involved in one of these fights, we would love to hear from you. So make sure you reach out to us, because I think that there are people who are going to watch us right now who maybe have been amateur fighters or big names. I mean, I don't want to throw out some big names, but even we want to get like some of the larger names in the ring. You just want to have a little extra fun and do some wagers. I think that that would be awesome. So for those of you in the Bitcoin world, we call all awesome Bitcoiners to please apply
for
Bitcoin
tell them
Boxing.
where? Let them know. Please know. Where should they do that? Where should they reach out?
Yeah, awesome. So you can actually go to bitcoinboxing.io. You can go to our social media accounts, Bitcoin Boxing on Instagram. Same thing with X. We have Bitcoin Boxing _. But you can pretty much, if you put in Bitcoin Boxing, you are going to find us. and our team is really awesome. I mean, everybody's on top of it, and we're here to answer. As you can see, we've got an amazing team behind us. I don't know if you guys can do a wide angle on this. See these amazing ladies joining us. We are like so grateful. And these are our ring girls that are here representing, so we want to thank these amazing ladies as well.
Love it.
Well, certainly it'll be something that we've never seen before at a Bitcoin conference, a live boxing event. So everyone can go get more information at bitcoinmagazine.com. Check out the events. You know, I don't think I'll be participating.
But you're coming, right? Can I count on you to be there?
A spectator.
If I count on you, will be okay.
Been to a fight?
I'm sorry?
Have you been to a boxing
No, I've never been to a boxing.
We got to change that. You got to be there.
Yeah.
I can tell you from being a professional fighter myself, I just fought at the Mandalay Bay in March.
Okay.
I fought in Arizona maybe a month ago. From working with Floyd Mayweather, me being his main sparring partner for the Pacquiao
a Bitcoin conference speaker the past. Yeah.
Exactly, and then working with Manny Pacquiao, being his main sparring partner, fighting all around the world. So it's an adrenaline, it's a fun that you can't find anywhere else, and we're definitely going to get you there.
Love it.
We got ringside. You guys have ringside.
He's like, you're not going to force me there, are you?
Yeah.
If you guys are short on announcers, you know, count us in. So we're
you know what?
we're sold.
Yeah, we're definitely going to take that. So, because we are looking for Bitcoiners.
Love it.
So
we're ready to go. Ready to
Yeah,
go.
100%.
I'll work on my boxing jargon, but yeah, count me in. We're looking forward to it.
Hey, listen, we would love that. And honestly, you guys are rock stars, and it's so great to be up here on the Bitcoin stage and share all of this with the Bitcoin community. So big shout out to everybody who's watching us here today and to all the people that we've been working with and will working with. So lots of gratitude, and we will see you in December.
Yeah, the big fight, of course, much more to come. You can go and find more online at bitcoinmagazine.com. Learn more about the events in Abu Dhabi. Bitcoin Mania coming up, but of course, Hong Kong, so much more to go today. Keep it tuned on X, Rumble, and YouTube. We'll be right back after these messages.
Today with you, and we're going to talk about the last million Bitcoin to be mined. As many of you know, the maximum Bitcoin ever will be 21 million. So there's 1 million left to get, to stack. 100 trillion sats to fight for over the next century. America is stacking. The supply is getting tight. We know that Asia already moves the world's goods. And if Asia stacks now, it can decide how to move the world's money. The last million will crown the leaders. So, I'm JP, CEO and co-founder of Exodus. We have 6.5 million customers worldwide that trust our software to keep their crypto safe. And we started in 2015 with the belief that crypto should be easy to use. No complexities. And I'm here to tell you that you can just do things. Yes, you don't need permission and you don't need to wait. History is moving right now, and you can write it. I remember about a year ago, I was at a conference much like this one in Nashville. And President Trump came and spoke to us, and this was historic for a president to come and tell the story and embrace a vision about crypto. $260 billion worth of stable coins are in issuance. You've heard about the Genius Act. Yes, the way for issuers of stablecoins in America to create stablecoins. There are $110 billion worth of ETFs. The old system didn't evolve. It's being replaced in less than 12 months. So, back in New York, back in May in 2024, in New York City, we were invited to go public. We flew 130 friends and family out to celebrate the big day. Little did we know that the day before, we would be told that we could not list the next day and we could not go public. But we persevered. We're the first crypto company to have our common stock tokenized on a blockchain. And sometimes the world just needs to catch up to innovation. That's what's possible for every single builder in this room. And so, in January 2025, we were finally able to ring the bell. Look, we're not from Wall Street. Exodus was born in Nebraska, in the middle of the United States. You heard of Nebraska? Do you know where Nebraska is? In the middle of the United States, surrounded by corn and cows everywhere. You're driving, cows just everywhere. No, I'm kidding about that. But if we can do it, build a company to stack sats, imagine what you can do from Hong Kong, Tokyo, or Singapore. We built, we persisted, and we pushed forward. Who here has heard of a company, BitPlanet? Yes, BitPlanet. Of course you've heard of it. Did you know, because they're stacking so much sats, they're acquiring so much Bitcoin, that they are trading in a daily volume often more than Toyota or Sony? That's impressive. So you have Strategy, Tesla, Exodus, Nakamoto. Nearly 1 million Bitcoin in corporate treasuries. Some countries, like El Salvador, are making illegal tender. Bhutan is stacking sats. So the smart money isn't debating, it's stacking. So at Exodus, we are a company built on Bitcoin. We have top 30 treasury, and we built a profitable business. We haven't borrowed billions. We are stacking sats because we earn our revenue in Bitcoin. And did you know that to work at Exodus, you have to receive your salary in Bitcoin? Yes, that's right. We believe in it that much that we require all 225 team members over the world to take a salary in Bitcoin. And as I mentioned, we even have tokenized our equity on the blockchain. And someday, there's going to be a company that issues a Bitcoin dividend. Wouldn't that be cool to see? Have a company issue a Bitcoin dividend. Maybe it'll be one of you. Maybe it'll be us. I don't know. But we are in the age of doing. US policy has shifted in the last 12 months, and that's how fast things change. So don't wait. Don't ask for permission. Don't accept the status quo. Again, you can just do things. And when you do, the world moves with you. The age of watching is over. This is the age of doing. Remember, 1 million Bitcoin left. Talking about corporate treasuries and the importance of companies all over the world stacking sats. Last night I had dinner with a number of founders that are embracing the Bitcoin treasury strategy. They're embracing sound money. So we need Asia to act quickly. You can stack sats. Institutional adoption is accelerating faster than ever. So if Bitcoin is the vault to protect your wealth, stablecoins become the payment rails. And did you know that stablecoins have settled more value than Visa last year, which is incredible. But what not a lot of people are thinking about is that in 5 years from now, people all over the world will be using apps to interface and use stablecoins, whether it's the digital yen, digital dollar, or what have you. And when you use this app, it's going to be a wallet. And the wallet gives you the potential to integrate with the Bitcoin network. So stablecoins become the Trojan horse for Bitcoin adoption. So it's great to see that Hong Kong has created the licensing to issue stablecoins. Singapore and Japan as well. So these aren't just plans, this is happening today. So the question isn't if Asia is in motion, it's will Asia be the leader? So this is a story, Exodus is just one story. The next wave can be written here in Asia. And maybe the next Exodus is here in this room. One of you could be building a company that defines the next decade of finance. Asia already moves the world's goods. Now it can decide how the world moves its money. Shape the future or be shaped by it. History doesn't wait, and neither should you. Stack sats, reject the status quo, build something that matters. If Exodus can do it from the heart of Nebraska, imagine what Asia could do from the heart of Asia. Own the last million, and you own the future. Thank you, Bitcoin Asia.
Welcome back to the Bitcoin Magazine News Desk presented by MetaPlanet. We're here at Bitcoin Asia 2025. I'm Frank Corvo, the political correspondent for Bitcoin Magazine, joined by none other than Will Kazarin, founder of Damus, a Nostr client. Now, we're talking about Nostr, we're talking about clients. This language might confuse people, so what we're here to do is demystify Nostr a bit. But first, before we actually get to that, Will, you spoke on the main stage earlier today. You had a big announcement to make. Do you want to reiterate that a bit for everybody back home here?
Sure, yeah, we've always been on the Apple App Store for the longest time, for a couple of years now, but now we're finally on Android. Just one of the most common things is when Android, so we have that available now, so go to damus.io/Android and try it out.
Okay, cool. Damus. So Damus is, for all intents and purposes, it's an app. We just talked about it. It's on Android, but technically it's this Nostr client, all this kind of stuff. Who should be thinking about using Damus? Like, let's think about this beyond the Nostr Bitcoin world, right? Should creators, should artists, should musicians, who does Damus benefit?
Yeah, we always say if you want to actually own a piece of cyberspace and not have other people dictate what you're allowed to say or what you're allowed to say, and if you want to actually earn money, if you want to earn Bitcoin on your post, Nostr is currently the best place to do that. And we see a lot of censorship online, and it's really risky to run your business and all of a sudden you get taken offline. So Nostr, you can just set up your business and you don't have to worry about that kind of stuff.
Okay, let's talk about setting it up. So we had someone on the desk, Amanda Fabiano was here earlier, said this is an old school Bitcoiner, said, I'm a little bit nervous. How does this Nostr thing work? How easy is it to set up a Damus account?
It's funny because there's a lot of people come up to me at conferences and they're like, oh, it's too intimidating. And I'll just open their phone and get them to download Damus. And they press one button and you're in the app. So there's really no excuse. Like we have it. It's a lot easier than you don't have to put in your email. You don't have to put in your identity. You just press one button, create a key, and then you're good to go.
Appreciate that. All right, ladies and gentlemen, we're heading back to the Nakamoto stage. We're going to be back here with Will Kazarin, founder of Damus, right after this. But for now, over to Nakamoto. Back after this.
Good morning, everyone. I'm Ken. I'm the founder of Xverse. I've always been fascinated by this city and how connected it is to the world. As a global hub, the spirit of the city is perfectly captured by its airport. It's a master planned system, not just designed for departures and arrivals. It forms the core of a multimodal network. And as you land, you're presented with many options to take you to your next destination. The airport express, the ferries, the buses. It's a well-designed, interconnected system that works. Today, the digital economy built on Bitcoin needs the same kind of thoughtful and ambitious design. I'll explain how shortly. First, let's look at the current state. So right now, we're seeing a wave of institutional adoption. And the stats are pretty impressive so far. $152 billion in ETF total net assets in the US alone. That's more than 6.5% of the total Bitcoin market cap. But there's a trade-off. We're giving up control for convenience. You don't really own the Bitcoin. It's like being sold a ticket, but not actually being able to use it or put it to work. So we have our digital gold, but we risk getting it stuck. But hope is not lost. There are promising signs. A shift is happening from centralized to decentralized. Bitcoin balance on centralized exchanges is at an all-time low, 11%. And the major exchanges have all launched self-custodial Web3 wallets, marking a shift back towards the Bitcoin ethos, decentralized and trustless. There's in fact a powerful new wave that is coming. This new wave is about allocating a percentage of Bitcoin on-chain. DeFi Llama reported $8 billion in TVL in Bitcoin DeFi and staking earlier this week. That's up 1,200% from a year ago. We're still early, so retail really has an opportunity here to front-run the institutions. In a market without the guarantees of price appreciation, sustainable yield trumps all. At $8 billion, it's not the largest, but it's larger in TVL than many other ecosystems. How do we take this further? At Xverse, we've been pioneers in this space. Anyone in the audience hold ordinals or runes? Were you lucky enough to inscribe the first 100K? Back when you had to do it with a full node and the command line? Then Xverse changed the game when it comes to user experience. What about runes? Did you receive your dog on Xverse? We were the first wallet to support protocols on L1 like ordinals and runes. And we gave millions of users a ticket to new cultural communities. At the same time, we helped create wealth for many of the early adopters. If you were simply an early ordinals holder, you would have received airdrops worth north of $10,000. The simple fact is that L1 protocols changed the way we build on Bitcoin. It pushed the Bitcoin blockchain to its limits. and spawned a new wave of innovation, new meta protocols, and L2s. Following the analogy from earlier, having all use cases compete for space on the base layer of Bitcoin is like using slow cargo ships for people, mail, and goods. That might have been sufficient for a past age, but we have many choices now. Our thesis at Xverse is that different use cases require different technology. You wouldn't take the plane to Shenzhen from here. You would take the train. But you wouldn't take the train to New York City. For Bitcoin DeFi to thrive, we need layers, and not just one. As I alluded to earlier, we need a multimodal system with Bitcoin as the stable foundation. Remember when every other person was building a Bitcoin L2? We've been working closely with teams to curate and carefully choose the L2s to support. We supported Stacks from the beginning for its smart contracts and self-custody Bitcoin on an L2 without requiring changes to Bitcoin itself. We added support for Starknet recently for its smart contract platform that can trustlessly settle to Bitcoin via zero-knowledge proofs. And this brings us to the elephant in the room. Besides financialization, what about the peer-to-peer origins of Bitcoin? We've always been focused on staying true to the original ethos of Bitcoin. Bitcoin DeFi is the future, and a simple, fast, scalable peer-to-peer payment system is still needed. This is why Xverse is proud to announce the integration of a new L2 today.
With the light.
So why Spark? It's a Bitcoin L2 that enables instant self-custodial payments in Bitcoin or stablecoins, and is compatible with Lightning. Xverse will be the leading Bitcoin wallet to support Spark. You can try out today on Xverse extension and soon on mobile. Just like Bitcoin's origin story and the first wave of financialization, you'll miss out if you look away. If Bitcoin's past is anything to go on, its on-chain future looks poised to explode. Thank you.
I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal, increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up. And our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from MetaPlanet, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
Bitcoin Magazine News Desk presented by MetaPlanet. We're here at Bitcoin Asia 2025. Vibes are high. Price of Bitcoin is relatively high, a little bit below all-time highs. I am Frank Korver, the political correspondent for Bitcoin Magazine, joined by Will Kazarin, founder of Damus, a Nostr client. So I want to dive in here. Let's go big overview here. Let's start with what is Nostr. Can you give us a little bit of a breakdown of what this protocol is and what it does?
Yeah, most importantly, Nostr is again, what you said, a protocol, not a platform. We're not like a siloed, centralized service. It's a technology, very much like Bitcoin's a technology. And anyone who can build on top of it, so if you're writing a Twitter app or you're writing a Substack app or any type of app, you can build on this protocol and you get decentralization and you get the ability for your posts to receive zaps in Bitcoin.
Let me stop you there if you don't mind. A zap, some new terminology for folks back home now. Some people might be watching this. We have MetaPlanet behind us. We're talking a lot about Bitcoin treasury companies these days, a lot of regulated products. I would say Nostr and the Damus vibe is something a little bit different than that, right? This is sort of on the fringes, something that's kind of punk rock. We've talked about this, and it has its own lingo, its own terminology, a zap. So what exactly is a zap, if you will?
Yeah, I mean, like if you look at the original white paper, Satoshi said, he was working on a peer-to-peer digital cash, not a peer-to-peer digital asset or anything. So we're going back to the roots, and we're trying to build the original vision from Satoshi as like a payments technology. So Zap, all a Zap is a way to see in a tangible way the fact that a Lightning payment happened. So Lightning is, again, technology, a Bitcoin technology that allows instant micropayments. And a Zap is just a way to see that on a post. So when you click on a like, instead of clicking a like on a post, you can now click a zap and you can see
both, right? You can like it, you can zap
yeah.
it. You got a lot of stuff happening on Nostr.
Absolutely.
So Zap's happening. So there's something called the value for value community being established within the Nostr space. And also, so Nostr is this protocol on which people can build all different types of apps or clients, as we referred to them. You talked about maybe a Substack type of app. That's something like maybe Yakihone. You build Damus, which I would say is maybe closest to something along the lines of Twitter, right? So a short microblogging app, if you will. This value for value community is sort of being created. What exactly is that community?
Yeah, it's a group of individuals who just like to enjoy freedom, and they also like to share Bitcoin and like give Bitcoin to other people, because we find the best way to onboard new people is to give them their first Bitcoin non-KYC free. And we've had so many experiences on the network where even someone on my team, he joined Nostr. He was not even really, he was working at Cash App and he wasn't really into Bitcoin, but he answered someone on the network and someone zapped him, and then he just instantly became a Bitcoin believer, because it becomes much more tangible when you see it on something you actually post, right? So it's a group of people who love Bitcoin, they love the original spirit of Bitcoin, and we're just trying to grow this community bigger and bigger so we can get Bitcoin, the ability to people to experience Bitcoin at a larger scale.
Amazing. I actually did an interview with Leopoldo Lopez, who is a Venezuelan opposition leader. He said one of the things that excites him most right now is not only Nostr, but this concept of zapping, so easily sending money to someone like this. Now, this is somebody who lived in a country that was cut off from the SWIFT system, lived under extreme censorship, an authoritarian regime, obviously all this stuff. Do we see a lot of those types coming to Nostr, people who understand what it is to be censored online, to have been on these platforms where they get kicked off? Maybe they don't even know why. Maybe they don't even know what rule they brought. Are those people coming over to Damus? Are they coming over to Nostr?
We want them to, but it was kind of the perfect technology for it. We would love to see more of that. We've seen a little bit of it. It's a little bit in Russia, but yeah, it's truly open to anyone in the world, and that's what's really special, is that you can just download a Nostr client in anywhere in the world and get paid. And so you don't have a lot of the friction you get from having to figure out which bank you have to use or whatnot for whatever payment technology they're using in a certain country. You can just use Bitcoin. So we'd love to see more people to join the network and do that, but it's been a slow adoption.
Okay, slow adoption. I think some people sort of feel a bit intimidated. What is Nostr, right? It's maybe easier for them to make a Facebook account, a Twitter account, whatever, or in their minds it is, let's say. So when it comes to adoption, what do you think right now is impeding it? And I'll load that question a little bit, if you will. So Nostr, maybe it's a bit more, I'll say glitchy, or it's not, so some of the apps built on top of it, because it's working in a different fashion, it's relaying information in a different way than other social media apps, maybe it's not the same fluidity as the other experiences. Do you think that's right now what's holding it back, or is it more than that?
There is a little bit of that factor, but we've made a lot of progress in that area, and these days it's pretty much just as good as Twitter or Instagram. But I think the number one issue, and ironically, is the fact that there's just too many Bitcoiners on it.
Right.
And that's
okay,
actually
yeah.
the number one complaint that people have is like, because there's so many people who love zapping, so the first thing you do is you join the network, and everyone's talking about Bitcoin, everyone's talking about zapping. It's like, what if I want to talk about homesteading or farming or
Yeah.
stuff? So actually, one of the things we've been working on recently is this idea called a follow pack. And actually, Kale, the guy who did
love
Cashew,
Kale, yeah.
he came up with this idea. He's like, let's just make follow packs, and then every whole bunch of our clients just adopted it. So now when you go on to Damus and Damus Android, you can actually choose like a whole different community to join if it's instead of just Bitcoin. So
Right.
hopefully it'll bring a lot more people on. That adds some more diversity to them.
Yeah, it's very meta, right? A lot of talking about Bitcoin, a lot of talking about Nostr on Nostr. But these follow packs are great, and I think that they're great also because Nostr is not something, or Damus, there's not necessarily an algorithm that's feeding you what you should be, what you're fed based on other things you've clicked on, much like Instagram or something like that does. Can you talk a little bit about what that experience is like? What is it like basically to have to do a little bit, seek things out a little bit more? At the same time, I get a lot of people who tell me when they're on something like Damus, they don't feel like they're being as manipulated, right? It seems like a bit more of an organic experience. Can you speak to that a little bit?
Yeah, I mean, it's a double-edged sword. We chose to have our default experience as just a reverse chronological timeline. So depending on which time of day you're looking at your feed, it could just be a bunch of nonsense and boring stuff. And so that's the downside of no algorithm, but we find that it's like a little bit more healthy at the start.
Okay.
But there's nothing saying you can't have an algorithm. In fact, a lot of clients are now giving you the option to pick which algorithms you want. And right, so if you don't like this toxic algorithm that's just showing you fight videos all day, you can then either turn it off or change your algorithm. So I think that's what Nostr is bringing to the table. And this is more of a new thing that's happening now, is being able to choose your own algorithm, just to curate the experience that you would want.
Not only choose it, build your own algorithm? Is this a possibility as well?
That's something also we're actually working on that at Damus, where you could actually eventually you'll be able to program your own algorithm and just paste some code in your client, and then boom, you can have like a custom algorithm that you've written.
Okay, very cool. In terms of creators coming over to it, one of my favorite onboarding tools now is something like Damus. So I don't even say, hey, download this Bitcoin wallet or this Lightning wallet. I say, download this thing. If you're a creator, start posting your stuff here and then watch money come in. Forget about even using the term Bitcoin. Watch some value come in for what you've created. Do you think that narrative is going to become more and more of a thing, right? And I say to people, look, if you have a huge audience on Instagram, I'm not telling you to abandon that tomorrow, right? Do your stuff on Instagram, but what is the harm of taking that same image and then posting on a Nostr app, on Damus? Is that narrative sort of beginning to take hold a bit?
We're finding people who maybe don't have an established, following on the bigger platforms, they find that they can just quickly build a following on Nostr. So maybe it's not for established creators. I think something I saw really the other day, which was really cool, is that this guy just posted some like video of him working under his truck, and he was able to, he got like $30 right away. And his complaint was that he tried to do that on YouTube, and you actually need to be an established partner before you can start earning money.
Yep.
Whereas on Nostr, you can start earning money right away. And if you post something really viral right away, you can get like $20,000. We've seen posts where they've received $20,000 on a post.
$20,000, and not sats.
No, dollars.
$20,000. Ladies and gentlemen, if that's not incentive to download Damus today and get involved, I will say I was just recently reporting on the Tornado Cash case. So for those who are unfamiliar, we have Roman Storm being persecuted. Not many people actually in the courtroom. And I was posting it on Nostr. I would say over the course of the 4 weeks of that trial, I would say it had to have been the equivalent of maybe $200 or $300 worth of sats. I'm donating half of that to the criminal defense.
That's going to be $2 million, not
$2 million
in the future,
I made,
right?
exactly, yeah. So I think that it truly is kind of a remarkable experience to have that. The other thing that I feel like it's a little bit harder, do you have any tips for maybe building an audience on Nostr? I find that it takes a little bit more time, but I'm sure some people are sort of learning how it works and sort of how to build that following. Any tips for the audience out there?
Yeah, so the number one thing is that you can't just simply hope an algorithm is going to boost your content. You can't like manipulate an algorithm to get you at the top. You actually have to interact with people, like normal things like that people are used to. And then if you start talking to people and start to build a friend group and start to build a following that way, your post will end up in more people's feeds because people are replying to you more often. So just start interacting with people, get to know people, and I find that's probably the best way to get into it.
Like it. Good advice if you're here at Bitcoin Asia. Well, you wouldn't be here if you're watching it on video, but interacting with people, a lot of that happening here at Bitcoin Asia 2025. We're about to cut to commercial break. Again, I've been here with Will Kasser and founder of Damus.
Like
Cutting over to commercial. We'll be right back after this.
Magazine News Desk presented by MetaPlanet. So much more to come. It's day one of Bitcoin Asia here in Hong Kong. We've got Mark Moss of Satsuma giving a keynote speech, and to end the day, Balaji Srinivasan, former CTO at Coinbase. When Bitcoin wins, a bright future here being discussed with everyone. Thanks for everyone tuning in on YouTube, Rumble, and X. Now we've got a panel of guests to unpack everything that's going on. We've got Mark Artemko, CEO at Ocean Mining, of course, Frank Korva, Senior White House Correspondent at Bitcoin Magazine. I want to talk now, Mark, about something that is closer to home for you. Mining around the world becoming big business, right? Humble roots here in Hong Kong and China, and become now a massive global industry where these are some of the largest companies in the world. Maybe just take us into the state of the current Bitcoin mining infrastructure.
Well, Rizzo, thanks for having me on. Bitcoin mining is a global business, as we all know. This is my first time to Hong Kong. I actually flew in on Monday and took a short train ride over to Shenzhen, and I got to experience some time over on the mainland. And I think Bitcoin mining is just, being in the U.S. and based in the U.S., we kind of live in a bit of a echo chamber over there, but globally, Bitcoin mining is thriving in Asia. It's thriving all over the world. And at Ocean, Bitcoin mining is a global enterprise, and we want to serve customers all over the world, including miners in Asia.
Well, of course, looking at the hash rate, no shortage of demand for people who want to mine Bitcoin. Frank, can you talk to the folks at home a little bit about how big the business has become?
I think it's huge. If you don't mind, Pete, I had a follow-up question for that question you just asked Mark. So, Mark, I spoke to you for, it was a few issues ago, we did the mining issue for Bitcoin Magazine. We talked about this importance of giving miners back certain power to choose their block templates. So is this something, so when you think about mining in a global sense and the role that Ocean is playing in it, how does Ocean differentiate itself from everything else that's happening in the space right now?
Like, our main differentiator is that Ocean gives power back to the miners. In a sense, over the years, the emergence of mining pools happened because miners were trying to solve for cash flow, reduce the variance. And in that process, miners outsourced the creative control of creating the blocks to the mining pools. So we sit here today and there's essentially a duopoly of control between the two largest mining pools, deciding everything that goes into the blockchain. And in our opinion, Bitcoin is not it doesn't have long-term viability if there's essentially two entities that make all the decisions.
Right. Yeah.
So our objective is put the power back in the hands of the people, back in the hands of the miners, let them decide what goes into the blockchain, let them be the direct recipients of the mining rewards when blocks are found, and I think that creates a much more viable, much more sustainable Bitcoin for the next 1,000 years.
Okay,
Yeah.
appreciate that, yeah.
Well, of course, decentralization is something that everyone here cares about. So you talked a little bit about the Ocean model, maybe for folks at home. We've talked about the scale of Bitcoin mining. A lot of developments here to decentralize Bitcoin mining. We've recently seen Block kind of come out, introduce a new Bitcoin miner. This is something that really hasn't been done or seen before, right? An American-made Bitcoin miner. We're here at this conference in Hong Kong, so a bit of a global competition now happening in this market. I was hoping you could speak to the dynamics at play there, Mark.
Yeah, I had the pleasure of attending the Proto launch event a couple of weeks ago in Georgia, and it was an amazing event, amazing product, great job by the Block and the Proto team. But what Block did is they kind of like went back to the drawing board and designed an entirely new type of machine that essentially puts the container as part of the infrastructure. So instead of replacing entire mining rigs, you actually just replace the components you need to replace. And it's a bit of a paradigm shift, and it's a step change in the technology. And I think all the manufacturers are going to adopt that because it's more efficient. When we launched Ocean, we looked at the dynamics of centralization, and we launched our pool to try to help Bitcoin survive long-term by making it more decentralized. But the biggest threat, I think, to centralization was on the hardware side. So Block is solving that, and the emergence of other good companies like BitDeer as well is providing more competition against the large company Bitmain, which makes the majority of the ASICs. So they're solving centralization on the hardware side, and Ocean is solving it on the pool side by giving miners the creative control, giving the creative control back to miners. Because in the early days of Bitcoin mining, the miners had the control, they had the say. Bitcoin was 100% censorship resistant. And as we sit here today, we're not censorship resistant. It's just that Bitcoin isn't being censored at this time because the entities that could censor it are choosing not to.
Can I ask a question, a follow-up there, if you don't
Yeah.
mind, Mark? So I think for the audience back home, I think this is probably quite interesting, but maybe a little bit difficult to wrap their heads around. So with Ocean and giving miners the power to choose their block templates, I was hoping maybe you could speak to that a little bit, because I know there's lots of people talking about what sorts of transactions should go into a block and all of this. How does giving miners the ability to choose their block template give them power back over the energy that they're putting into the system?
So the mechanism we use is a technology that we wrote called Datum, and it essentially allows miners to run a full node on their local premises. And on top of the full node, they're able to essentially run a mini Stratum server. With that full node, the miners peer to everybody else on the network. They build local mempools, they collect the transactions, and then they put in their block whatever they want to put. Suppose you were a miner and you wanted to include your transaction that you personally want to get in at 0 sats per VByte.
That sounds
You
good.
could do that in your own block if you made the block. And there's a million different ways you can slice it, but no two miners are the same, and no two block templates should look the same. So the concept of diversification is just it's kind of like really healthy, and it's at the core. And on our pool, miners we wrote the software, we launched it over a year ago. 90% of the hash rate is using Datum. This means that 90% of, or maybe it's higher now, but 90% of Ocean's blocks that we find weren't actually made by us. They were made by the miners.
Yeah.
So it's already working. It's already in the wild. And over and above all of that, miners are actually making more money. This is what they're telling us because they're in direct recipients of the block rewards. Ocean doesn't take custody of the Bitcoins when blocks are found. We simply tell each miner how much to pay each other. So we could think of it like it's a co-op of solo miners, each working directly with Bitcoin to make the system more resilient, and they're each paying each other for the proportionate proof of work that they've done.
Appreciate that overview. Thank you, Mark. Yeah.
Innovation alive and well here at Bitcoin Asia 2025. Stay tuned. There's so much more to come. We're going to take a short commercial break. We'll be right back.
I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal, increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up, and our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from MetaPlanet, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
back at the Bitcoin Magazine news desk presented by MetaPlanet. 20,000 people are pouring into the Hong Kong Convention and Exhibition Center as day one heats up. Still so much more to go, so many more panels, speakers, and of course much happening on this stage. We've got returning guest Frank Corva, senior White House correspondent, and Joachim Book, managing editor at Bitcoin Magazine. We're here to talk about the Lightning issue on newsstands now. The latest and greatest issue of the Bitcoin print magazine. You can go to bitcoinmagazine.com/print and find out more how to subscribe. Joachim, want to talk to you about everything that went into this issue. Frank as well. Why the Lightning issue? Why now?
Why the Lightning issue? It is the payment layer of Bitcoin. It is the thing that makes everything work. It is the thing that everyone's paying with here. We definitely have to write about it. We hadn't written about it, incredibly enough. And it was time to look back on the history of Lightning, the white paper, all the hard work that went into actually making Lightning operate as smoothly as it does. And there are a lot of people who have different opinions on how to scale it more, how to use it. Lots of interesting things to learn. We have a bunch of explainers by Shinobi in there. It's basically the only thing you need to know about Lightning. Read all of that and you have a fairly good grasp on
That's it. And
how,
he doesn't yell at you, oddly enough, in the issue, Shinobi. He just writes like a regular human being, oddly
Well, let's
enough.
talk about what's in the issue. You mentioned some explainers, so people who are coming to the Lightning Network for the first time, it's a great resource for that. What other articles, infographics, what other kind of stuff do you have in store there?
I mean, there are a couple of amazing ones, like one by Frank himself. He's talking about how people live on Bitcoin by tapping into these sort of amazing protocols that people built in Kenya and in Costa Rica and other places, where you can just pay with Lightning as a Bitcoiner, and the merchant receives fiat on the back end, and they don't even know it.
Well, they know they receive fiat, but they don't know that there's Bitcoin
They don't know that
being settled on the back end.
exactly.
Yeah, so we call them Lightning to Fiat payment apps. So Tando, shout out to Tando, shout out to Bull Bitcoin, Bitcoin Jungle, Bitspenda. Really exciting stuff because we know the world is not necessarily ready to be on a Bitcoin standard, right? We're not quite there yet, but there are some people in the world who prefer to use Bitcoin as their primary money, and apps like this are allowing people, Lightning apps like this are allowing people to do so. It was really, it was a blast to write.
Well, we're remiss not to note that there have been major announcements on the front of adoption at Bitcoin Las Vegas 2025. You know, we saw Stake and Shake come out, start accepting Lightning payments. Of course, Block now with their successful Square payment terminals, of course, getting ready this fall to start rolling that out to merchants. So, I mean, you know, does this signal that Bitcoin Magazine is bullish about the future of Bitcoin payments?
We've always been bullish on Bitcoin. There's no doubt about that, and anybody coming to any of the events can feel the energy, right? It's amazing to be here. It's amazing to see all these people run around and talk to each other and make connections, and all the new industry players, all the new companies. Yeah, it's fantastic. Of course, we're bullish on Bitcoin.
I think, and bullish on Bitcoin payments in particular. I think one of the stories that it was surely noted, but maybe not noted, you know, bullishly enough, if you will, was the Guinness World Record that we broke in Vegas, right? Over 4,000 Lightning payments in one day. So we set this Guinness World Record. Now, a lot of Vegas, there was talk around the vice president being there and these bigger characters, the financial industry sort of coming to Bitcoin. But I think, again, it was a proper time to have something like the Lightning issue, to set something like a record in Bitcoin payments using Lightning. Shout out to BTC Pay Server and Uncle Rockstar for helping to facilitate that. Shout out to the Bitcoinized machine, Fernando, who came in from Brazil to help us with that. You know, so again, this is very much, we're talking a lot about Bitcoin treasuries and all this kind of stuff, but again, for many people around the world, Bitcoin is just simply money. Lightning is the payment layer, and also to cite Roy from Breeze, talking about Lightning as sort of the payment language of Bitcoin. It's going to be the glue that bonds not only the base layer to other layer 2s, but layer 2s to other layer 2s. Lightning is going to be this language that maybe it gets abstracted away from most people. They're not necessarily going to have to think about this, but it's going to be the reason Bitcoin functions as money more easily moving forward.
Well, of course, a lot of debate that we're going to hear on stage as well from the technologists in the space. It does seem that Lightning has become a little bit of a hot button issue, right? There are some developers who think there's maybe been too much of a focus on this particular L2. They want to see some other flavors. We know some of the Bitcoin Magazine writers will be participating on some of those panels later. So do we dive in here about the future of Lightning and sort of, you know, where it goes from here, Joachim?
A little bit. There's a little bit of that. And there's definitely a conversation to be had if this is the only L2 that we're going to use, and how is Bitcoin going to scale if this is how is everybody opening a channel if this is the only one we're using? But there are tons of other L2s in the works as well. It was more relevant, I think, when fees were spiking last year or the year before. Then I think there were a lot of other developments popping up. Liquid, RBG, things like that.
Necessity is the mother of invention.
Yeah, but like now fees are very low. It's very easy to run channels. Like the necessity for it is less so. We definitely need to build things before people show up. But so far, it doesn't seem like Lightning is overloaded, and some of the bullish, the bearish voices on Lightning have not been vindicated. Let's say.
And you know, another key component of this is the entrepreneurship side. You mentioned people building. So in terms of the issue, in terms of getting into which companies are building, is that touched on at all, or anything in the issue?
Not really. It's more about the technology. There are a couple of companies. We had some stuff from Geyser, which is a crowdsourcing crowdfunding platform.
Maybe give a shout out to Evan from Zeus. So I think he'll be joining us. Yeah.
We had some of that in there, I believe. There's a lot of uses as well. Like, what stands out to me is that we have an article in there about how Lightning facilitates split payments, and so you can instantly get paid from something, and like every part of the value chain gets paid in the same transaction, right? So like imagine you make a movie or write a book, and you have editors or people who make the cover for the book, people who work on some portions. So you have an instant sale, and instead of going to a middleman or a gatekeeper like Amazon or a publisher, everybody gets paid at the same time, and it gets distributed in real time in the way that you can. Like, it's really fascinating, and it's like when you think about it, it's like, yeah, that's what a payment's supposed to be. Why is there a middleman? Why is there a gatekeeper? We can just make away with that.
Well, no shortage of conversation about crypto payments. We talked about this early on stage today about stable coins. Really, you know, the Genius Act passing, we should see over the course of this year and next, really a proliferation of crypto payments. And so does Bitcoin Lightning sort of come back into the conversation, Joachim, Frank, in the midst of this context where JP Morgan, you know, is maybe allowing you to make stablecoin payments, maybe an Amazon is allowing you to make stablecoin payments. How does Bitcoin Lightning get back in the mix, Frank?
Well, I'll give a shout out to Lightspark. Lightspark recently integrated with SoFi. This is a pretty big sort of marriage of like
big financial company.
Exactly, a big financial company working with I think it's Lightspark's UMA address, Universal Money Address. Very cool sort of thing. This is more of like sort of an official KYC sort of thing. It's not necessarily very cypherpunk, but very cool at the same time. I think one of the things to sort of touch on, Pete, I know there's a lot of people in the Lightning world. I mean, I spoke with Elizabeth Stark from Lightning Labs about this. Tether is coming to Lightning. I'm sure other stablecoins will come as well. Personally, I just like using sats on Lightning, but there are other people, companies that are looking forward to being able to use Lightning for stablecoin payments. We know that Mark Goodwin, God bless his soul, if he's watching us, is turning over. As he's cursing my name right now as we speak. But anyway, it's going to be a real thing. We'll see Bitcoin. It will be something that obviously Lightning facilitates Bitcoin payments. We know that's what it's there primarily for, but I think we'll probably see more than just Tether coming to Lightning. We'll see other stable coins and stuff like that. Whether people like this or not, it is what it is. But I think it's also a part of maybe defeating the broader crypto complex, right? Like, how do we do away with Tether on Tron? Well, we have to bring it over to Bitcoin. And there's a lot of people who believe whatever sort of works in the broader crypto space will eventually make its way over to Bitcoin. You don't necessarily have to subscribe to it. It's what some people in the space do subscribe to, and I think we'll see more of it.
Well, quick shout out to Mark Goodwin, author of the Bitcoin Dollar. You can go to bitcoinmagazine.com. Check out the store. Get a copy of the Bitcoin Dollar if you're looking for a sophisticated critique on stablecoin payments. Check it out there as you're getting your copy of the latest Bitcoin magazine, the Lightning issue on newsstands now. So we've got to ask, we're talking about this current issue. What's next? Q3 coming up. You know, Lightning now a featured issue. Are you going to continue to focus on technology, or do you shift towards something else? Can you give us any hints about what's happening?
We are not going to focus on technology for the next issue, and anybody who's paying attention to the space, the Bitcoin space, and what's hot during this summer of a certain thing.
Paper Bitcoin summer, is that what you're referring to?
Paper Bitcoin summer,
Paper
maybe
Bitcoin
what
summer,
I was referring to.
Yeah.
May have an idea what the next print issue will be all about.
A little hint there. I'm going to give it away if you don't mind. No, I'm just kidding. It will have something to do with maybe the broader theme here. We got this advertiser behind us, or the primary sponsor for the event, MetaPlanet. So we'll be looking at Bitcoin through a financial lens in the next issue, I think.
Absolutely.
Without giving away too much, I think we'll just be looking with a closer eye at this, and also looking at Bitcoin having been born from the financial collapse of 2008, 2009, the great financial crisis. So not only looking at the way that Bitcoin is being financialized, but its roots, where it came from. It was supposed to be the thing that was supposed to definancialize everything. Are we straying from that? Something that we'll be exploring in the next issue, Pete.
Well, so much more in store. We're heading over to the Nakamoto stage now for more main stage action, and speakers will be here. Keep it tuned on YouTube, Rumble, and X. We'll be right back.
OS 的 David Hu， 黑米的联合创办人 Matthew Oses， 然后是 Union 行政总裁 Carol Cooper。Thank you。
All right. Got a great crowd here. We're going to get it started. So we'll start off with some intros for the audience. I'll start. My name is Gabe Parker. I do business development at Citria, which is a Bitcoin L2. But today I'll be moderating this panel, and we have great panelists today. I'm really excited for this talk. But first, we're going to do some intros before.
Awesome. Thanks, Gabe. Matthew Rozek, co-founder of Hemi. Been in the space for over a decade, building, advocating, and investing. Started out investing in this space, so over 100 different projects. And then I met my co-founder, Jeff Garzik, and we started Block, which is a Bitcoin and Web3 infrastructure company. And Hemi is our magnum opus, and we just launched mainnet this past March. So great to be here.
Congrats on that.
My name is Karel. I'm the CEO of Union. Union is one of the major Bitcoin bridges, and in general, bridges between Bitcoin secured networks around the Babylon ecosystem. We secure hundreds of millions in Bitcoin value and basically make programmable Bitcoin possible.
My name is David Hu. I am the lead developer relationships guy at Bitcoin OS, one of the earliest employees of the company. We're here to build a lot of infrastructure to activate your Bitcoin, bring it out to other chains like some of my colleagues up here on the stage. I've been in this space for quite some time now, primarily through the venture side, investing with my fund, Kryptonite Capital, and we invested in Bitcoin OS and a couple of different things in the Bitcoin ecosystem. And we've always seen Bitcoin as the largest asset base, so working in this side now is incredibly interesting. I'm very happy to be here today.
Great. I think before we dive in, it may be more helpful for the audience to maybe dig in a little bit more on like what specifically you guys do. Matthew, I'll start. Tell us more about what Hemi is really focused on right now. Maybe some verticals you want to share that relate to some hot topics like Bitcoin DeFi, right? And then we'll kind of just go down the line on just like what you're focusing on specifically at the moment.
And I think it's important to talk about the history of programmability on Bitcoin. So I think everybody here wants to program on Bitcoin and make your Bitcoin do more, especially in DeFi, because you have this like digital gold that doesn't do as much as the things that you do on EVMs or smart contracts, etc. And so that's the big unlock that everybody on this stage wants to find. And if you look historically at how this started, I remember Blockstream in 2013 launched sidechains, and that was a big white paper, that was a big catalyst in terms of thinking about this. And then along the way you see like RSK, you see drive chains, that was BIP300, BIP301, that was trying to do programmability on Bitcoin, Veriblock, etc. Even Vitalik, he was a writer for Bitcoin Magazine, the same organizer of this conference, and he proposed to the Bitcoin community to do programmability, scripting, and doing more on Bitcoin, and kind of got like relieved, kicked to the curb, if you will. And that was one of the catalysts to kind of create the vision for Ethereum and build Ethereum. And so, taking that full circle, what we're doing at Hemi is we're building a super network. And so we built an L2 on Bitcoin, an L2 on Ethereum, and it connects and secures itself into Bitcoin. So a lot of the stuff on trust minimization and doing DeFi on Bitcoin centers around the security. And we'll talk about that a little bit more. But so far with Hemi, we've launched mainnet. We've got about $1.2 billion of TVL on the chain and 70 partners integrated. And so the chain is working, open source, audited. And I will shout out my two co-founders, Jeff Garzik, who's an original core developer of Bitcoin, worked directly with Satoshi, and then Max Sanchez, who's the real genius behind the way in which we anchor and store our data in Bitcoin.
Great. Carl, tell us a bit about what you're focusing on at Union.
Yeah, so recently we saw kind of a Cambrian explosion of new blockchains with specific purposes, hyperliquid, we see stablecoin chains launching, and of course for users to interact with those chains, they need to be able to transfer assets, right, get in on them, go in between. And right now Union really is the only way to do that in a fully trust minimized manner. So at no point does Union take custody of the assets, can Union actually steal assets from the user, and that leads to insane security, of course, because the way the protocol is designed, if I can take your assets, neither can hackers. This lines especially well with Bitcoin's core ethos, of course, which is self-custody. And so we've seen a massive growth in the Bitcoin ecosystem for our core technology stack. Right now, our biggest focus is basically increasing Bitcoin utilization in programmable chains. So seeing it be used as collateral, increasing yield that users can earn on Bitcoin, and basically getting it out of the Bitcoin chain itself and getting it into chains like Hemi, into other Bitcoin L2s, in Ethereum, and trying to maximize the value for the end user here. We see this with some of the products that we built ourselves, like Oro BTC, where users can earn yield in Bitcoin directly and still participate in DeFi. Right now, we're the biggest chain, biggest bridge around Babylon's ecosystem. So we power some of the BSN security modules around it and the asset transfers.
Great. David, give us...
Yeah, I mean, wow, there's a lot of things to unpack. But I think we saw this explosion in 2024 for programmability and other ways to use the Bitcoin network. And, you know, one of the issues for the very long term is like, how does this network continue to generate fees to reward the miners once we've issued all the Bitcoin? So we saw the emergence of this trend happening last year with ordinals and then a whole flurry of L2s. But some things that we saw, especially through the BitVM white paper, was like, hold on a minute, some of this tech around, you know, how do we lock this Bitcoin? How do we bridge it over? It doesn't look as solid. Like the go-to-market is solid. We've learned that from the EVM side over the last 5 years. But the tech needs more work. So our founders started developing ways to use this ZK technology. We verified the first ZK proof on Bitcoin. We started developing a BitVM bridge. We launched a testnet version of that last year. We had more than 800,000 transactions to EVM ecosystems on testnet. But with all that, we've also realized a lot. And today, when you look at BOSS, Bitcoin OS, we just have a singular focus on one thing, and that is activating more Bitcoin. We've had all these experiments now, all these prototypes. What we want to do now is we want to talk to these institutions. We know there's more than 6 million BTC sitting with custodians, ETFs, exchanges, etc. And like, how do we bring that in? And so now we're upgrading all our tech to become more institutional ready. I'm very excited to talk about that with you guys.
Yeah, I think when it comes to thinking about institutions coming in, one, you know, categories like these Bitcoin treasury companies where, you know, maybe not strategy, but I think the smaller to medium guys have a lot of incentive to deploy their native BTC, you know, on chain. And a good question is like, all right, like, how are they going to do that? You know, I guess I'll start with Matthew. Like, how do you think about, you know, this inevitability of treasury companies deploying BTC on chain, and you know, knowing that's probably going to happen, how are you preparing yourself for that at Hemi, if any way?
Yeah, no, it's a great question, and it's like the financialization of Bitcoin as a tale of two cities. You almost have like two columns here. You have this Wall Street financialization. You know, thank you, Michael Saylor, for creating the playbook for doing that, putting Bitcoin into a shell and going on Wall Street and financializing that, laddering up, rinsing and repeating, and that's showing a return that way. And that's a well-grooved path, and that's getting photocopied all around the world. I view a lot of these treasury companies almost like 100 years ago, like the Rothschilds were building a banking network, and they were doing that on the back of gold. And this one is kind of similar, dissimilar, but on the back of Bitcoin. And so it's an interesting kind of perspective to look at. So you have Wall Street financialization, and then you have on-chain financialization. And that's what we're kind of like all obsessed over. And so while Wall Street has figured out that groove, this industry is trying to get, you know, $2.4 trillion of Bitcoin on these new rails. And so doing that in DeFi requires you to bridge, requires you to interact with other networks. But once you do that, you could be, what I think, way more competitive yield-wise than the Wall Street version of that. And that doesn't mean everybody is going to ape into these new primitives, but in terms of like the portfolio that they manage, a part of it is going to go into these new areas. And I think that's going to grow over time. And then the AUM, the TVL, that's sitting on Wall Street or some of these digital asset treasury companies will find itself squarely on chain.
Carl, do you have any perspectives on massive flows from treasuries using Union, for example?
Yeah, to extend on that, I think most countries have realized or starting to realize that building up a Bitcoin treasury is actually of importance to almost national security, right? As we see Europe trying to outcompete US dollar dominance by potentially building their own Bitcoin treasury. The next step to being able to secure that Bitcoin treasury is making sure that indeed you can grow it with yield on chain while maintaining self-custody, right? It doesn't make sense to do the same thing we did with gold and host almost all of it in the US. Countries want to maintain it in their own jurisdictions. And so the only way really to get that BTC on chain for Bitcoin treasury companies and for governments themselves is using trustless technology like Citria, Hemi, and Union as kind of the base layer to get the yield on this. And I think people shouldn't sleep on this yield. The highest possible yield right now is on chain, and I think that's only going to grow more with the coming years as we see utilization increase. Right now, for actors that do use these technologies, they have a massive edge, effectively, on counterparties that leave their assets idle in treasuries. So for Union, we see it as a big mission right now to not go to 1 billion, not go to 10 billion, but get like 100 billion in BTC derivatives on chain and used.
David, do you have any thoughts on this?
Sure. I mean, look, we're a tech company. I think a lot of the builders in this space, we've been building for each other. We've been building for self-custody. We did that too. We try to build this whole trust minimized or trustless network of validators, ZK proofs. But what we also realized throughout the process was that these institutional guys, like, they are here now. They have a lot of Bitcoin, and the way they work, if you're a US custodian, you're regulated by US banking laws. We need to also make this technology work inside their workflow, which actually isn't as difficult as you think, but there are adjustments you need to make. You need to make primarily the infrastructure secure enough for them as the operator to use it comfortably. So you almost have to make it in a way where, like, the custodians are still in custody all the way up the value chain, and it's self-custody, but you need to build a network where they can each kind of control each other. So you need to build some kind of trustless situation, but you need to give them the exact key management systems they're used to, the exact sharding mechanisms they're used to, the exact like hardware enclaves that they're used to, so that all the servers are safe. But what's cool is once you do that, you can expand that into and let retail use the same infrastructure, and then you can bring everyone. So I think we're pivoting a little bit to like focusing on the user experience now and focusing on how the user experience in a regulated way works for the institutional players.
Yeah, no, I love that. So, okay, we're going to start focusing on the bridge now, the bridge technical parts. But I'm curious to hear, and we'll start with David, in a world where, Bitcoin bridges become fully trustless into like a proper Bitcoin L2 ecosystem, like, do you think there's no point to have like WBTC, like all these other wrappers on Ethereum, right, Solana even, like, will cease to exist because you can now trustlessly use a Bitcoin bridge from BTC L1 to L2? Like, do you have that view as someone who's building, trust minimized bridges at the moment? Like,
I think it's really difficult to say because we're talking about like the terminal state of the system, and the iterations there are so many, and we're all building our own iterations, and sooner or later we'll figure out which one we're going to go with. But one theme that I'm seeing more of, which we're trying to pursue now, and hopefully this is going to work well, is that actually Bitcoin is so simple programmatically that you can't really write scripts on it. You can't really have smart contracts. We know that. But what we're doing now with the ZK proofs is that you can now run a program and you can run it without a chain. You just run the logic and you write that result as a ZK proof, and you say, hey, I trust that this program was run correctly, and then you distribute that information across any chain that you're on. It's a little bit technical. We call it charms, we've been working on it, but there is a path where potentially we can become chain agnostic and just bring the programmable data back to Bitcoin and leave it there, because that's the main chain, that's the most secure chain in the ecosystem.
I mean, this is the big unlock. I mean, we're talking about wrap Bitcoin today, which is sitting with a human in a custody, and that's 90% of the market of Bitcoin that's on these other chains. It's like, that shouldn't be happening. And so this technology is a massive unlock of financializing Bitcoin. And that's always been one of the hardest parts, because it's, while it's, Bitcoin's, pretty basic to work on, it's very hard to get right. And what we've done to try and figure out this way for this network to speak both languages is that we put a fully indexed Bitcoin node inside an Ethereum node. So historically, developers use Bitcoin Relay, which is a very thin veneer of data. Now you have full transaction level data on both sides, and you can actually program your Bitcoin. So that's a huge unlock. And I think once people in the Bitcoin community are very conservative by design. You know, there's not people aping into all these new protocols that were built a month or a year ago. The wall clock time, as these things mature, are going to get better and better as they get tested out. But these chutes and ladders are going to be like the next blood vessels of the financial infrastructure. And so it's going to take time to get there, but once it starts to kind of spark and light, it's, there's no going back.
Yeah, fully agree. I do think we'll see Rep BTC basically leave the space as we get native BTC being the backing asset, but we actually want to see like 1,000 different types of BTC, because that would mean that programmable BTC has succeeded, because in the end, that little like letter in front of it indicates that it's a slightly different type of asset with a slightly different type of yield, a slightly different type of risk profile. And of course, that's what we want to broadcast to our users, and that's what we want to make available to them. We want to tell the user, hey, here is a type of Bitcoin that will make you 20% a year, but maybe it has a certain lending risk associated with it. Maybe it's backed by an asset in a vault that's used in traditional finance, or that's used on a different chain. And so what we're looking to accomplish here is 1,000 different types of Bitcoin, each with a specific risk profile that can be used by these Bitcoin treasury companies. In that sense, they will know that they still hold the underlying native Bitcoin themselves, but depending on their jurisdiction and their customers, they can decide to chase the maximum amount of yield that they want. And that's, I think, kind of the final unlock that we need for Bitcoin itself to be able to outcompete stablecoins. Right now, stablecoins are exceptionally good at having different versions with different yield profiles in different protocols on different chains. And Bitcoin is just way, way behind on this. And if we don't want to lose out on stablecoins in the end and make Bitcoin the true like backing asset for all finance, we need to outcompete here.
So you mentioned something about like a bunch of derivatives of wrappers for BTC. I like agree and disagree. I see your point, but I think I'm curious if there's one thing we all agree on is in a world where there are a bunch of BTC wrappers, should, you know, at the very least, shouldn't those exist on, you know, real BTC, like Bitcoin layer 2s that are secured by Bitcoin rather than like Aptos and like some other, you know, chain that has nothing to do with Bitcoin, right?
Bitcoin that backs it should be held by BTC L2s or in a non-custodial way, so that you know at least that you hold only the additional risk that like the DeFi that it's doing and not the custodial risk.
Yes, because one thing I see, and I'll get to you in a second, is you know, there's been a lot of like Bitcoin going to like SWI lately, and I don't know if we have any like SWI fans on the stage, but I just look at that and I'm just like, what's the point? Like, what are we doing here, right? Like, SWI has nothing to do with Bitcoin, doesn't even inherit security. Why the heck are you bridging your precious BTC over there? But yeah, you wanted to kind of chime in here?
I think it's a very good observation. And so just to expand on that, every other network is basically saying, how do I get Bitcoin and financialize it on their own network, whether it's Solana or SWI. They're all seeing the big meta of Bitcoin being the biggest asset in DeFi, bar none, right? And so, you know, in a way, a lot of these networks are putting a Bitcoin t-shirt on, and most of the people on this stage and in this space, you know, have Bitcoin tattooed on them. It's very native, it's very deep, it's integrated, but you definitely understand why they're switching their strategies to say, how do we financialize this juggernaut of this Bitcoin commodity? And so instincts are right on, but I think some of the technical ways they do that, you know, are great partners for people on this stage.
I agree. I think it's. I think you're spot on with like the security aspect of it, right? Like the only thing you're really worried about once Bitcoin leaves the BTC chain and exists as a wrapped asset on the other chain is double spending on the other chain, like uncontrolled minting, uncontrolled redemption. If you get control of those things, it's relatively safe. But I think what's going on is just crypto being crypto. It's just the go-to-market thing. It's chains want TVL. They want to show it to their investors. But ultimately, what's exciting now is actually, I think, on-chain yield isn't that attractive at the moment, actually, for BTC. But what is coming up with the treasury companies, with miners, with institutional money is a lot of financialization coming from Wall Street. And I come from a Wall Street background. And I can see like real Bitcoin borrow demand coming from miners, like coming from hedge funds and these guys. And these, we're starting to tokenize like BTC hedge funds now that are in TradFi on chain. And that's actually a really interesting source of yield that we should be able to tap into as well. Because if you look at on-chain BTC, you can borrow, like you can deposit it for 0.02%. It's not much.
It's not worth the risk,
yeah.
right?
I just want to mention, because we had Sui as an example, but thanks to Babylon and to some of the work we recently did, Sui is becoming a Bitcoin secured network as well. So we actually are trying to solve that double spend issue and making sure that alt L1s and not just L2s can also be Bitcoin secured and kind of join this wider network.
And just like architecturally, the way we built Hemi, and the reason it's called Hemi is that, you know, we're starting with the king and queen of crypto, Bitcoin and Ethereum. This is the distance in between those two networks in terms of TVL, interoperability, and opportunity, we think is the biggest white space in Web3 today. And so looking at these networks, starting with Bitcoin and ETH, the foundation is called actually hemispheres. So when you think about these networks as hemispheres, over time, Hemi would adjust and add Solana, add Sui, add BNB, and other networks to it. That's the future vision of how we would anchor other networks.
Anchor it through you, which is anchored by Bitcoin, right?
Yeah, through our proof-of-proof consensus.
Got it, got it. I think we might have time for one more pretty critical topic, Bitcoin DeFi. We all know about it. Everyone here, I'm sure, is very excited about it. You know, I think we've made a lot of improvements as an ecosystem, you know, for the past couple years. I kind of want to just go down the line and hear everyone's thoughts and opinions about, you know, where Bitcoin DeFi is today and what do they think they see that works and, you know, what they see coming in the future. I guess we'll switch the lineup going from David down. David, do you want to start?
Wow, it's the elephant in the room, and at the same time, like the most exciting opportunity. Like I said, I think on-chain, I mean, look, Bitcoin at the end of the day, you can only get it through mining. That's the first principles thinking, you know. So if you want yield in Bitcoin, it has to either be a transfer from you to me, which means you're borrowing and I'm lending, or we need to buy some Bitcoin with some other yield that we're getting. So I think on-chain, the development of Bitcoin yield is going to be a function of how dominant Bitcoin is as an asset, to be honest. And we're seeing these altcoins starting to disappear, you know, after years of a dysfunctional VC cycle and stuff like that. So as Bitcoin becomes the de facto money of blockchain, more and more yield is going to be denominated back to Bitcoin. So I think that's going to grow. The wallet is going to grow. And then I'm really excited about seeing these off-chain yield opportunities that are coming now because Bitcoin is becoming a financial asset for the first time. And how we bring that on-chain.
I think there's a massive amount of work that we need to do to catch up to the DeFi that has already been built around other assets. The utilization at the moment is too low, and I'm afraid to say I do the same. People sit too much on their Bitcoin. They keep it in their own wallet because we know it's going to go up in the end. But sophisticated actors right now are basically already going into this early Bitcoin DeFi space and getting an edge, building out a position, potentially acquiring more Bitcoin or tokens in what will soon be very dominant Bitcoin ecosystem projects. For us right now, the main thing is figure out how can we get people to actually start participating here so they don't get left behind. And I think that's a function of making risk effectively zero. Right? Everyone knows Bitcoin will basically keep going up forever, or we hope. And so with even the minimal risk that there is in DeFi right now, they're just unwilling to participate. We've seen like bridges get hacked very often and massive ecosystems don't empty out entirely. We've recently seen scam wicks on Hyperliquid and people losing all of their positions. So we have to figure out that middle ground.
One of the biggest opportunities in this space is Bitcoin DeFi, bar none. About 3 years ago, my entire team dropped everything we were doing to focus on building Hemi. And so it's that much big of a deal. And so going forward, having this API for Bitcoin yield is going to be massive. And you know, Bitcoin, I think whether we like it or not, is going to be the, you know, almost the risk-free rate in a way, right? Like just hold Bitcoin, and then you have to decide how you want to put your Bitcoin on treadmills and see what kind of risk reward that provides you. But got to build that infrastructure, that porcelain around that. And I think, again, it's the biggest opportunity in our space.
Are there any markets you guys specifically are like, this is like where we have to win? Whether it's like, you know, for example, Bitcoin-backed lending, right? Or is it like Bitcoin, you know, structured products, right? With like vaults and stuff. Like, these are, for example, two things at Citria where we truly believe if you win those two markets, you're most likely going to be top 1 or 2 player. Like those are the 2 biggest markets, right? If you can service those, you kind of win the game, in my opinion. So yeah, maybe we'll start with Matthew. Like with you guys, you already are launched, right? And you guys have been working for a long time, developing. Is there specific pockets in the market you're like, we need to win here? Or is it kind of just everything? Like how do you look at that?
I mean, I think it's everything, but I think it's you go through a penultimate step. You know, the first thing you have to do is get it to another network. You know, get it to go into these DeFi chutes and ladders where it's non-existent today. You can't really do that. And so it's the focus on the security part of it. Once you get through that, DeFi generally is a maturing market. It's an evolving, innovative market. But once you get through that first step, it's like tabula rasa. You could do, you know, you have a full buffet of DeFi gadgets, orchestration engines to drive yield on how you want to.
I mean, we have to win at everything. We need to be the fastest, the most secure. We need to have the very highest yields if we want Bitcoin in the end to win. We need to outcompete all of the original DeFi that was built. And I think we're very close to being able to achieve that with recent innovations on BitVM3, with all of the stuff that's being done on BTC L2s. Actually, we are at the stage right now where we can massively improve on literally everything that has been built around EVM ecosystems, Solana's ecosystem. The only thing is we need to be willing to continue this journey, right? Like the groundwork has been laid down and now we need to complete it.
David, do you have anything you're really focused on, locked in on, or is it just the whole space as Bitcoin DeFi?
I mean, for us, it is being the leading infra provider to people like this that are building the ecosystems, building the apps. Being the leading infra provider means that people trust us with their BTC. Yeah. That our system is the dominant BTC activation mechanism for the whole space.
Before this, you mentioned, you're probably the only person I've heard here talk about how Bitcoin yields are, unfortunately, the good ones are off-chain, right, with institutions, whether it's like doing option stuff or private lending, private credit. I guess with that observation in mind, do you see that all eventually coming on-chain to Bitcoin L2s? Like, is that something you agree with, or?
I agree with it coming on-chain. Just look at Athena on Ethereum, like with the right level of trust and the right people to start it off and bootstrap that trust, I believe you can do it, and I think it's coming faster than we think. Yeah.
All right. So I think we're getting close to time. So I kind of wanted to give the panelists just you know, some final thoughts on, I guess, you know, tell the audience like what is there to be excited about with what you're working on. You know, maybe something that's like upcoming, or you know, something that's for them to use maybe in the future, just something that I take away, I guess, for each of the projects that you're working on now that you have the opportunity here.
Yeah, I think all projects here come from a very technical background. We did research for many years. We came from a world where we would generate zero-knowledge proofs and spend minutes to basically do very simple operations. And now we're kind of at the era that we're able to do this in just seconds. So we've gotten Bitcoin bridging to be basically as fast as custodial solutions, and we're seeing another 10x increase available here. So educate yourself, become familiar with this new technology, because soon it's going to be literally ubiquitous, and those that are building on this, are leveraging it in their products, will basically outcompete everything that's out here right now.
I think for us, we're looking at a couple things. One is digital asset treasury companies and how they API to companies in this space and get yield. Secondly, almost similar is with miners and creating a miner-fi experience where they could go on-chain and do the same thing. So I think, again, this API for Bitcoin yield is the biggest component.
And the miners are borrowing Bitcoin, right?
Financializing, like they would go through any other DeFi. They do OTC stuff and all that because they're unable to kind of do that on-chain.
Oh, I see. So the capital formation on-chain is obviously much more efficient, so I'm guessing that's why, that's the motivation of bringing that MiFi stuff like on-chain, on Hemi. No, I love that. That's something we're looking into as well. I think miners are like one of the biggest borrowers of Bitcoin, right? And miners are also in need of a lot of capital at the moment for miners that are turning into data centers, right? Like there's this whole other side of the story that I think it's good that you guys are focusing on that. I think that's a market that not many people are paying attention to, like the MiFi stuff. Yeah, that's great. So I think, I don't know how much time we have left, but I guess we can also discuss like, how do you feel about the conference?
It's awesome to be back in Hong Kong. I think historically, Hong Kong and the region here was first in the door and in the room to innovate, build, and everything, all the early miners, all the early exchanges, wallets. So there's a lot of institutional knowledge in this region in terms of being early Bitcoin developers, evangelists, etc. So this is like awesome to be back.
I completely agree. It's great. I'm from Hong Kong. I live here, and it's great to see that the Bitcoin conference here is growing every year now, and having all these institutional players fly in, like all the custodians we're talking to, it's really exciting.
Yeah, well, I think this is time. It was great having you all. Had a lot of fun up here, and thank you for the audience for showing up for this and taking notes and really being there. So really appreciate that. And if you ever have questions, you see everyone's face cards here, and just please reach out. I think some of us might have some booths here. It's a great opportunity to learn more. But thanks again, and hope to see everyone soon.
Thank you.
Thank you.
Thanks, everyone.
Thank you so much. Now we will have a very short break.
The Bitcoin price $112,000 banging on the door of all-time highs. A little too bullish here on stage, but we've got another great panel guests as we unpack everything that you're seeing on stage. We've got Joachim Book, managing editor at Bitcoin Magazine, Frank Korver, senior White House correspondent at Bitcoin Magazine, and here to tell us a little bit about what's in store for the future of the Bitcoin Magazine product. We've got Mark Mason, head of media at Bitcoin Magazine. Mark, welcome to the stage.
Thank you so much, and you guys have been doing a phenomenal job. This is my first time actually at Bitcoin Asia. I wasn't here last year, and 20,000 people. It's been absolutely amazing. So I've not been able to watch many of the views, but like I've been managing the BTC Inc. booth, and the people coming by, I mean, the treasury adoption seems to be the main topic, but we have to keep reminding ourselves that there are new people learning about Bitcoin every day. So at the booth, people are looking for like free Nakamoto merch. There are local businesses in Hong Kong asking me, about Bitcoin, and so there's this real education exploration that's going on. And then there's people from America. I mean, there are people from all around the world here, and I think the whole team that comes together. Full kudos to everyone. I mean, the whole production and event is like the magic of this experience. If you've never come to one of these events, you really, really should.
Yeah.
And we've got so much cooking at Bitcoin Magazine. I don't know where to start. We've got more cooking than Gordon Ramsay.
Well, we talked about the Bitcoin Magazine print edition, the Lightning issue newsstands now, bitcoinmagazine.com/print. But it sounds like, with the millions of people coming to the website, you're trying to think about how to best educate and inform. What's next?
Absolutely. So I know we all love announcements of announcements.
Woo!
So we've got a few things cooking. So one of the things that I'm really excited about, and shout out to Richard Hogan if you're watching, we're actually developing a Bitcoin Magazine app. Now, we used to have one, and it got sunset last year, and we're working on that right now. So in the coming months, we're going to launch that. So we're going to have news segmented, our video shows, including our very own Frank Corver, his Bitcoin Politics show. Make sure you check that out. And it's going to have a portfolio tracker. So I'm really, really excited about this. So we need to provide the best user experience possible. And with people on the go, especially with increasing mobile traffic, we need to provide the best UI, UX possible. So that's something I'm very passionate about, especially with increasing international audience. And in addition to that, we are expanding internationally. So I can't say too much so far because we've got announcements to come out. But in terms of multi-language support, by the end of the year, I mean, 2025 has been incredible already. But you know, Bitcoin Magazine isn't done. We've got a lot cooking.
Well, stay tuned, of course. You can catch all the latest news on bitcoinmagazine.com. Make sure to follow the publication on X, LinkedIn, wherever you're getting your news and information. We're sending it over now to the Nakamoto stage. Stay with us. This is the Bitcoin Magazine News Desk presented by MetaPlanet.
Andy Lin, Gambling Bean Shakur. Welcome.
All right. Thank you all for being here. We got a packed crowd. I'm really excited for this panel. We're going to be talking about how American Bitcoin policy and global Bitcoin policy is shaping what companies and countries around the world are doing. I think in the last 12 months, we've seen a massive shift in global Bitcoin policy. So really excited to dig into this. Figure we could start quickly with some introductions. Let's go down the line here.
Hi everyone, I'm Jeremy, I'm from Singapore. I recently ran in the elections to be a member of parliament in Singapore, and one of the core ideas that I pushed forward was for Bitcoin to be part of the national reserves, and I'm the best performing independent candidate in 50 years. Yeah.
Hi, pleased to be here. My name is Bilal bin Saqib. I am the Minister for Crypto, a special advisor to the Prime Minister in Pakistan, where let me also quickly introduce you to Pakistan. We are the 5th most populous country on earth, 250 million people, 70% under the age of 30, and we have around 40 to 50 million crypto users in the country. Thank you.
Hi everyone, I'm Andy. I'm an investor. Accredited investor in Singapore. I write a lot of opinion articles, books, and so forth. Nice to meet you.
Hello, everyone. Thank you for having me, Bitcoin Asia. My name is Nentur Chao. I'm the global CEO of Bitmart Exchange. We've been around for the past 7 years with 12+ million users. Glad to be here today. Thank you.
My name is Grant McCarty. I'm the co-president, co-founder of the Bitcoin Policy Institute. We're the largest Bitcoin policy organization in the United States. We're actually the largest cryptocurrency think tank in the world. And for the last 4+ years, we've been working with members of the US government and Congress, the executive branch, to change their opinion, their perspective on Bitcoin, to promote it as a strategic asset for countries all over the world. And I think over the last 9 to 12 months, as I mentioned earlier, we've seen a massive shift in how the United States is thinking about this technology. And so really quickly, I want to set the stage for what we've seen just since the start of 2025. So in the United States, we now have a firmly pro-Bitcoin administration. In writing, in an executive order, this administration has said that they want to be a global Bitcoin superpower, which suggests that a number of things, that there is a race to accumulate Bitcoin, that there is global competition with regard to Bitcoin policy, that different countries want to lead in different ways. The United States established a strategic Bitcoin reserve. Currently, there's about $10 billion in this reserve in the United States. We recently passed stablecoin legislation in Congress. There's going to be cryptocurrency market structure legislation that is passed soon. And altogether, all aspects of government in the executive branch have shown that they're supportive of this industry. They're offering guidance to companies and organizations saying, we want to be pro-Bitcoin, we want to be pro-crypto. We're going to set policies that support that and let people operate. So with that framing, I really want to hear from each of you, like your personal experience. You all represent different constituencies, some of you public sector, some of you private sector. What has been your response, whether for your country or your company, based on the massive shift that we've seen in the United States?
Yeah, perhaps I'll go first. I think with the advent of the Genius Act and all of the progress that stablecoins are making, it makes it even more necessary for every country to have Bitcoin, because it will come a point in time where it is weird not to receive and use stablecoins. But that leaves the question, what about the currency of your own country, right? It will not be a situation where a US stablecoin lives side by side with an inferior stablecoin, and that's all the reason more every country should adopt Bitcoin. And it's especially important even for smaller countries, not the 5th most populous country, but even the small country like Singapore, where a huge part of the wealth actually flows through trade flows and through FX. So the question is, what is the value of your home currency? And the only way to strengthen that sovereignty is to have more Bitcoin in your reserves.
Yeah, so thank you. And you see, when you mentioned that from the previous regime to this regime, where President Trump essentially came in and said we want to make crypto, USA the crypto capital of the world, and that discussion happening in Washington doesn't just stay in Washington. It has an impact globally. When you talk about the Genius Act, when you talk about setting up the Bitcoin Strategic Reserve, when you talk about market structure bill, all of that helps us create great precedents in terms of which we can then discuss with our governments, our bureaucracy, and say that these discussions are happening in Washington, and hence why it helps us push that narrative in the global south with other of our counterparts. So Pakistan has also announced setting up a Bitcoin strategic reserve using the same principles, where there were Bitcoins that were confiscated by a law enforcement agencies. And then not just that, we suffer from a very unique problem where we have excess electricity. And because that the narrative at the top has changed, and there was a lot of confusion which is now turned into clarity, that provides countries like us a unique opportunity to turn our liabilities into digital gold, and to make sure that a country which has millions of, where the median age is 23, we can create frameworks and policies mirroring the United States that puts our youth of the country at the forefront of innovation.
Andy, you've been speaking with government legislators, regulators for years. Do you agree that there's been a shift within the last year in how those conversations are going?
Based on what I see, the conversations have really turned from lukewarm to very positive. Within all the different countries, the administration and so forth. But I want to point one thing out, is that I love what America is doing right now. But somewhat, all this legislation comes out in really godlike speed at the same time, right? So if you zoom out and you take a look at Asia, right? So of course we have our dear friend here, Pakistan, Bhutan, and even Philippines, who are more in the works of talking and buying Bitcoin as a reserve. The rest of the other country, whether they are the more developed ones or the least developed ones, what they are trying to do right now is doing some sort of a catch-up game. Right? So they do not talk about Bitcoin reserve as yet, but they are trying to push the agenda of tokenizing, some of their assets. Maybe it could be their company. Some of them are talking about tokenizing their stock. And then of course, following that, there will be some stable coin, new regulations. I think step by step, things are opening up. Right? You could see that in Singapore. Of course, in some ways we could say that it took a step back because of the new Payment Act. But if you look at Japan, South Korea, and so forth, they are moving forward in a very steady pace. You know, put the law in place, tokenize in place, stablecoin in place, then they could talk about Bitcoin reserve. So the approach is the same, but it's not as fast as what US did.
Nestor, your company operates internationally. What have you seen in the last year? What has the impact been on some of your business discussions, on users? Do you see policy and discussions that are happening in the US or in other countries? Does that have an impact on your day-to-day operations or your users?
Yeah, absolutely. So I guess from the private sector perspective, or the exchange perspective, so to speak, obviously we've been embracing the volatility and also the volume surge across spot and derivative transactions. And one thing that BitMart has been doing very well. We've scaled out our operations, everything from hiring more folks around the globe to upgrading our trading system to our third generation trading system, which effectively allows faster, more secure transactions to be executed, which is important, especially when now you're onboarding a whole new set of institutional players, not just on the retail side. So I think all of that is really to ensure the best execution environment for both institutional and retail needs. Now, what's interesting, I guess, from the exchange perspective is, you'll see a lot of data on how, on-chain is the future, which, very likely it is. But, the one thing about spot Bitcoin settlement, for example, is actually that volume has been shifting back to the exchanges and also in the stock market via spot ETFs. And now I think 75% of that volume is on off-chain platforms such as ourselves. And by the way, that figure is not for BitMart, it's just across the industry. Another interesting fact is that when there was a huge surge in volume in February, March, right, and since then has kind of tapered off, spot transactions have come down about 20–25% since that surge. Derivative transactions actually have remained relatively the same. It was only dropped off maybe 2 to 3%, and that's largely due to the fact that institutions they need the derivatives as a way to hedge, a way to sort of execute their ARB strategies, and also on the retail side. It's really interesting. 80% of the retail transactions that are derivatives, they're closed within 24 hours. So there's certainly this high-frequency trading sort of behavior that's been happening. Obviously, for us, we're relatively, we provide that platform for all users to sort of meet their needs. But I guess on the topic of, what I've been seeing globally, over the last couple of months, I've been traveling around the world and attended a lot of closed-door roundtables with government, quasi-government entities to really discuss how to, so they can understand market risks better, B, to see what other jurisdictions are doing that they should be, and C, to sort of, review sort of the draft policies that are in place, because I think it's, I was actually surprised. I would have assumed there would have been more sort of dialogue and communication and discussion among, and I think that's what Bilal and Grant, we were talking about this backstage a little bit earlier, that I think this type of, open dialogue should be happening more, because they're certainly reaching out to private sector folks such as myself and others in the industry, and I think this type of dialogue is very healthy for the continued adoption of Bitcoin and crypto as a whole.
So there are a couple interesting ideas that we've touched on here. Andy, you make the point that, hey, some countries might not be ready just yet for a strategic Bitcoin reserve, right? They need to set the foundation of their policy work first. Nestor, you mentioned there's spot ETF buys, there are derivative, purchase derivative trading. There's also day-to-day transaction with Bitcoin, day-to-day users using Bitcoin as money, as currency. Bilal, I'm curious to hear from you. So you've advocated for Pakistan to have a strategic Bitcoin reserve. How do you think about Bitcoin with regard to digital gold and holding it? And then this broader idea of making Pakistan a global Bitcoin hub, right? Actually encouraging companies to build, people to use Bitcoin. Just walk me through kind of the process of how you're thinking about this from the governmental level.
Yeah, so we understand the importance of Bitcoin, and which is why we've announced the reserve. And to accumulate that, we also want to contribute our resources, our electricity towards mining, on which we've also announced for 2,000 megawatts of electricity. And we want, and we've also set up a Pakistan Virtual Asset Regulatory Authority, which is an independent regulator outside the SEC and the central bank, that will incubate and accelerate all of these crypto activities, where we create a regulatory regime that fosters innovation. And we want builders to come in. And why we are unique, we are not a Dubai or a Singapore, but what we have is access to a lot of resources. We are the third largest freelancer market in the world. If the youth of Pakistan was to be an independent country, would have been the 10th biggest country on earth. We have 50,000 IT graduates, and we already have so many builders who are still kind of acting as back office. But all of this creates an enabling environment for them, where they become, why can't we have multi-billion-dollar protocols being created out of Pakistan? And not just that, we have a lot of social economic problems. We have 100 million unbanked people in the country. So we have the brains, and then we have all the problems where all those ideas can be turned into execution, and we can, just like you mentioned, we are looking at tokenizing our illiquid assets. So Bitcoin is great, but we want to use blockchain into seeing how we can, use that in government efficiency, how we can use that in stopping counterfeit. So we are exploring all of that.
Yeah, so, adding to that, we as, in Singapore, we don't even have the luxury of spare electricity, right? And we buy almost like all energy. We don't have renewable energy, and we're the fourth largest FX hub in the world. And those factors together add up to a survivability issue for us. We had one company IPO in the last year for our local stock market. So each country's local stock markets are going to compete with liquidity from Bitcoin, the Sharpe ratio of Bitcoin, and that's a problem for countries that don't have natural resources. And that's why all the more Bitcoin is a necessity for us for survival, right? And also, when more liquidity gets extracted away from traditional SWIFT networks to be on-chain, it could be yield protocols, it could be MMs and whatnot. That poses a question, why even have localized physical financial hubs at all, right? Because we are, Singapore has been competing with Hong Kong for the longest time to be the FX hub of Asia, and now that evolution will go into the Bitcoin world. It will go on-chain, it will go onto stable coins, and for many countries, the question about whether or not you should have a localized stock exchange is on everybody's mind, because you first have to clear the Bitcoin hurdle rate, and then you need to have the liquidity, and you need to have the volatility to have an active stock exchange, and that's going to be a problem for the global south. Yeah.
I just want to add on, as a fellow Singaporean, I felt that, it's not so much about the electricity, right? We are a small country, but we have money, right? We could always buy up a lot of the ETFs and so forth, right? So that could be one way, but I really want to point out the other fact that, we talk about tokenized business, right? Tokenized stock exchange and so forth. So I once almost invested into a RMO license, it's a regulated market operator license. But I realized that the biggest problem in a lot of this industry is that since your national exchange does not have too much liquidity, starting a Bitcoin exchange or starting some form of other digital exchange, it will not have liquidity as well. So what we should really do, apart from the Singapore example, is to build the foundation right. So if you have the right strategic mindset, then you could walk on the path of what Pakistan, has done so far into building it up, right? So we talk about, Bitcoin as a payment. Of course, it's a bit expensive, but if you look at it on a longer term basis, you could use the same technology behind, to look at the supply chain effects, fight counterfeits, track your money as well. So I think it's going to be a whole package instead of just zooming into specific policies. So I think the package is important.
Yeah, Nenter, how do you think about building the foundation of the Bitcoin economy? What does that look like from your perspective? You're focused on the users, you're focused on enabling people to use this technology in different ways and access it in the way that they want to or they need to. So there's the policy side of this, and there's the building side. And I think what we're hitting on is they need to coexist.
Absolutely. And look, I think with the U.S. leading the way on crypto policy as a whole, I think it creates a halo effect for the industry globally, so to speak. From a top-down perspective, I think it certainly works, and you're seeing that with institutions, with public companies accumulating Bitcoin for their treasury programs. I think what's needed in the future is actually the bottoms-up approach, which is really how do you sort of make sure the individual understands the value of Bitcoin, the financial literacy rate, I think, around the globe can certainly use that educational effort to really, understand and be able to learn and invest for themselves, which is why I think, a lot of other industry leaders have focused on educational efforts, and that's something BitMart's founder Sheldon and I have discussed on numerous occasions, and that we're looking to actively support around the world is how do you bring up that financial literacy level up, and it starts with supporting a lot of the, for example, universities, right, sponsoring events, helping bring on certain educators to help help everyone sort of get up to speed. Shanghai is actually, I believe, the #1 city where, in terms of financial literacy, I think children by the age of 8 are already well versed in sort of personal finance matters, right? And I can't say that for many places around the world. And that's certainly one of the most important initiatives for BitMart, for myself as well, for our founder, because it really, for us, it's really about how do you become an actively contributing player in this broader crypto Web3 ecosystem, right? And it really is in line with the original ethos of this industry, which is really to create a equitable society. So to me, I think that it comes down to the education.
Yeah, you hit the nail on the head there. We started the Bitcoin Policy Institute because we realized if you don't understand what Bitcoin is and how it works, it is nearly impossible to make good policy with regard to Bitcoin. And every time we speak with offices, a Congress member, they go, well, who in my district or who in my constituency is using this? How are they using this? Contrary to certain people's beliefs, but lawmakers do want to listen to their constituents, and they hear the phone calls or the emails that they get about different issues, and they want to make sure that they're responding to the actual needs and the day-to-day use cases of their constituents. So for the first couple of years of the Bitcoin Policy Institute, we're just explaining, here's what Bitcoin is, here's what Bitcoin isn't, here's how it works. And then from there, in 2024, we're able to popularize something like the Strategic Bitcoin Reserve as a policy issue, but we couldn't do that in 2021 because how is the government going to buy something that they don't even understand? So Bilal, I want to hear from you, and Jeremy, I want to hear from you. Like, what does that educational process look like to get to the point where you're buying Bitcoin, where you're creating policy around this? Because there are years of work before that go in that people don't really see.
So I recently made a trip to El Salvador and I met with President Bukele, and I think El Salvador has done a great job with their Bitcoin office, and especially Stacy, who leads that they've introduced the concept of money and they've started to educate the youth, like even young children, on what is money. And I think that is something that we, in our culture, at least in Asia, take that for granted. And I think that is very important, so that from a very young age you are taught at the importance of money. And not just that, I think so you need to educate toddlers and then people who are at the highest top as well. I think the middle age gap is pretty well kind of updated with what is happening. So you need to educate government officers and bureaucrats, etc., who might not have ever bought Bitcoin, but they have an opinion. And that opinion is based on value, not on factual information. And hence why, so we are pushing again in partnership. And this is the first time that Pakistan and El Salvador came together on the concept of diplomacy. So we are, changing traditional diplomacy into diplomacy and learning from them, and taking these frameworks to upskill our bureaucracy, our government on these courses, so they can actually understand what it is. Because if we do not, then there is this blockage of opinions that people have.
Jeremy, you ran on a Bitcoin platform, and one thing that you said to me before the panel was things like inflation actually resonated a lot with people in Singapore. So can you talk about these ideas that underpin Bitcoin? And yeah, there's the educational efforts, but there are these ideas that people, they already intuitively get or they understand. So what was your experience with that?
The real problem is about fiat education, right? For countries that are in the G10 with single currency stable coins, as we call it in Singapore, we've never really had to really think much about fiat. But now that we see things inflate out of the next generation's reach, we have this bigger worry, because for countries like Hong Kong and Singapore, Bitcoin is perfect. Why is that so? It's very much ingrained in our Eastern Asian culture to own hard assets, right? And the problem is that with land-constrained societies like Hong Kong and Singapore that chase for a property as a hard asset, ends up becoming a generational Ponzi, right? The next generation has to buy your bags, right? And that's a problem for societies like ours, where we fundamentally chase a hard asset, but we end up just crowding around property as always, right? And the real education around this is that even in campaigning, one of the things that I mentioned is that your next generation's income has to be higher than the previous generation for there to be property appreciation. And that's a problem with AI. And with that situation, the country needs to change its way of thinking into looking at Bitcoin and property and hard assets. And that's why it's very important. Let me give you some examples of also headwinds sometimes, right? Our current Prime Minister was the Minister of Finance when the FTX collapse happened. He was up for re-election this year. So a lot of the policies that were around Bitcoin actually stalled heavily. We were very early. We had a stablecoin framework in 2018, but most of the talk around stablecoins and Bitcoin had to take a back seat in order for the election to happen. And right after the election happened, we saw a change in the way we looked at the Genius Act, the stablecoins, and also we started to have a police task force over crypto scams. I mean, albeit it's 4 people right now, but we're still on our way. And sometimes it's political headwinds that may come and go, but eventually, as long as the direction is correct, the nation will be okay. Yeah.
Andy, switching gears slightly, one thing that Bilal mentioned is this idea of international cooperation, diplomacy. So as you're dealing with different governmental bodies, what do you see in terms of, you've made the point that you think there needs to be more foundational policy work. We've talked about something like the Genius Act, which is the United States stablecoin legislation. There's market structure legislation that's being worked on. To what extent is cooperation possible with regard to non-governmental organizations or different governments or countries that might feel like they're they're in competition with each other?
Based on what I see, you know, from a, maybe from an association standpoint, right? Many of them that are more digital currency or Bitcoin focused, you know, they have their own agenda, right? And eventually, if you really look deep into their model, they are trying to sell some of these causes, right? So to maintain their operations. So I actually spoke to the G20 guys. I said, hey, is there a way that we could form a more standardized platform where we could really educate and advocate the same kind of message throughout all the different nations, you know? And I think that suggestion is very important because what your country has and all the good case studies that you have, you could share it openly with all the rest of the members so that they can operate in the same manner, right? Because all these associations right now is like, oh, maybe CZ is coming to Singapore, they come over, shake hand, put a photo, and then bye. You know, that's not what we are trying to do, right? This is not policy making. This is just pure PR, right? So we need people who is really into the policy, and we need people that can actually talk about policy and make some changes, right? So there are a lot of public consultancy paper, you know, from various countries. And if this thing is serious, you know, it should be open to people in the global manner, you know, so that people can contribute the paper, contribute the ideas properly, so that it can be executed in a more standardized manner, you know, throughout the world, right? So I think that part is really missing from this equation.
We have a few minutes left. I want to wrap up here in a moment. Andy, it sounds like you're calling for more international cooperation. You're calling for more serious policy discussions and policy organizations around the world. When we started Bitcoin Policy Institute, we did it because nobody else was doing it. There wasn't another Bitcoin-only policy organization in Washington, D.C. So there is a void, right? And the U.S. is now leading in some of these policy discussions, but it took years to get here. So if you're anywhere in the world, like there is an opportunity for you. If you understand Bitcoin and you believe in it, there's an opportunity to engage with your policymakers. But I'd like to wrap up here and hear from each of you one thing that you'd like to see, policy or otherwise, to kind of take the next step in Bitcoin adoption. Perhaps you've learned it from the United States and their approach to Bitcoin. Perhaps you've learned it from another country and how they're approaching Bitcoin. But we'll go down the line here. Nenter, what are your thoughts?
Sure, and I guess, you know, since we're here in Hong Kong attending Bitcoin Asia, I do believe that Hong Kong's regulatory framework is one that certainly is very proactive and forward-thinking in nature. Maybe not pertaining specifically to Bitcoin, but I think for crypto as a whole. And a good example is this LEAP 2.0 framework, right, which was updated relatively recently. And why I say that is everyone understands, you know, HK dollar stablecoin or any other place in the world, right? But how do you actually, what happens after it's issued? The real world use cases. And in Hong Kong, which largely depends on institutional volume, I think from day one, you're able to trade secondary government bonds, ETFs, commodities, and certain renewable energy assets. And I think that's pretty crucial because, you know, having this framework and allowing it to have that institutional flow on day one really sort of takes it from 0 to 1 and go from there. So to me, I think Hong Kong's framework is actually designed quite well.
Andy, any final thoughts?
Yeah, I have just two very short points. So I wrote a report with NM Capital from Hong Kong about stablecoin. I think number one is we should take stablecoin seriously, right? Stablecoin is not just about Tether or Circle. You know, there's a lot of other frameworks that we can put into that. And the second part that I really want to mention is I hope that decentralized policies or decentralized network can be taken more seriously. You know, because if you talk to different government right now, most of them are trying to catch up. And if you talk to them about DeFi or decentralized networks, you know, they have no clue. And they think that we are doing some criminal things behind the scene, right? So I think that policy should be in place as well.
Well.
So I think a lot of these governments are working in silos. I think what will be great is like just like we have international aviation rules, banking rules, there should be a body that leads charge on a basic regulatory framework for digital assets, or let's say Bitcoin, which presses that every single country must have a basic regulatory regime, and then which every country can contribute towards for exchanges, for custody, for stable coins. And I think this can be a game changer globally at the adoption of Bitcoin. But there has to be like these bigger organizations of the world that invites, people like you and institutes like you, where we can turn this global confusion which is there still into clarity for adoption.
Jeremy, close us out.
Yes, so I think every country in this world needs to have a ministry or an official office for blockchain and Bitcoin, right? Every country wants to collaborate with each other on Bitcoin and blockchain, but each time that conversation gets very difficult because do we speak to regulators? Do we speak to the trade and finance people? Do we speak to the industry people? But I think the best way to synergize the entire world would be to have an official blockchain and Bitcoin ministry. And that way, every country in the world knows how to speak on the same terms, the same terminology, the same technology, and I think that's great for the world.
If you want to lead in Bitcoin, if you want to continue this momentum, talk to anybody on the stage. Thank you so much, everybody. This has been an amazing panel. Thank you all.
Thanks, Grant.
What is up, Bitcoin Asia? As many of you know, the current narrative is corporations adopting Bitcoin on their balance sheet. If you have a Pro Pass or a Whale Pass, we have an entire symposium going on upstairs that you have access to, where you can hear David Bailey, Adam Back, many more speakers who are currently adopting Bitcoin on their balance sheets. So make your way upstairs, check out the Bitcoin for Corporations Symposium happening upstairs. If you have a Pro Pass or a Whale Pass, you are welcome to check this out. There's a lot of great content happening on our side stages, happening upstairs at the Bitcoin for Corporations Symposium, and we have a ton of more great content happening on this stage for the rest of this afternoon as well as tomorrow. Thank you very much.
I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system...
Welcome back to the Bitcoin News Desk, powered by MetaPlanet. We're here at Bitcoin Asia 2025. Vibes are high. Welcome to everybody on Rumble, X, and YouTube. I'm joined by an all-star panel. To my left, we have Uncle Rockstar, the Bitcoin Uncle, Evan Kaludis, founder of Zeus, and Shinobi, the technical and opinion editor for Bitcoin Magazine. Uncle Rockstar, I have to start with you because you have a figure with your likeness in front of you. I see a Bolt card in front of him. Please tell me about what's happening here.
It's craziness of Bitcoin, man. I got announced as a speaker at Plan B Lugano. Shout out to them.
Shout out to Plan B.
You know those memes where you're like a little toy? So that's how they announced their speakers. It was amazing.
Love it.
And then Bitcoiners saw it, like Fractal Encrypt and Printer Go Burr. The power of AI, put in the image, got the model, started 3D printing.
Boom.
So now we have a little rock stars holding Vences Caceres Bolt card that we have here at Bitcoin Asia.
I think I got one of those too.
Yes,
Yeah.
yes.
All
And
right.
Evan, I gave it.
Yeah.
So if you're here, get it at the registration. Go to the conference store. You may have won 1 million sats. You're a millionaire.
A million
So,
sats,
so-
ladies and gentlemen.
Yeah.
We appreciate that, Uncle. Thank you for your work. Evan, I want to talk about your work. You are the founder of a legendary Lightning app called Zeus. Please tell us a little bit about what's happening with Zeus, some updates. I think we recently implemented eCash with Zeus. Is this a thing? Please tell us some more.
Yeah, Zeus is primarily a self-custodial Lightning wallet. You can connect a remote node or run a node on your phone. Recently, we implemented Cashew eCash. So this sort of allows people to get their feet wet with eCash, with Lightning, not have to open up a channel, start with small amounts, perhaps even get a Lightning address, put it in your Nostr bio and get zaps, and then as you get a larger balance, the app will prompt you to upgrade to self-custody so that you really are holding your Bitcoin.
Appreciate that. We're heading back to the Nakamoto stage, ladies and gentlemen. We'll be right back after this.
So much attention right now on Bitcoin treasuries. It's really captured the zeitgeist. But if you recall, a lot of this momentum actually began with the ETFs. And they've grown to be the most popular financial product in the history of Earth. Like, that's pretty big. So I'm here with some folks that can give us a bit of the rundown on how this most popular financial product in the history of Earth, the Bitcoin ETF, developed, where it came from, and that'll inform a lot of the sort of recipe to success that we're seeing today. Of course, I saw Larry Fink just say exactly what I'm saying here, the most popular product he's ever issued. So welcome both. Now, you know, normally I don't spend too much time on introductions, but I would like you guys to give a bit of your take on how you fit into the ETF world and the market before we go on to a bit of the history of where these things come from, and then we'll talk a little bit about the design choices and the implications for the market as we go forward. So, Bridget, I'd like to start with you. Tell us a little bit about your history in ETFs and your current exposure and interest in the ETF market.
Good afternoon, everyone. My name is Bridget Nichols. I'm the Chief Commercial Officer at Monochrome Asset Management. We are an Australian-based asset manager that has a spot Bitcoin ETF and a spot Ethereum ETF. We're also now operating in Malaysia, Singapore, and Hong Kong. So I'm by trade a traditional finance person. I've been in the Bitcoin space for about 5 years now. And I guess the most exciting thing about the Monochrome products is they are the world's first two-way in-kind Bitcoin and Ethereum ETFs that allow investors to do, all investors to do in-kind transactions. So I think we'll get on to the US developments in that space. But yes, really happy to be here and looking forward to the discussion.
I appreciate it so much, Bridget. Now, Matt, we were just talking about some interesting content, FedWatch, and all these things that we've been producing over the years, but you've been in the industry for a long time. What has this ETF side meant to you, and how are you involved in this industry?
Yep, Matt Dines. It's a pleasure to be here with you all in Hong Kong this afternoon. Thanks for hosting us. So my background, I am the Chief Investment Officer of a US-based and domiciled investment fund manager named Build Asset Management. So on top of that, I'm the portfolio manager and head trader for our ETFs. So from my background in the ETF industry, you know, we work very closely with the key counterparties, you know, New York and US banks to manage an ETF. But we run our own trust infrastructure, which we'll get into. Maybe a key reason why the US is really gained a footing in the Bitcoin exchange traded fund industry. And then just kind of the rubber working on where the rubber meets the road and dollar credit itself. So fixed income investments is really where I focus. And what we're trying to do over time is work Bitcoin adoption as the collateral layer to all of these US dollar IOUs that are just propagating throughout the world, bring those onto a Bitcoin standard. So that's really what we're working on.
God's work, some people say. God's work, some people say. So let's get into it. You know, I was at CoinDesk in the early days of Bitcoin, and I remember sitting, holding our breath in 2017 about the Winklevoss ETF application. Was it going to come through? We thought maybe back then. But of course, the one market that did go forward was Sweden, and they created that ETN note, right? The exchange traded note. So what was that note about? That's where this, global adoption of these ETFs really started. So Matt, I'll start with you. You have some experience in what happened over there. What was that product? What differentiates it from the ETFs that came later, and what were its limitations?
Yep. So in the U.S., we'll start there on the, call it the western side of the Atlantic. You mentioned the background. The Winklevoss brothers had worked on and actually drafted the filings at some point, just been asked to pull back is how this progressed in the U.S. And we also saw the launch of the grayscale over-the-counter trust product, which up until the launch of the U.S.-based ETFs was the best most successful exchange-traded product of all time. It dwarfed the total capital raise into the euro area. You mentioned the Sweden exchange-traded product. Key reason for that happening in my mind, euro area capital markets are on a civil law standard. It's not English common law. And if you look at the largest capital markets in the world, where they tend to be located, and in particular where dollar credit tends to be located, it's in your global money centers, which have some attachment to the millennia-old English common law standard. Why is that? Property rights, rule of law, contracts, enforcement jurisdiction, all of that. So the fact that the euro area went first, like they were kind of innovators getting onto the exchange, but not having access to those depth of capital pools is really why, in my opinion, they didn't accelerate the way we saw that just massive thrust that you talked about at the beginning with the Bitcoin ETFs. Second to that, civil law has, most civil law countries, not legal advice here, not a lawyer. I talk to them often and pay a lot of invoices. So just want to clarify that. But most civil law countries don't recognize trusts. And so if you look on the back end of an ETF, what are they? They're grantor trusts. In the US, you had this kind of rich landscape porting onto the common law tradition of the 1933 Act, which allows for a commodity to be put into a pooled investment fund and then traded on exchange. So all of that background is really why we saw the US ETFs, once it was ready, just take off and accelerate and attract massive pools of capital, and euro area didn't. The other thing for the euro area exchange traded products, they tended to be structured as debt or credit instruments. So it was technically a fully reserved Bitcoin denominated IOU, but if you think about the depth of markets for the fixed income IOU assets, everybody's heard about global US dollar pools of capital, right? It's massive, it's liquid, etc. Euro, same thing, much smaller, and then you just keep going down the stack, Japanese yen, Chinese yuan, all of these currencies that have a liquid market. There's no natural market for a Bitcoin denominated IOU. Nobody had those, it's nascent. So the only wave you're able to attract in a kind of a second tier legal framework, not operating in the largest money centers, which typically tend to be on the English common law standard or descendants of that, and respecting trust and property rights. You don't have any Bitcoin denominated IOUs to tap into. So you're really just starting with the earliest of adoption on crossing the chasm, or on like that technology adoption framework, and you never got over the hump. So once we saw 2021, in my mind, was when we kind of crossed the Rubicon, and we saw Jersey, in the British Isles, launch an exchange-traded product, recognized as trust law at the top of the last bull market cycle. That's when we saw we had to go, and just slowly the ducks and started to get into a row to get towards the BlackRock filing, and we know what happened after that.
I really appreciate that background. I'm strangely enough trained in Quebec in law. I went to law school there where we had to learn both civil and common law systems. And I remember being in Hong Kong doing early Bitcoin stuff in 2016 with my law school colleague who'd become the trade commissioner to Hong Kong, talking, because there was a time then when the Europeans were bragging that blockchain technology could fit into civil law so perfectly. And I said, wait a minute here, common law has this advantage of separating the judicial power from the political power, which is what the Grayscale Trust ended up exploiting to be able to create the ETF in America. Of course, they had to sue the SEC to get that. And if you're working in that European system, of course, the judiciary is just subordinate to and appointed by the political authorities. So I really appreciate that distinction, and it brings me back to 9 years ago here in Hong Kong with my former classmate, the trade commissioner to Hong Kong, discussing exactly these things, and amazingly it became relevant.
You might want to polish off that JD if you have one. I think it'll come very handy in you know, the Bitcoin adoption as you know, that global process starts to take place. I view, or kind of view, like the Bitcoin protocol as a distributed consensus mechanism. There's a kind of a layer below that in terms of property rights, and that's what the common law, you know, jurisdiction gives you. Like, you can go in any sovereign territory in the world, make your case in front of a court, defend your property rights. It's kind of another legal protocol, and Bitcoin fits very nicely into that framework.
Well, that's a tremendous endorsement of the decentralized nature of Bitcoin and the potential for freedom right there. Now, Bridget, you know, when the litigation did happen from Grayscale and they managed to whoop the SEC and open up the floodgates, how did that affect Australia? Were you guys already ahead of that? Were you waiting, as many people in these common law jurisdictions were waiting for the SEC case to be realized? Did that affect you guys? Were you waiting on that?
Yeah, great question. We weren't waiting, so there was a couple of Bitcoin ETFs that actually launched prior to that, I think 2 years prior to that, and they were launched in what we call a feeder structure, which is effectively an Australian ETF holding another fund. And so it was an easier, I guess, regulatory lift in Australia to do it that way. Certainly the US launches created a lot of global interest, and definitely, you know, Trump coming in and all of that drove a lot more interest in Bitcoin ETFs in Australia. I think the interesting thing about the US launches for Monochrome was they actually de-scoped, as everyone knows, they de-scoped the in-kind functionality from those launches. So all of those launches launched together in a cash format. But actually, the in-kind functionality was launched in Hong Kong and also in Australia not long after that, so I think 2 or 3 months after that. And so it remains a differentiator for the Hong Kong and Australian products that do it. And Monochrome, as I mentioned, is the only Bitcoin ETF in the world that facilitates in-kind mechanism for end investors, not just authorised participants. So it's the Swiss Army knife of Bitcoin ETFs.
So you guys used that same dexterity of common law, let's say, and used your system to be able to have the flexibility, and you're your own jurisdiction. Who cared what the SEC was doing? You were ready to move and ready to pounce.
Absolutely, and I think all the trust law stuff is applicable. So a couple of the Bitcoin ETFs in Australia are structured as bear trusts, which means the investor has an absolute entitlement to the Bitcoin in the fund. And that facilitates a number of really cool sort of innovations in the product that I think we'll get to as we go through the panel.
Terrific. Now, when the 24 real tsunami began for ETF interest in the market, really leading to this point now where it's the most, as I said in the beginning, the most popular financial product in the history of human beings on the planet we happen to live on, which is always so fun to say. What really was it that got all of that momentum going? What unleashed that tsunami, according to you, Matt? Because there could be a million theories, but because it is such a remarkable thing, I can imagine history books looking at this for many years as a kind of turning point in capital markets. What was your take on that tsunami? Did you predict it coming? Was this in your worldview before that litigation was settled with the SEC? Is this something you said, oh, once this is done, it's going to head that way?
Once the floodgates were in and you tapped the pool of broker-dealer capital domiciled in the U.S., Yeah, I mean, you could probably find statements from me bullish on these being successful. How successful? Well, it's riding the Bitcoin wave, the proxy. So you just assume, all right, it's going to be a big bull market, this product. Once that floodgate is unleashed, good things are going to happen. So where does the demand come from? Like, you know, a lot of it could just be, you know, retail accounts who have, you know, just positions that are kind of trapped within the broker-dealer landscape, and they want to find their home into Bitcoin, but maybe they didn't want to withdraw, like a retirement account or like a tax savings account, something like that, or a tax advantage account, where they couldn't withdraw, take a penalty. So now that capital could find its way into Bitcoin. I don't think it's possible, though, for the retail investor base to support 2 trillion, you know, ballpark market cap. It's really institutional adoption. And just going around speaking to investment committees, not just in America, but conferences around the globe, Bitcoin has come a long way. I've been told by large consultants, you know, chief investment officers of firms who are much bigger than mine, we don't think Bitcoin will be around in 5, 10 years. And I say, okay, I'll come talk to you in 5 or 10 years and we'll see where we are. But there's definitely, I think, the thrust coming from this adoption of the Bitcoin ETFs, the US Bitcoin ETFs, is institutional. And the headline, I think, that should be the highest signal, because what's the title of this conference, right? Signal over noise. This didn't get enough attention, but Mubadala, the UAE Sovereign Wealth Fund, one of the largest in the world, if not the largest, when they took their Bitcoin position, and maybe they do hold, you know, cold storage UTXOs to some degree as well, but they made it, you know, publicly announced that they were going to hold like a $500 million capital investment in the BlackRock IBIT ETF. So that alone is a big chunk, like a single digits % of share with one massive institutional account. But if Mubadala is doing it, you know, it's trend following. If your peer at the resort or the golf course or the restaurant speaks about an investment, hey, we're doing Bitcoin, we're in, it becomes more permissible for the next one to do the same thing. So there definitely is an element of trend following, and I think that's what's happening. So I would say, I would chalk it up, the success has to be driven by institutional adoption.
And there you go, that's another common law jurisdiction, leveraging sovereign pools of capital, and that's the result. Now, you know, as Bitcoiners, we have this kind of meme that, you know, Bitcoin changes you, right? You know, and once Bitcoin comes into your life and your worldview, it sort of alters how you see things. It really is sort of foundational for many people's worldview. And I find a strange analogy with it in that, just like it changes individuals, institutions now that are embracing this, it's actually changing the worldview in a lot of ways. You hear Larry Fink just straight up say this is hedging the incompetence of sovereign governments in America and things like that. So how have you seen this from your perspective, Bitcoin actually changing institutions in the same way that, you know, as individuals, as Bitcoiners, we ourselves find ourselves different after? Is that what you're observing?
Yeah, definitely. Probably the most exciting thing that I think is emerging, obviously the digital gold narrative has been quite helpful, I think, for people just trying to understand how this fits in. And obviously the geopolitical climate has sort of fed that narrative. But for me, the most exciting thing, and Larry Fink and Franklin Templeton and these very, very big players have actually shifted from 2024, when the Bitcoin ETFs launched in the US, they were sort of recommending between a 2 and 5% allocation for a standard portfolio. And that conversation has now shifted. So the alternative allocation, like Larry Fink is now saying between 10 and 20%. Like that is huge. And it's obviously really exciting for people that have Bitcoin products. And it's nice just not to be that tiny 2-5% wedge. Like, I think, you know, Bitcoin deserves a bigger wedge. And so I think one of the most exciting things I'm seeing is that narrative developing, and those people that we spoke about sort of going on record that they were wrong about Bitcoin and the impact that it can have on modern portfolios. Yeah.
And that is the, again, when you talk about changing yourself, Bitcoin has that humbling aspect, are you humble enough to stack? And, it's one of the hardest things to do is admit you are wrong, right? Everyone has trouble doing that. So to see these huge institutions, like you were describing, when you have these conversations who are doubting Bitcoin, you talk to you in 10 years, it's sometimes not even worth arguing. It's like, okay, like you can fall flat on your face, that's fine, Now, I want to turn it back to the in-kind redemption part, because we're seeing these conversations in America. I guess it was the Fidelity folks that are applying for the in-kind redemption. What does it mean globally now that America has one? Will that give strategic competition, or is there just plenty to go around? Is it a zero sum for in-kind redemption? What's going on with that?
I think there's room for everyone. There's definitely enough business to go around. I think for end investors, it's super exciting because ultimately it improves the operational efficiency of the ETF, which, the knock-on effect is generally that spreads will narrow on market and investors will have a better experience. So I think that's super exciting. Hopefully, I can't wait till it happens. I think the in-kind mechanism is super important. And so, it's very interesting that it was de-scoped from the SEC's first approval. And I think it was just so much pent-up demand and so much delay had happened that they needed to take some of the complexity out of that decision. So I'm really thrilled to see that it hasn't taken them that long to reconsider it. And yeah, very excited.
I can fill in some color commentary on this one. So we've already seen some transactions. I saw Bitwise's CIO, Teddy Fusaro, post the tickets from the first in-kind transaction. Now, does an authorized participant who is actually responsible for executing those creation redemption to adjust share count up or down based on what market liquidity demands? It's still very rare. Most of it still wants to happen in cash. As Bridget mentioned, it is more tax efficient to do this. Just assuming if you're a broker dealer, you inventory Bitcoin, you don't want to have to sell, realize a capital gain, and just run up a big tax bill over time. That's going to ultimately cause volatility in your income statement. That would slow down adoption. So it will speed up Bitcoin adoption within the broker-dealer industry. It still depends. I think for the long run where this is going, you need to see adoption of a Bitcoin standard by the large broker-dealers to realize what this does open up. Same thing for the energy industry. And I'll explain how those things. I think this sets the stage for those two to converge and verticalize over the span of 5, 10, 15 years, what this allows to happen. So when you think about the efficiency just from creation redemptions on the Bitcoin standard or by a broker-dealer on the Bitcoin standard, the next thing you want to do if you're willing to hold inventory on your balance sheet of Bitcoin and realize Bitcoin's not a hedge, it's the wedge. It is the tool that allows not just the financial institution or the energy producer, also the sovereign to make it through this kind of unstable era that we're progressing to for this system to find the next kind of solid state point where we can take our breath and relax after a fourth turning event, as this author in the US, Neil Howe, has kind of popularized this broad phenomenon taking place. But once you realize, and when I say you, I'm talking one broker dealer is all it takes of size, like a Morgan Stanley, JP Morgan, Goldman Sachs, who are doing these authorized participant transactions. It may not be one of those either. It could be a lower tier, much smaller, market cap broker dealer in the U.S. Once they flip on and realize, hey, we don't need to hold Bitcoin as a hedge. It actually is the unit of account. We need to start measuring our financials in this unit. Then they turn on and they say, how do we get that inventory at lowest marginal cost? Then you have to go to the energy producer. Some of them are, you can talk about these same light bulbs turning on across the energy industry in the US and the shale patch and Texas, Oklahoma, North Dakota, everywhere. It's also going on globally. The adoption in the Middle East, Southeast Asian energy producers, there's probably some
Alberta oil
there.
fields.
Exactly. So I think this, this consolidation that you saw in the energy industry, the verticalization, how John D. Rockefeller organized Standard Oil from the bottoms up. You saw the same thing happening. Shell Oil, Royal Dutch Shell, all of that. The book The Prize in the US by Daniel Yergin kind of documents this process very extensively up into the 1990s. But I think this, what's happening in Bitcoin is this, like, the next chapter in that story of verticalization and emerging of the financial industry, broker-dealer capital, and the energy industry. And Bitcoin is the wedge, not the hedge, that makes that happen.
I'm going to copy the wedge, not the hedge, or the hedge, not the wedge, not the hedge, because it's too good. People think in rhymes, right? It's very persuasive, and it's music to my ears too when you talk about Bitcoin standard stuff. Because at Roxham, that's kind of what we're betting on, is Bitcoin-denominated capital markets for that reason. And we think, of course, that whole unit of account thinking in Bitcoin, measuring the world in Bitcoin, as just the natural extension of what we're doing, because it's, you know, that fourth turning thing you mentioned, it's emergent bimetallism right now, and it looks like the dollar will be great for coffee and Coca-Cola, and, you know, Bitcoin's going to be great for wealth creation and wealth preservation. And that's really the focus that you guys have out there, is using this Bitcoin tool to help spread wealth creation and wealth preservation in these really uncertain times, right? It's hard for people to keep hold of what they've got already. We've sort of increased the, you know, we've got 80 years now of financial engineers being the, you know, attracting the best and brightest. The people who are the best and brightest want to go into the job that's the highest paid. But one of the things, and just let me know if this is something you've observed, because I'm very curious about it, you know, Bitcoin is a very low IQ product. It's very simple. You can save your money. You don't have to compete. Is that an appealing factor when you're dealing client side, customer side, even with these larger sophisticated investors who are like, okay, I'm so far out on the risk curve right now, you know, how do I make that simpler?
Yeah, I think the simple narrative works well. So I think it is, I agree with you, it is simple, it's very simple, but I think people that haven't studied it find it confusing. So being able to draw that digital gold analogy or something that people can kind of latch onto is helpful. But yeah.
It saves time, which is what we're out of exactly. The other finite resource here in the world besides Bitcoin, time. So thank you, everyone. Please give a warm round of applause for my great panelists. And we're up with another panel right after. Thanks a ton.
Back to the Bitcoin Magazine News Desk, everybody watching on Rumble, X, and YouTube. We're here at the Bitcoin Magazine News Desk, presented by MetaPlanet, and I'm joined by two special guests, Owen Kemiz of Foundation Devices, as well as Evan Kaludis from Zeus, founder of Zeus. Gentlemen, the two of you were on a panel, I think it was about an hour ago, talking about scaling Bitcoin. So different things that need to change on the base layer of Bitcoin for us to more easily scale it. Could you maybe distill for the audience what you talked about during that panel? Owen, I'll start with you.
We were talking more specifically about governance upgrades, so something that allows you to constrain not just who can spend your Bitcoin and when the Bitcoin can be spent, but how it can be spent. And that allows us to remove some trust, allows us to remove some counterparty risks and things, and more elaborate kind of constructions with what you can do with Bitcoin.
Okay. Is this a necessity, Evan? Do we need to implement something like CTV, CFTS? Do we need to implement these new upgrades, we'll call them upgrades to Bitcoin, for Bitcoin to properly scale, let's say?
Absolutely, and I think my pitch is, in today's environment where we have all these ETFs, we're talking about government treasuries, and these things all threaten the decentralization of Bitcoin, we need to make self-custody as great an experience as it can be. And this soft fork does that.
Appreciate that. Let's talk a little bit about that. So threatening the decentralization of Bitcoin. So self-custody at the core of Bitcoin, right?
Yep.
But eventually, we only have 4 megabyte blocks. It's going to become more and more expensive to use Bitcoin, right? And this is outside of people using it for ordinals and all that. As more people use the chain, it'll get more expensive. So do these upgrades actually make it less expensive? Is that one of the things? Do they make it less expensive? Do they make it easier for people to use? What is the actual benefit here?
It's both.
Okay.
It makes getting into these new L2s, these new constructions, cheaper, more affordable, but it also effectively shares the custody of these UTXOs, these unspent transaction outputs.
Appreciate that.
Yep.
Owen, a final thought on this?
Yeah, so today if you're going to share a UTXO, then what you're doing is you're basically using a custodian. You're just giving your Bitcoin to someone else, and they promise they'll totally give it back anytime you ask. When we add covenants into things, we can constrain those custodians so that they cannot spend it by any other way than what we previously agreed.
Okay.
So that makes it safer to share custody of things.
Okay, appreciate that. A little technological overview from some specialists in the space. We're heading back over to the Nakamoto stage here at Bitcoin Asia 2025. Keep it locked. We'll be right back after this.
Founder of Taproot Wizards, together with Udi Wertheimer, and I guess one of the main antagonists in Bitcoin culture. It's spamming the chain with JPEGs and championing potentially harmful Bitcoin upgrade proposals like concatenating strings and just causing problems for people, I guess.
Causing problems left and right. Okay, so the topic of the panel is what futures does Bitcoin need for global adoption? I want to start by kind of challenging that assumption, and I'll start with you, Eric. Is Bitcoin right now sufficient to achieve global adoption? Are any new futures even needed? What do you think?
Well, I have a very long answer to this question that I don't know if I want to get into the whole thing, but I think that there are some interesting developments that is happening. Unironically, I actually do think that there's some actual legitimacy to the current efforts at building trust-minimized bridges to other execution environments on Bitcoin. What we've had going on for the last couple of years now is that there's actually been some reintroduction of actual brain power back into Bitcoin. People like Liam, for example, there's actually people thought that the rootstock sidechain, for example, that they've basically been counted out. No one's really paying any attention to what they're doing, but they have some pretty good cryptographers there. They're working under a research group called Fargate Labs. We also have the Starknet team. We have the Citrea guys, and sorry if I'm missing any major ones, but I guess I get Robin Linus and the Cirrus Sync team. All of these teams have, for a couple of years now, really been trying to come up with these ugly quirks and weird hacks in the Bitcoin protocol. And in only the last couple of months am I starting to see, it's kind of I don't know how to describe it, it's, if you're trying to unscrew something and you need some grease, you need some gravel in a chain to get grip around the screw for the things to start to come off. I think, Liam, you can sort of resonate with this. The screws are starting to come off, and some of the ugliest properties of BitVM bridges, the size of the scripts and the capital inefficiencies, I'm starting to finally see that there might be a path that we can build trust-minimized bridges that are maybe good. They're not completely useless. There may actually there's starting to be some light at the end of the tunnel, and so it is really an interesting question. Do we need anything else? I think eventually.
Hang on, I want to take one step back, and maybe this is then a question for Liam. You're talking about trust minimized bridges. Why are they even necessary? What are we talking about? What is the problem that's even trying to be solved here? Or in other words, why is Bitcoin not already globally adopted? Is there a technical problem that needs to be solved?
I don't think it scales, and it's not private. There's a lot of things that are lacking. So like Bitcoin isn't fungible because it's not private and everybody can track everything you're doing. So like if we want those properties that Bitcoin was supposed to have, I don't think in its current form it's possible without something like snark verification.
Sorry, so you're saying what is missing in its what Bitcoin is missing is scalability and fungibility. These are two properties you just mentioned. These properties can be offered by are we talking about a sidechain, a different protocol, and that can be tagged to Bitcoin. That's essentially the argument, right? Am I breaking it down okay?
I think I want them in like a trust minimized or trustless way. So with a sort of like liquid style sidechain, you're trusting some federation to custody the funds. So we know how to do that without this trust assumption. It's just not quite possible with Bitcoin right now. Okay, it is or it isn't. It's in the current the current Bitcoin protocol. You're saying we cannot do it trustlessly yet. So a new future is necessary for that to make that happen. I don't know. It's hard to say. I think the research has been progressing well, and we can get pretty close. But like, if we could just do snark verification on Bitcoin, everything would be a lot simpler and better.
Okay, Shinobi, what do you think?
Well, I think like disentangling the asset from the network is the first thing you need to do. Like as far as Bitcoin, the asset scaling to the world, people just having a claim to that, that's doable right now. But scaling Bitcoin, the network, and people's ability to actually transact peer-to-peer on it, we're nowhere close. And the reality is it's just not possible for everybody to actually like get their transaction confirmed on chain. There isn't enough throughput, and kind of the second order effect of that is it's not even possible for everybody to own their own Bitcoin UTXO on chain. And so I think like the real core of that problem, without kind of going the direction that Bitcoin Cash wants, which essentially completely sacrifices the decentralization for that throughput, is we need to find ways for people to share control of a UTXO. And that means Bitcoin as a system needs to be able to verify things like how is that distribution of funds in a UTXO spread around off-chain? How can that be proven on the base layer in a verifiable way? And what kinds of protocols can we build for users to be able to coordinate and change that distribution and always have something that they can take to the base layer if necessary that can properly verify that how funds are distributed with that UTXO being broken up are done correctly?
Okay, real quick, what you're saying is Bitcoin can currently scale to global adoption, but it would then lose its trustless abilities, right? Like its trustless futures would get lost, which is possible, but it's maybe not what you or anyone else on this stage would ideally want, right? Okay.
Yeah.
So to scale Bitcoin in a way that you do keep the trustless properties, what do we need, in your view, Shinobi? Let's go.
Well, you ultimately need a way to share authorization control for that UTXO and to be able to prove that as that changes off-chain, like this is the most recent balanced distribution amongst everybody sharing that UTXO. And like Liam and what they're doing at Alpen Labs with the zero knowledge research, like that is, in my opinion, in the long term, probably the only clean, viable path to do that. Like to actually be able to construct very small, succinct proofs that can prove in a verifiable way very complicated conditions or properties about how these UTXOs are being shared, how that distribution is being updated off-chain. And it's really the only way that we have to kind of go forward in that direction without very clunky, inefficient, like messy ways of constructing those proofs.
Okay, so I think what I'm understanding, it's still a bit of an open question to what extent these things can be achieved without a Bitcoin protocol upgrade. Is that correct?
Yes.
Consensus on the panel that that is still an open question. Okay, so what are some let's slightly pivot then. What are some current Bitcoin protocol upgrades that are on the table that you guys would like to see? Let's start with Eric, if any.
I mean, should be obvious. The upgrade that that I've been championing for the last couple of years is just string concatenation in Bitcoin script. I mean, the Taproot upgrade that happened 4 years ago was specifically designed and came with a bunch of new opcodes called op successes, which are designed to purpose. They were specifically designed so that you could soft fork in stack modifying opcodes as a soft fork into Bitcoin. So some people may not know this, but for example, if you take Dogecoin, which doesn't have SegWit or Taproot, you cannot do opcat as a soft fork on Dogecoin. It would be a hard fork. But Bitcoin is specifically like designed to allow these like string concatenation to be soft forked in. And if you take the authors of the Taproot BIP and you poll them, I guarantee you that two out of three, Peter Willey, Andrew Polstra, and Gregory Maxwell, 2 out of 3 of those people will either say that they are surprised or disappointed that this has not happened yet.
Can you, sorry, for anyone in the audience that's not very technical, can you explain what you're talking about? What is opcat?
Yeah,
what does it do?
So Bitcoin script, you can think of it like a very basic like calculator. There are different buttons. There's like a button for addition, a button for, actually there's not a button for multiplication, unfortunately. There's a button for SHA hashing. There's no button for concatenating strings. And if you ever used like a Linux computer and you've looked at the manual, concatenation is like one of the most basic primitives of computer programming. Turns out that if you can concatenate things and you can hash things, you can build Merkle trees inside Bitcoin script. If you can Merkleize things in Bitcoin script, you can build Stark verifiers. And what we were talking about earlier, Stark verification, ZK verification, is the even Satoshi, Hal Finney, and Gregory Maxwell back in the days, in 2010, 2011, all of them were looking for ways like how can we increase the privacy of Bitcoin and how can we increase the scalability of Bitcoin. And they were kind of circling around that ZK verification is the way in which you can prove computation efficiently and privately. So that has been the golden dream for like Satoshi, Hal Finney, and all these people that were into Bitcoin development in the early days. And so getting a Stark verifier into Bitcoin would be what, if they were around today, that is what they would be trying to do. And the simplest way to get a Stark, like a native Stark verifier into Bitcoin would be to just allow for string concatenation in the script language. There's no like super easy to like actually explain what I'm talking about here.
Well, let me ask you the question in a different way and see if you can answer it this way. So there's right now someone walking around in Hong Kong that's not using Bitcoin. Let's say we get this upgrade in Bitcoin. Why is this person now going to use Bitcoin?
Well, so if you had Stark verification natively on Bitcoin, it would be a lot easier to build trustless bridges to environments where you can be, you don't need channels, you don't need to like download a Bitcoin node and set up an inbound, like have a channel set up to you so that you can receive coins. You could just receive, like how crypto is supposed to work is that I generate an address. Here's my address. And you're supposed to be able to send me any amount of coins that you have, and it should be private. You should not have to worry about what you're revealing about yourself when you're spending those coins, when you're sending it to someone else. Like, no one should be able to trace the entirety of your financial history when you're using those coins. And that is not like currently possible on Bitcoin today. So that's what a Stark verification or Snark verification would allow you to do. Like Liam's trying to do this. He's trying to do Snark verification optimistically, and maybe you can give some words on like how that's going and what kind of opcodes would really help you with your work in order to make that happen.
Sure. Yeah, I think it's going pretty well. People might have heard of like the BitVM line of work. I think of like what I'm working on as a sort of next evolution of that. So Because we don't have opcat and we don't have the ability to verify a snark directly on chain, we have these like kind of what are called optimistic protocols. So instead of verifying a proof, you like claim that a proof is valid, and then I can prove that it's not like invalid. So it's like a two-step thing. And so if you're cheating, I can prove it, and that can be verified on Bitcoin. So one way this was done previously was with BitVM. It was very expensive. This new technique of Glock using garbled circuits moves all of the, or essentially all the complexity off-chain. So I think these protocols are becoming quite practical. There are a number of like issues with them though. So like they require pre-signing. If we had some kind of covenant mechanism, we could do these protocols without pre-signing. Asterisk, you know, there's like a lot of details that this is, you know, glossing over. But
do you have a preferred one?
Whichever one is most likely to like work.
CTV would get the job done for this particular situation.
Okay, again, I want to break some of this down a little bit for the non-technical people in the audience. Maybe it's a good one for you, Shinobi. So, Liam, you mentioned BitVM, which is a way to do smart contracts, you know, on a second layer Bitcoin protocol, essentially, right? And with covenant, so covenants would help that as well. Would
they remove one of the clunky pieces that are necessary to make this work?
Do you want to explain what covenants are, Shinobi?
Well, so the basic way that Bitcoin works is when you create an address, what you're actually doing is defining a little computer program that defines the proof that you have to provide in order to spend those coins. And all of these programs can do is restrict the kind of ability to spend. But once you've provided that proof and met that condition, you can spend the coin however you want. Wherever you want, you can burn the coins forever if you want. The idea of a covenant is to have little primitives you can include in that program that restrict how it can be spent. So it's not just proving that you're allowed to spend it, but now these extra restrictions could say limit it so that they can only be sent to a certain number of predefined places, or like including other data or commitments with it. And the idea is that when you are trying to build these layer 2 protocols that interact with a lot of off-chain data, that's essentially what you want to do. You want to take the coins locked up in that layer 2 and restrict how they can be spent. And that's done very clunkily right now with pre-signed transactions, and that's kind of the only mechanism we have to do that. With covenants, you can natively enforce that in Bitcoin scripting system itself. And like Liam said, you no longer have to go through the process of signing what could potentially be a massive set of pre-signed transactions. You just define the logic of how you want to restrict coins and include that in this little locking program. And it simplifies a lot of the setup process, the overhead in that. It's just a lot cleaner and simpler.
Yeah, so last time I checked, there were like, I don't know, half a dozen, maybe a dozen variations of covenant proposals. And the problem is that everyone sort of has a slightly different preference, and therefore there's no consensus on any single one of them. So even though maybe the technical community at large wants covenants, because everyone has a slightly different preference, there's no actual progress towards any of them. Is that still the deadlock we find ourselves in today?
We're very gradually, I think, making progress with check template verify, CTV, and check sig from stack. Like essentially the most basic, simple covenants out there. I wouldn't say that they're going to get turned on or activated tomorrow, or there's like a mob screaming to turn them on now, but people are slowly coming to consensus that this is the bare minimum set of new functionality that everybody agrees would be useful, and just kind of moves us a little bit forward.
Well, is there even consensus on this panel for that?
No, I mean, you're wrong, Shinobi. You're losing the battle. So, I mean, the only moment that you guys had any opportunity to activate CTV and checksig from stack was when we were pushing OpCat, and you could sort of swoop in and say, don't listen to Eric and Udi, they're going to enable MEV on Bitcoin. We're the good guys, and we're going to save you from like the MEV effects of OpCat. So let's do CTV instead, and everything's going to be fine. And then we said, okay, we'll take our foot off the gas pedal, and we'll let you guys, and this was back in April. I told you guys, we're going to let you guys go and activate CTV. And since then, like, nothing's happening. It's been 4 months now, and you guys are like, well, if you look at the discussions that are going on in like Bitcoin culture right now, like people are like running Nostr nodes, going after Gloria Zhao and Peter Woolley, and you're having nonsensical, useless art. Like the conversation is completely deteriorating. You guys are not doing a good job. You're not getting it closer at all. You're actually losing the control. Like, and even further than that, like all of this whole entire discussion is going to be completely irrelevant 1 year from now if the big elephant in the room here is that we're in the middle of a corporate takeover over Bitcoin. Like, none of us are going to matter at all a year from now. Bitcoin treasury companies keep accumulating Bitcoin. People are not interacting with the chain. There's no fees. There's no activity on the chain. New users don't even interact with the chain. They're not going to care about, like, why should we change?
Eric, I think you need to take a white pill and calm down.
Well, but how do we move forward, though? That's the question. That has been a question for 5 years now.
Bitcoin is a decentralized, chaotic mess. It has always been like this. Like, just because Bitcoin is bigger and that mess seems bigger doesn't mean that the situation is fundamentally changed. Like, yes, these treasury companies are getting involved, but what is their interest to resist features that the rest of the network finds useful and valuable if it doesn't affect them at all? All they're doing is buying the asset and holding it for the price appreciation. It doesn't matter what features are or are not active on the network from their point of view. Like, it's irrelevant to them.
But Shinobi, you're like, you've turned into like one of the most like hated figures of what is left of the fragment of the Bitcoin maximalism cult. They all hate you now for no reason, basically. They're having nonsensical arguments about spam when the fees are at historical lows. They're lower than what the filters even allow them to be in the past. I don't know how you can like sit comfortably and say, oh, you know, things are going well, it's going fine. Like, whatever is left of the Bitcoin maximum, the core interested group in Bitcoin, they've gone completely off the rails. And
Eric, they will die. They will fade off into cultural irrelevance, and Bitcoin will be far better off for it. I'm having a great time. Like, people want to be stupid on the internet and virtue signal because they have a few $100s of Bitcoin and they're here to defend it. Have fun. Go do that. It's ultimately irrelevant in the grand scheme.
But we are not going to have a path to influence protocol changes anymore when the corporate takeover of Bitcoin that is currently underway has reached its fruition.
More use cases, more ability for the network to support more users creates more aggregate demand for the asset, which is beneficial for these treasury companies.
Sure, but the question is how is the next protocol upgrade ever going to happen if it's just one big mess where no one agrees on anything anymore, which
that's
appears
like
to be the case.
asking, you know, what's going to happen on the road when you drive across town? You don't know. Like, this is, there is no precedent for Bitcoin in terms of how to upgrade it. Every major upgrade that has been done in the last 10 years, the process went completely differently. It was activated in a completely different way. Like, the way that the user base, the network was convinced to activate it occurred differently. Like, there is no handbook to any of this. There's just dive into the mess and let's see what we can do.
There's never been greater distrust between the Bitcoin core developers and the grassroots pleb community than it is right now. Like, that problem is worse than it's ever been. There's greater like discohesion within the Bitcoin community than there's ever been, and it's getting worse. And in order for soft forks to happen, there needs to be cohesion between the developers. Like, they have to have some trust. But people are like hating core developers now because they have like some gender political issue, that they have the wrong hair color, or they don't eat red meat.
There is a 0% chance that any business in this space that manages more than $100 million of user funds will ever run Bitcoin knots. There is 0% chance that happens.
Okay, guys, we have about 5 minutes left. So the title of the panel is, what features does Bitcoin need for global adoption? So far, we've been talking about what potential new features could help with that. But in these last couple of minutes, let's turn it around for a minute. What features does Bitcoin have that it could potentially lose? Is that a risk? Like, for example, fungibility has been mentioned. Could Bitcoin lose the fungibility that it has right now to the point where global adoption is thwarted, basically? Liam, do you want to go first? Do you see that as a risk? Or it can be fungibility or anything else, really.
I guess it depends what you mean by adoption, right? There's like a future in which Bitcoin is, people only interact with it through intermediaries. And I think at that point it sort of becomes something else.
Yeah, if Bitcoin is only used through, say, Bitcoin banks, then it becomes a different type of project.
Yeah.
But it's still a viable project, maybe even in that sense. Or what do you think?
I don't know. I mean, it's not meaningfully decentralized, so it's just like it's like a stock or something.
It's at least not interesting. Shinobi, what do you think?
I mean, I pretty much agree with Liam. Like, we could absolutely see a future where people only interact with Bitcoin through trusted third parties. And, you know, I'm not personally interested in that project. I don't think that meaningfully changes the world in any way, but that's a project that could still be worth money. It could still become widely adopted in some fashion. It's just not going to be the tool that I hoped it would be in terms of creating a neutral platform that everyone interacts with economically. Like, that is what I'm here for, something that forces everybody to have to play by the same rules.
Yeah, well, that's basically the custody problem, right? But what about, for example, mining centralization? Is that, you know, could that existentially threaten Bitcoin's existence, in your view?
I'm not so sure it could existentially threaten its existence or its ability to become a valuable thing, but it would completely destroy its neutrality or its ability to be that system that you can use and no one can stop you from using it. Without a sufficient degree of mining decentralization, like, it can become a gated permission system where the only way that you can actually use it is if those miners or whatever group is influencing their decisions allows you to. And that would be very unfortunate.
Eric, existential threats to Bitcoin?
I'll answer a slightly different question. I'll try to answer the question of the panel, like what features Bitcoin needs to reach global adoption. So,
yeah.
Does gold have global adoption? If you think yes, then yeah, Bitcoin can reach global adoption with the current features that it has. It can reach global adoption in the form of ETFs, in the form of corporate wrappers. Will it reach the libertarian goal of being universal hard money that is gives people liberties against state actors? Not in its current form, no. Not with its current features, but yes, it can reach global adoption. It is reaching global adoption, and that is actually the problem, that we're reaching global adoption with a product that doesn't really change society that much. And if we want Bitcoin to be something that doesn't only get global adoption, but actually changes society, then we have to stop fighting with each other and work together.
Yeah, good luck with that. Okay, I mean, according to my clock, we're almost out of time, but I'm not getting some sort of sign, so should we just keep going? What other potential protocol upgrades are in the pipeline? Like something like confidential transactions, is that still, you know, to get more privacy on the main chain, is that still something that's being seriously considered, for example?
I don't think that's ever going to happen.
I think it's better to do it through a snark and a roll-up or something, like shielded CSV or ZK coins. Just makes more sense.
What else? We got Drive Chain. Is anyone still bullish on Drive Chain on this panel?
Paul is, wherever he is right now.
There's what's Rusty's proposal? That's the great script restoration.
Yes.
So what's the process of that? Progress of that? Is that?
I think Rusty's been kind of slowly chipping at that, but he also works full time for Blockstream's Lightning implementation, so it's not something he's working on full time. And for those unfamiliar with that, the idea is essentially to add a couple of simple covenants to Bitcoin, as well as reactivate most of the old opcodes that Satoshi deactivated in 2010 with a, probably going to piss some people off with this, but essentially an equivalent of gas in Ethereum, so a way to rate limit the resources that those opcodes use on your node when they're being verified, to kind of ensure that nodes can't be denial of service attacked or crashed off of the network. I think the long term, that would be a very sound goal to work towards. The problem is just convincing enough developers to actually take an interest and get involved in moving that forward, because it just, frankly, Rusty does not have the time or the bandwidth to do that alone.
Yeah, there are also subsets of opcodes from the Great Script Restoration that are maybe interesting, like integer multiplication, make things a lot better, elliptic curve operations. I don't know, various people have proposed different subsets of these at different times. There's always this tension between like doing something with the minimal set of opcodes in like a sort of stupid, ugly way, and doing it like well with more features. So.
And Eric, Opcat would be part of that as well, right? Of the Great Script Restoration.
Yes, so I basically think of Great Script Restoration as a like nice rebranding of like Opcat, like packages in a way that people more easily, drink without thinking that it's poison, because it's like been packaged very well by Rusty. It works for Blockstream. We used to. Where does it work now?
Well, I think the logic behind that is we know most of the things people would want to do with Opcat if we activated that on its own right now. And a lot of the other opcodes that would be reactivated in the Great Script Restoration just provide like simpler, more efficient and concise ways of doing those things, so that rather than the clunky, block space inefficient Opcat versions, people could just directly use those other opcodes in combination with Opcat to just keep things more cost-effective, easier to ensure that they're going to behave and operate correctly, like things along those lines.
But great script restoration is like not going to happen in like 4 years, realistic. Opcat could happen like next year if we wanted to. So it's like thinking about upgrades like 4 years into the future, when we have no idea what the consensus climate or prospects are going to be of changing the protocol. I find it like a moot point, to be honest with you.
So we've been talking, this will be the last question, I think. So we've been talking a lot about Bitcoin protocol upgrades. What other futures do you guys think Bitcoin could benefit from, even if it's just user experience, futures in wallets or whatever it may be? Shinobi, what would Bitcoin benefit from?
I think one of the most important non-consensus things that we can do right now is work on collaborative custody solutions. Things like Unchained, Casa, Nunchuck, like ways where users can have full self-custody over their own funds, but another signer or a service provider can essentially be a helping hand, like protect you against some degree of key loss or mistakes that you make, or wallet compromises to ensure that your funds do not completely disappear if you mess something up with your key management. And I think in the short term, that could be a huge difference maker in terms of getting people to actually self-custody their own coins instead of just leave them on exchanges or purchase an ETF and then just walk away.
Well, I mean, yeah, to what extent is that even a technical problem, though? Like, maybe people just prefer to have their coins in custody somewhere, right? Just easier.
I think it's a matter of just weighing the risks of self-custody and ways that you can lose your funds versus the safety of a proper custodian who can take care of those risks for you. And I think if we bring the risk management of self-custody closer to a qualified custodian, more people would be willing to actually take that extra step.
Okay, we do have to wrap up. Liam, do you want to have any final thoughts on this topic?
I think that the Glock kind of paradigm BitVM stuff is interesting because it doesn't require changing Bitcoin. And so it works now and it kind of forces the question.
Eric?
Yeah, I think one underestimated risk basically is that the privacy of Bitcoin is so bad that if you've been a Bitcoin user for a while, even if you're taking your funds, depositing it into exchanges and then taking it out again, you will very soon be able to just ask ChatGPT 5, ChatGPT 6 and ask what is Shinobi's entire transactional history over the last 10 years? And it'll be able to stitch it together. It's an annoying process to do manually, but an AI could very easily break and trivialize the privacy characteristics of Bitcoin such that I'm today scared myself to even touch any of my old wallets and commingle any of my funds. So it's for me that's the biggest issue, that I'm scared to interact with Bitcoin because I know that I'm leaving forever traces in a system that's very soon going to be much more transparent for state actors that want to link your transactional history together.
Yeah. All right, that's our time. Thanks, guys. Thanks, everyone, for being here. Give a hand of applause to our panelists and enjoy the rest of the conference.
We're back at the Bitcoin Magazine news desk presented by MetaPlanet. The Bitcoin price $112,000 across global exchanges as we come to you live from the Hong Kong Convention and Exhibition Center. Here you just heard, what features does Bitcoin need for global adoption? Here to continue the conversation, we've got a packed panel. We've got Ethan Vera, COO of Luxor Mining Company, and Giannis, a researcher with Bitcoin Layers. So guys, we just heard some of the most experienced technical minds in the space talking about really what's become of the movement that we heard a lot of here in Bitcoin Asia last year, this idea that crypto use cases will be coming to Bitcoin, providing value to miners, paying transaction fees. It does seem like this trend has reversed. We've seen less of those companies coming to market. Ethan, what's your take?
Yeah, well, I approach it from the mining sector. We provide software to miners, and I can say everyone's really sad right now. Block rewards dropping every 4 years. It needs to be transaction fees that take on that additional mining revenue. And so from our perspective, miners have somewhat been lazy. They haven't been necessarily investing in and helping develop all these other use cases that take block space on Bitcoin. So I hope that reverses, but for now it's a very sad trend for miners, and they're feeling the pain in terms of economics.
Giannis, maybe you can just set the stage. I mean, last year, this time, the situation was much different. Fees on the Bitcoin network were high, near all-time highs. You know, you had a situation where blocks sometimes were approaching being full. Today, very cheap to transact on the Bitcoin network.
Yeah, so I think there's a couple of things there, right? So I think the first thing is this, the token kind of games that people were playing on Bitcoin with different meta protocols. I kind of feel that a lot of those are come and go. They're very hype cycle driven. So the fees are going to kind of be very, they're going to have a lot of difference over cycles of time. And with the L2 side, who are paying transaction fees to miners for honestly to secure their networks. Last year when we were here in Asia, there were a lot of networks that simply weren't connected to Bitcoin in any way, and it was just more of a marketing thing. Huh. And a lot of those projects have since either pivoted to AI infrastructure, they've kind of winded down and ceased operations, they've pivoted to more crypto-focused products. So like building the kind of technologies that they were saying they were going to build, you know, ZK rollups, BitVM, etc., are very difficult things to build. So like the teams that are still in it are kind of proving that these things take like 2 to 3 year development cycles before they can get on mainnet. So when those protocols come to mainnet, due to their like architectures, they will be paying, you know, for their own network security and kind of to like make their own networks function. They are going to be paying like Bitcoin transaction fees. They are going to be able to kind of put these larger inscriptions on chain. Quite large transactions, so hopefully we can get back to a place where blocks are near close to full, and we have, you know, systems that are paying the miners for the security of the network. So yeah.
So Ethan, you mentioned Luxor taking more responsibility and helping build out this technology. I mean, how do you track what's going on in the space right now, and are there things that you're excited about coming to the mainnet?
Yeah, I mean, so at the heart of it, both Luxor and our miners are economically driven. And so our business is basically, how do you generate profit? Whether you're buying machines, you know, plugging it in, finding the cheapest power, maximizing your profit. There's this element, though, which is like investing in the long-term revenue potential of mining overall. And so that's really what I mean is miners are lazy. They're basically outsourcing that work to other people, maybe other people in the crypto community, Bitcoin community, maybe the mining pools, and not investing in it themselves. We saw quite a bit of interest in the ordinal phase, and that really sparked the interest of a lot of Bitcoin miners because for the first time, transaction fees in a long time were actually higher than the block subsidy, and that really sparked their interest. So I think from our perspective now, it's engaging with the miners that use our mining pool. Roughly, we have 3,000 mining companies that we work with, making sure that they're interested, they're following protocol updates, they're trying to invest and really engage and help support the ecosystem.
Giannis, over to you. You talked about some of these names kind of leaving the ecosystem. Obviously, there's some who have stayed and are continuing to build and try to push forward. I mean, as you look back on ordinals, on runes, you know, this multi-year phase of experimentation, what do you think the big takeaways were for the development community?
That's a really good question. I think the biggest takeaway is that there is a demand for this. Like, I think there is a demand for people to build different types of solutions that are bringing crypto-like applications over to Bitcoin. I think another thing that we also don't talk about is that these types of, you know, new layers coming to market additionally can do things like improved privacy protocols and better like transaction environments for users, like in an ever-growing surveillance regime, like that are actually quite useful. And I think we kind of seen that there is a demand for people to use their Bitcoin in kind of financial transactions, whether that's buying a JPEG or some token or whatever. And there is a demand for people to inherit security from Bitcoin as a network to build their own layer 2 protocols. So I think as things over like the next 6 to 12 months, as these new kind of networks come to market, we might see somewhat of a resurgence and people trying to bring those applications back, bring more Bitcoin denominated kind of crypto apps, for lack of a better term, into the ecosystem, and then in kind of return, like paying for network security. So I'm not like completely pessimistic and think that this is completely gone. I think this kind of cycle has proven that there is a demand for these types of things, and I think we just have to be patient for teams to get to mainnet and then see if that kind of returns.
Ethan, I want to go over to you. We've got a few minutes left before the break. Talking now about a topic we've talked about on this stage, the decentralization of mining. We're seeing new ASICs come to market from America, one of the largest developments in the space for some time, kind of breaking the mining monopoly here with some of the major producers in China. Can you speak to this international dynamic between East and West in the mining market?
Absolutely, yeah. So when you think about mining decentralization, you can kind of look at it on multiple layers. First, you have the manufacturers of the hardware. Predominantly, they've been based in China. Bitmain, MicroBT, Canaan have been the leading manufacturers. It's really encouraging to see this whole new wave of competitors. Jihan started BitDeer. One of the original founders of Bitmain is coming in to compete, so we have high hopes there. And then Jack Dorsey's company, Proto, announced 2 weeks ago. So it's a good time for manufacturers to come in this space, especially when they manufacture in North America. The tariffs have negatively impacted the economics of buying from Asian suppliers. And so right now, from a manufacturing standpoint, it's a better time than any to be in the market producing machines in the U.S.
Still to come, we've got much more. We've got Mark Moss taking the main stage, and of course it all leads to Balaji Srinivasan, former CTO at Coinbase, an A16Z. He'll be giving a keynote talk about the future of Bitcoin. We'll be right back after this on X, Rumble, and YouTube. Stay with us.
I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal, increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up, and our goal is to become the most held stock in Japan.
I've got a dear friend, he spoke on the stage before, Simon from Metaplan, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning. I'm Simon Garovich, president of MetaPlanet.
We're back at the Bitcoin Magazine news desk presented by MetaPlanet. It's day one at Bitcoin Asia. We're building into the main climax coming up on the main stage later, talking about all that we have going on. We've got a packed panel here. Aaron Redwing, astrologer working on the Ordinals protocol, and once again, Giannis, a researcher at Bitcoin Layers. So Aaron, we'll bring you into the conversation talking about what's happening with crypto coming to Bitcoin. This conference last year was sort of billed as a big East versus West meeting. The sort of Eastern markets were sort of billed as a sort of key driver of what's been going on with ordinals and JPEGs and tokens on Bitcoin. What's the state of the market this year?
I mean, I think the East still is the major driver. I was just at the Odin Fund booth, and they just did 300 BTC in volume, and I think like 90% of it was from Asia over the last 2 days. So, I think we are seeing that still, but it's kind of this weird situation where a lot of it has moved to side chains or L2s, and so before with ordinals, since you can see the JPEG on the Bitcoin blockchain, right? You can see what's going on.
Right, single JPEGs taking up 4 megabyte blocks.
Exactly. It was very visible to, I think, normie Bitcoiners or Bitcoin maxis. Now I think there's this sort of migration back to crypto that's happening a little bit, where they're still sort of tying into Bitcoin in some strange way, but it's the degens want a degen. So I don't know, I think we're kind of seeing this juggle between wanting crypto-like features, which you can't necessarily get with 10-minute block times and limited block space on Bitcoin, but they still want to be on Bitcoin. So I don't know. We'll see how this shakes out, and I think there's a lot of teams that are trying to figure out what's the right balance for something like a crypto-like sidechain versus being on, the OG Bitcoin chain.
Giannis, question over to you. We're talking about the market demand, whether there has been a change. Obviously, the chain would tell you that there has been, but do you agree that there has been a market change?
I think like that's a really interesting point, because like Odin is doing a ton of volume, and then like Spark I think is launching their own token protocol with their own like kind of exchange protocols, and that seems to be getting a lot of interest as well. Like I built like a kind of dummy Spark wallet just using ChatGPT, and like I started getting all these messages from people based in Asia of like, oh, can I use this to like trade Spark tokens? And I was like, please do not do that. But like, so like there was even like me running a random GitHub account, like people were reaching out to me and DMing me asking like, hey, how can I get involved in this protocol? So I think there is a demand, and like I also like I think it would be really great if things, you know, one day, you know, Odin Fund, like could it be more connected to Bitcoin? Could it pay more in its security and have like a better, for example, a better bridge? And to have a better bridge, you need to have actually more of a connection to Bitcoin. So I kind of hope that kind of we settle in this nice happy medium where these protocols where people are doing stuff off chain are actually inherit more security from Bitcoin. So I still think we're probably 6 months to a year from even seeing that potentially play out. But yeah, I would say there's still a demand on the, like, because you can see, like, it's a really good point on the L2 side.
Well, the Bitcoin market, $2 trillion, but the market for alternative cryptocurrencies still just as large. I think there was a hope that this movement would put a dent in that, right? That we would see Ethereum and the Solanas of the world sort of, you know, kind of fade in the distance because of, you know, Bitcoin adoption by some of these protocols. Still a dream, it seems like, at this point.
Yeah, I mean, I think you also have to think about sunk cost fallacy, right? Where a lot of these builders have been working on Ethereum or Solana for years at this point. And so I definitely noticed this with ordinals and NFTs, was there's so many people that have bags in these chains that even if they recognize that maybe the future is headed in this direction or Bitcoin is the only cryptocurrency that's proven itself in any substantial way, they still have this attachment to something that they've worked so hard on, you know? And so I think it's a struggle convincing builders to come back to Bitcoin or to come to Bitcoin for the first time for that reason, and also because it's harder to build on Bitcoin than it is on a lot of those chains.
Right, Janos, your take on this, what would be, is the case less compelling for Bitcoin these days now that regulation is seemingly going to make it easier for you to launch any token maybe in the US?
Yeah, so I think there's also like another point here is like these alternative chains like Solana, for example, Sui, like these kind of alternative L1s, like they all are now actually also adopting Bitcoin strategies, so trying to build like various, you know, whether it's a custodial wrapper or bridge or whatever, getting more Bitcoin onto their like blockchains effectively and like building Bitcoin denominated applications. So I think there's still kind of this weird world where people kind of see the value in having a Bitcoin strategy. But at the same time, you're right, like if we're just going to have a free reign and like anybody can launch, for lack of a better term, like unregistered securities, like are people just going to launch their own chains and kind of lose interest in trying to build something longer term that might not have like the immediate like 1,000x in price gains?
Right, because when there was this fury of building, right, I mean, a lot of it was this idea that in the US you couldn't, right? You didn't know if it was okay to maybe launch something on another network or to launch your own network. That fear is now gone, isn't it, Aaron?
Right, yeah. I mean, I think the regulatory environment is starting to clarify, at least in the US, and so I also think there's more push on the crypto side in that way as well. And also, at least from my perspective, it seems like a lot of the regulatory lobbying is happening from the crypto side of things rather than the Bitcoin side, right? Like a major exchange is going to want crypto tokens to be successful and popular and legal in the United States. There's only so many times you can trade back and forth from the US dollar to Bitcoin, but if you have all these tokens that you can be degenning on all the time, you know, I think that's also starting to shape the regulatory environment, at least from what I've seen.
Well, one thing I've been pretty shocked about is that, you know, you speak about this demand for exchanges and assets. So few of the major exchanges have come out to support Bitcoin assets. Of course, Kraken listing runes and you know, Bitcoin ordinals, but very few of the major kind of players, you know, have done that when you'd think that their transaction fees, you know, would be business they'd want to capture. Giannis, what's your take on why? Is it the sunk cost fallacy of working on ETH and Solana?
I'm not entirely sure, actually. I think there's also kind of, you know, if, for example, like if you're trading on Solana, like people might not want to actually risk Bitcoin in these types of like maybe more degenerate trading environments. So like there is kind of an argument where people have like Bitcoin and they keep Bitcoin as Bitcoin and they don't want to touch it because they believe in like kind of the digital gold narrative, as whereas like they hold a token like Sol or ETH or whatever, they're like okay with having more risk associated with that and like trading different meme coins and denominating that in another asset, and then eventually when they have profits, they swap the profits into Bitcoin. So I think there's also maybe that kind of a lot of traders actually don't want to actually risk their Bitcoin in these type of environments, but we'll have to see.
Also, when it comes to exchanges, a lot of exchanges list tokens when they have a certain volume of them themselves, right? And so with Bitcoin, we had a lot more of this narrative of free and fair, community-driven, whatever. And so there's not necessarily a, you know, treasury or like company controlling it that has 70% of the token that then they can give to Coinbase and Kraken and whatever to then list the token, right? So I think it's not like a fair game when it comes to what gets listed on these platforms in the first place. So I think that's also a major driving factor as well.
Well, of course, we're still live on YouTube, Rumble, and X. Stay tuned. There's much more coming. But talking now about all that's happening with the L2s and Bitcoin experimentation, we just heard a great talk about Bitcoin development. Of course, a lot of strife still about the ability to put arbitrary data and different applications on top of Bitcoin. Giannis, over to you. Do you feel like this, disagreement is going to continue forever, or how are we in the spam wars? Who's winning?
I don't know who's winning. I think that, one side, maybe the anti-side, is kind of unfortunately reverted to some very malicious tactics and kind of framing people. I think kind of borderline misogynistic and etc. So I think that's kind of unfortunate that one side's kind of reverting to that. I think in terms of who can win, it's you can't stop it, right? This is not something that you can prevent, and people will always be able to bypass these filters. So I think there needs to be kind of a discussion, if you really want to stop it, then you're going to have to hard fork the chain and build your own hard fork and go in that direction. So I feel like a lot of it's kind of silly. I feel like we have better problems to deal with right now and other discussions that are more pressing. So yeah, hopefully this stuff can clear up.
Aaron, your take? I mean, you were early on the ordinals. You saw it become start as a very small community-driven product. It became a phenomenon, now a controversy. What's the lasting legacy of the project?
I mean, I think what Giannis said, the technical debate has already been solved. There is no blocking these things, regardless of how you feel about the content that's inscribed on Bitcoin. And so, to me, it just seems like it's a way to distract devs from doing actual work on Bitcoin. And honestly, I feel like a lot of the tactics that have come out from the sort of anti-spam or not side of thing, I mean, it might be controversial to say, but it reminds me of the kind of stuff that Craig Wright was doing with Bitcoin devs. Honestly, I think an attack on Bitcoin where you just distract devs from doing work by putting them in pointless, loopless debates over and over and over again, that's how you attack Bitcoin.
Well, of course, much more conversation coming up about the state of Bitcoin development on the main stage and elsewhere. You can catch all of these videos going on YouTube, Bitcoin Magazine. We'll be right back after this special break. You're going to hear from some messages from our sponsors. Keep it here. It's Bitcoin Magazine.
I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal: increasing Bitcoin per share. Today, we become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up. And our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from MetaPlanet, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning. I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal, increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up, and our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from MetaPlanet, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
Next, please welcome Zhao, President of Mining at BitMain, together with Asher Gino, CEO and board member of Headache and American Bitcoin. 现在我们进入我们下一个炉边漫谈的环节，欢迎 BitMain 总裁 Zhao 以及 Headache 及 American Bitcoin 行政总裁 Asher Gino. Welcome.
How's everybody doing today? Good?
Hi everyone.
不要睡觉，看上去大家在睡觉了现在。Should we do it in Chinese or English?
English. Hi everyone, it's a great honor to be here together with our great partner, longtime friend Asher, CEO of Headache. And today we're going to share with you the latest technology about the U3 miners and their latest generation of infrastructure solutions.
Yeah, so quick background, everybody knows who BitMain is. They're the largest manufacturer of Bitcoin mining machines in the world. Hut 8 is a US NASDAQ listed energy infrastructure company, and we actually just spun out a company called American Bitcoin, which will be on stage tomorrow to talk a little bit more about. And so, oh, they took away the photo in the back. Maybe can you guys pull the photo back up real quick and we can show everybody? When we designed this latest facility that we just built in Texas, we really wanted to take the fundamentals of a traditional data center design. So the data center that we worked with BitMain and that we developed, can you guys put on the photo if you guys have a chance backstage? Awesome, thank you. The data center that we designed, if you think about NVIDIA's Blackwell chips, it's about 140 kilowatts per rack of rack density. And so here, if you look at this data center, these chips are about 200 kilowatts per rack. So it's more dense in heat efficiency than the newest generation Blackwell chips. And so this data center, if you look here, I think this data center, I was asking Irene, is the most amount of hash rate in one single building in the whole world. It's 15 exahash in one single building. And so Bitmain has been great partners. We started innovating on the ASIC chip to try to combine it closer to the AI data center world. And we've worked on really great partnership together that we hope to scale.
Yeah, so I still remember last year when we met in Singapore, we were talking about to set up the very first crypto and AI integration infrastructure and mining solutions. And it takes this amazing team only 9 months to make everything energized. And a few months ago, I received a call from a partner, Mike, that I should go to Vega to visit the site. And I was so surprised that you guys can build such a large scale of infrastructure to ensure that I think that the joule per terahash efficiency of the mining there is around 30% increase compared to the average efficiency of the mining fleet, and the hash rate density is doubled in a single building. That's amazing teams, amazing job, and the great collaboration between the two parties. I think your team put a lot of efforts into the infrastructure, and also by the whole process in the past 9 months, our teams, research and development teams, are working closely with each other to collect the feedback from your team to make improvements of the mining solutions, and with all those efforts and to make things happen.
Yeah, and honestly, one of the big reasons that we had developed this facility is when we were having conversations with AI customers, think the Amazons and Googles and Microsofts of the world, we said, hey, we have 700 megawatts of Bitcoin mining today. And they're like, that doesn't count. That's not a real data center. And so I think it was much more of an urge to say these technologies can actually converge. And as we continue to develop this infrastructure with Bitmain, I do see a world where we'll have data centers that will be able to be malleable, whether you put an ASIC chip from Bitmain or you put an NVIDIA Blackwell GPU, you'll be able to run different types of compute in the same data center, and you can add a layer of redundancy, a layer of generator backup to provide more backup support for more expensive GPU compute that you need. And so I think in general, the big takeaway here is there's still a lot of innovation to be done within the mining sector. I think there's a lot of innovation to be done on how do we think about it relative to other computing needs. And then the other element about this project is it's fully behind the meter at a wind farm. So about 40% of the time we pull power from the wind farm, and then the rest of the time we pull power from the grid. And so it's a beautiful campus, 205 megawatts in a single building. And I think this also goes to a testament. Irene and I have known each other forever now, since we were both little kiddos. And I think in order to be able to innovate and be able to deploy, I mean, this overall project is what, $400 or $500 million project. And from beginning of conversation to having it fully deployed was under a year that we deployed a $400 to $500 million project. And I think it goes to a testament to the partnership, to the relationship, and the ability to innovate both on the chips and on the data center design. I mean, this design we designed while we were building the facility, and I think goes to everyone in the ecosystem. Everything in crypto, everything in Bitcoin is new, and it's really important to create strong relationships and alliances and trust, and you can innovate and build together as partners.
Yeah, of course. It gets involved in great trust, because since we know each other, we know you have a great team that can get things done. That's why we are willing to funding this project and collaborate with you. And I think it's worth it. It also leads the trend of the future mining infrastructure. Last month, our team held Vega site visit, and some of our clients, including the private mining companies and institutional investors, are all visit the site. And when they come back, they give us the feedback that they would love to have their future infrastructure to be built in that way. And they're like trying to collaborate with you guys, or trying to urge us to give them not only full customization miner solutions, but also either containerized, modular racking solutions for them. So I can see we will have more and more innovation and creations into mining with those solutions.
Yeah, and I think another big thing, I know we're in Hong Kong right now, but we're starting to do a lot more US manufacturing as well from a supply chain perspective, and looking at manufacturing across like a lot of things here, from the conveyance systems to the rack systems and so forth. And so I think as we think about vertically integrating, being able to scale aggressively, all of those elements are really important when thinking about mining and building. I mean, my perspective is you're either a small scale miner and you have really cheap or free power, or you have to mine at a very large scale where you really are able to get to the lowest cost basis on energy and power consumption.
Yeah, that's another very exciting collaboration and good news that we are bringing together to the market. And since June, we announced the new generation of U3 S23 hydro miners. We receive a lot of pre-orders for that, more than $1 billion pre-orders right now. And those machines are all going to be produced in the US under the collaboration of us. So we're very excited about it. We're very excited about the future of mining, not only in the US, that we are going to collaborate, but also in the rest of the world.
Yeah, and I think to kind of, on some clothing thoughts here quickly, the biggest, I think one thing people ask all the time is, how do you get into the space? Where is mining going? Where's the future of this going? And so a quick background, Irene knows this. My co-founder, Mike Ho, was very early in the space, helped be a part of a lot of kind of successful stories of other mining companies. And when we started a company called US Bitcoin Corp, we had raised a couple $100,000 as young entrepreneurs. At the end of 2020, no one wanted to hear anything about Bitcoin. And then obviously 21 was kind of the heyday and everything came back again. But we really thought about, like, what is the competitive moat that we can build as a company to create a differentiated advantage? And really where we leaned into was two things. One is the biggest OpEx for mining is your energy cost. And so if we became the best and most sophisticated energy operators in this industry, we would be able to control and manage our margins regardless of Bitcoin price and manage through volatility. And the second is innovating around the data center infrastructure stack. So for example, this data center outside of the Bitmain chips, we built this whole facility for cheaper than people build air facilities. And so I think those are the two things that allowed us to merge with Hut 8. Now we're one of the largest Bitcoin mining companies in the world, and Hut 8 now is an energy infrastructure business. We're building large campuses. We're building campuses for Bitcoin, for AI data centers, and for other use cases. And then American Bitcoin, we're excited to talk about tomorrow, but American Bitcoin will be a mix between a Bitcoin mining business where we can mine Bitcoin at a 50% discount that you can buy for, And then it'll also be a treasury company where if we can get really low-cost capital, we'll purchase Bitcoin as well and ultimately increase Bitcoin per share. So we'll be running both of these NASDAQ-listed companies that focus on long energy and long Bitcoin.
Yeah, that's another thing that when you tell me about the capex you invest in these projects, it surprised me a lot, because we all know it's a heavy investment that you need to put a lot of capital up front to build a huge mining centers, especially in the server type of design. But your team really work hard on it to ensure all the, like every dollar spent on this project's count. And with our reliable partner, we're going to have more modular projects like this that enable all the institutional investors can be access to the latest generation of the miners with the most efficient infrastructure solutions, so that you don't have to, build everything from zero. You can just come to us, and Asher and I will provide you a one-way solution so that you can get the hash rate just one for you and mine in a minute.
Awesome. Thank you, guys. Thanks for having us. Appreciate you. Thank you very much.
Thank you. Thank you so much.
I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling...
We're back at the Bitcoin Magazine news desk presented by MetaPlanet. The Bitcoin price, $112,000 across global exchanges, and there's so much still to come here at the Hong Kong Convention and Exhibition Center. We're going to unpack everything that we've seen on stage and on the live stream. We've got a packed special guest. We've got Aaron Redwing, astrologer working on the Ordinals Protocol. Giannis, a researcher at Bitcoin Layers. And last but not least, you saw him on the live stream earlier, Shinobi, technical editor at Bitcoin Magazine. So I want to unify a couple threads we've been discussing on this desk today, which is this rise of the soup coiner, institutional adoption, and then bridging the gap towards Bitcoin culture, right? We're seeing large institutions, the likes of BlackRock, come out, put Bitcoin on the balance sheet. But can they be Bitcoiners? Aaron, your take.
I mean, I think Bitcoin is for my friends and my enemies, right? That's one of the things that we think as Bitcoiners. So to me, I've always believed in the idea of Bitcoin as a Trojan horse to the traditional financial system, where they're going to get into it because of the incredible number go up technology, and then they're not going to realize what they're in until it's too late. So from my perspective, I'm glad if they don't understand Bitcoin at this point, because I want them to just get in before they know what it's going to do.
Okay, interesting take. Giannis, your view with these institutions, they're coming, we're putting Bitcoin on a balance sheet, we're financializing Bitcoin and ETFs that are being packaged and repackaged. Your thoughts on this trend, and can they be good stewards of Bitcoin?
Yeah, so I think they can't, I think anyone can be, right? And I think the point of it being for friends and enemies is 100% correct. So I think the thing I'm more concerned about is how do these people start participating in consensus discussions, and how future upgrades of the protocols, and does that get a little bit murky? I think the more that institutions, nation states, and others start adopting Bitcoin is the closer that we trend towards ossification. And if you're just looking at the data, most usage right now is in custodial platforms, and I think that's not just because people want to use custodial platforms. I also think that the options that they have for the alternative are not quite there yet. So I hope that the people that are coming into the ecosystem, mainly from a financial perspective, are still able to participate in discussions or not kind of stop them because they fear that it's going to affect the financial aspect of their investment, and they allow developers and application builders to have discussions about what we might need to do to change the protocol to make it more usable for everyday people.
Shinobi, let's just say you're at BlackRock, you're talking to their team, their Bitcoin team. How should they engage with the Bitcoin community in your view?
I mean, honestly, I don't see any reason for them to, other than assessing whether the rest of the ecosystem has consensus around something. Like these companies, these suit coiners, they don't really care about this asset other than the price performance. It's irrelevant to them. The only thing they should care about is, are changes to the protocol actually creating new use cases, bringing in new users, which at the end of the day is just going to create more aggregate demand for the asset, and that's something positive for them. And I think at the heart of this is really just the existential crisis facing a lot of Bitcoiners, being confronted with the fact that there is no Bitcoin culture. Like that's not a thing. There is the culture that we as early adopters, kind of crafted and organically built. That's not Bitcoin. That's us as individuals. Bitcoin itself, it doesn't have a culture. Like this is not a system powered or held together by morality or culture. It's incentives. And incentives are completely culturally agnostic.
Well, we're sending it back over the main stage now. A Bitcoin capital black hole. Why global liquidity will flow into Bitcoin is, of course, the topic live and well. Stick with us on X, Rumble, and YouTube.
And the reason I'm bullish is because, for a variety of reasons, art market is very similar to Bitcoin in that it is liquidity driven, and liquidity around the world continues to grow, and it's not as sensitive to liquidity, for example, as Bitcoin, which has a constant price. But I expect that as long as liquidity continues growing, the art value should go up. Now, I would distinguish traditional art as more slow growing than, say, new emerging ordinals and NFTs and digital art, which I think is growing very rapidly. How do you think about digital art, Uli, and where you see that going, and particularly art on Bitcoin?
Well, I must state I'm a fossil, as compared to the young people here, when it comes to the experience in these new markets, and probably also in comparison to you. So I, of course, also started collecting that type of art because I am wherever new fronts open. But, and you already mentioned it, we are kind of at the beginning, even though we saw one wave, the NFT wave, and if I remember correctly, like 96% of the value has been destroyed. So we certainly hope that Bitcoin, ordinals and all that will not share that fate, but show us a very different, brighter future.
As you think about the Bitcoin versus art as a store of value, let's start with art. Why has it traditionally been a store of value in your mind? And then maybe I'll answer the same question.
Can you repeat the question acoustically? I wasn't.
Yeah. Well, as you think about Bitcoin as a store of value and art as a store of value, let's start with art. Why has art historically been a store of value, and how do you think about it? And then we'll pivot to Bitcoin, and I'll give my perspective on art also.
Of course, art, part of human culture, always was there. It took some time that it morphed from, like, say, rituals, etc., into a real asset to preserve value. About a few centuries already, that's the case. And we now face like a very new situation because that old value system that's formed by museums, collectors, art critics, academics, has kind of been completely replaced in the Bitcoin space or in the digital space, where we have kind of group consensus deciding value. That's a completely different principle. So we have to see where it carries us, because just community consensus may not fully replace, say, science or cultural knowledge when it comes to building value, because it may shift very rapidly. So what we consider very valuable today, may look very different as we have experienced with NFT and NFT art. So I would be a bit hesitating, and maybe Bitcoin itself may have smaller or not so radical cycles as it's art.
Yeah. So in, I think it was 2017 or so, plus or minus, at the time I was running Sotheby's, and we sold a Basquiat for about $110 million. And I put this out on Twitter at some point. And at the time, Bitcoin, I think, was in the $2,000 range, plus or minus, which meant it was about 55,000 Bitcoin for that painting. And years later, if you sold it again today, it'd be about 1,000 Bitcoin for that painting. In other words, one of the most expensive paintings ever sold, the Basquiat, has been devalued enormously, like 98% versus Bitcoin. What do you think about that, Uli?
Well, it kind of illustrates where things can go, particularly in currencies just as much as in art. And of course, you have a very rich experience looking at, shall we say, traditional art, looking at digital art, and if we talk about art as investment, which you are expert in, I think still tremendous profits can be made, but the predictability is so difficult when we talk art. The predictability. And how do you cope with that today?
Well, it's a very good question, right? So we're not here to give financial advice, but if you are a Bitcoiner, in effect, you have to think about the question, would I sell Bitcoin to buy art? And what are the circumstances under which I might sell Bitcoin to buy art? And you put your finger on it, Uli. From, in my prior life, I was asked very frequently, how do I invest in art? Should I think about art as an investment? All those things. And the answer I always gave was, with respect to art, you should buy what you love, and then it will always be a good investment, both culturally and personally, which isn't really the answer, is it? I mean, that's not the answer anybody wants. They want the financial answer. But that has been, in fact, from my perspective, the most important way to buy art. With Bitcoin, it's different. And Bitcoin fundamentally positions itself as a long-term digital store of capital. And if you are trading off between Bitcoin and art, or Bitcoin on art, which is a different category we can talk about, or digital art that's not on Bitcoin, that may also be a different category. You really have to think about what is it that's going to have enduring long-term store of value or a supreme cultural resonance that will transcend significant numbers of years, because Bitcoin's projected to grow 20 to 30% over the next decade. Very few things, very few pieces of art grow at that value. So to me, which is why I've said this somewhat controversially over time, to me, Bitcoin is demonetizing art as an investment.
They are completely different categories. And of course, art provides value beyond, say, pure material value, but we cannot attach a value to that in monetary terms. So that we always have to keep in mind. But I think Bitcoin probably is more predictable than specific artworks, unless, and this is very similar to the business world, you may go into very established values. But you have venture capital, which is very young art, which is digital art. You have like more like private equity, more established art, which is more stable. And then, of course, you have the classics, which are even more stable, but they still follow a cycle. But I think we have hundreds of years of experience. We don't have that yet for digital art, and we have just had one, problematic NFT experience. So we have to, be courageous, I assume, And when we like it, that's what you suggest, then we may buy it and hope for the best.
I think that's very wise, and I would also say one of the great things about Bitcoin's connection to art is if you want to enjoy some of the benefits of Bitcoin as a store of value, you can look for art that is attached to that, or you can look for art that where the value should correlate to Bitcoin's value. And we've got a couple of examples here, right? I mean, we've got the artist Robert Alice has done a wonderful piece, and you saw. Did you want to comment on the other piece that you saw as you came in, the other exhibition?
You mean that other piece we looked there at? Yeah, this is a very interesting piece because it kind of relates to the history of Bitcoin and to the perception, which varies widely from the performance of Bitcoin. So there's a work over there which I find quite attractive. It's 410 quotes over time from like 2013 to today, and all negative and very prominent names. So, well, it just proves how we all can be wrong.
And we've got on-chain monkeys as well here, and those, of course, are actually on the Bitcoin platform, and they're actually attached to Satoshis. So there are, but even if you aren't necessarily enamored of art that is in the Bitcoin realm, one can think about, and you can't necessarily afford a masterpiece that might store value better than art, and you're thinking about investments, you can consider other types of digital art where you have leverage, if you will, to both a growing body of wealth among Bitcoiners and other digital assets, as well as some tech adoption. Because at the end of the day, clearly the machines are coming, but the human experience is transcendent. And our argument, I think, Uli, would be that over time, what humans create, particularly that represents culture and value, will become even more valuable, particularly the best parts of it. Or as they say in the NFT space, the grails. The grails should appreciate. Now, will all of them appreciate at the level of Bitcoin? Look, we're not giving financial advice. We can't be sure. But those would be the places I would look. The only other point I would say is what you said, which is art, traditional art that is, has largely been, because it isn't getting valued like the $113,269 every single second that Bitcoin is. It doesn't mean, though, that the art itself doesn't vary in value over time. It's just not as volatile because it's not being consistently marked to market. So it gives the comfort level, if you will, of stability. And that's nice, for sure.
Yeah, my main issue, and that may be everyone's issue, if buying that type of art, digital or Bitcoin art, is really who establishes the value. In the old world, if we may call it like that, we have the art critics, we have academies forming opinions, we have experts, and we have markets, we have the auction houses, but all of this lacks at the moment in digital art. So the values are determined just by consensus in the web. And consensus probably may have a very short life in most instances. So that's really my issue. You know, where are the values other than our own feelings, and which is important, but may not be the ultimate criteria.
So at the end of the day, would you sell Bitcoin to buy art?
I would like to hear you first, so give me a good thought on that. Because you have Bitcoins, you said.
I sold Bitcoin to buy art twice this past week. Does that count?
Here is the answer. Yeah.
There's the answer. I did, but it was a special case.
Yeah.
Because I love art.
Yeah, you may do better than I, who, rather buy art at the moment. But you are safer. Yeah.
On the other hand, I'm not unmindful of the power of the store of value of Bitcoin. And one has to be very careful when you think about selling Bitcoin to buy anything, in my opinion. And certainly I would only sell it for pieces of art that really resonate with me. So, for sure.
Yeah, that is the thing to do, in my view, too.
Do you think the NFTs, which you pointedly said are 96% off since at the bottom, they're going to bounce back? Are the digital art, it's going to bounce back? The NFTs are coming back?
It may happen in cases where they also represent like what I call cultural value. If it's just, you know, gimmicks or just kind of technological play beyond any meaning, they may not. But of course there is art, significant art amongst these NFTs. They may be rediscovered.
So we have 2 minutes left, Uli, and I want to ask you a question. Why do you think there's so much, why is the digital art space so contentious versus the traditional art space? How do you think about that? Why do you think the digital art space is so contentious versus the traditional art? I mean, you and I have been in traditional art and the battles rage, but over time they sort of have calmed down. But digital art is boiling. Why is that?
I think it's the new generations. I mean, they live on the screen, they live in the screen.
It's the hot-blooded young people that are all entering art, and they're all sort of, you know, they're all tribal and they're ready to do this.
I think so. I mean, they consume the screen. They consume art on the screen, and so that's what they look at. They may look far less at, you know, old school type art. So that, of course, will reflect in what you call a boiling scene.
Well, I want to try out one thing for you. I want to try out the possibility that one of the things I like most about ordinals, what I like most about digital art, what I like about all of the new and emerging forms of digital art is that they're using platforms that are not the traditional art elite way to think about it. We are, in effect, democratizing access to art. We're making it possible for everyone to identify with various artists and various artist communities. And that, to me, is tremendously powerful and honestly long overdue. And the best part about it is we're creating networks of people that are around, meaning that scale very rapidly around the world and that are oriented toward different kinds of art things. And you know what? You and I grew up in a period where art didn't scale very well. I mean, I didn't. I remember when I arrived at Sotheby's in 2015, they didn't even have their own online auction platform. It was outsourced to someone else. Now they have one of the best in the world, which is kudos to them. But back then, the whole notion of how does art scale in the world of Bitcoin and digital assets, and more importantly, in the world, frankly, of the blockchain, these things can scale infinitely, and that's a whole new world for us.
Yeah, and of course this is a very interesting phenomenon, and I think welcomed by all of us. Yeah. So that part is a beautiful part. Yeah.
So at the end of the day, you're an art buyer and a Bitcoin buyer.
Well, so far mainly an art buyer, but of course Bitcoin must be one of the next things I will acquire for sure.
Okay, Uli, nice to see you. Do you have any questions for me before we go?
I repeat myself. The ultimate question for me is who is going to create or, you know, judge the cultural value with knowledge, not just by consensus of a lot of people.
Yeah, so the question about in a Bitcoin world, who defines the value of art is profound, because in the traditional art world, it is the elites, the museums, the curators, to some extent the gallerists, and the press. But one of the things I find so compelling about the world of digital art and Bitcoin and art is you have consensus driven by democratic values, and I think that's the future. So for that, up to Bitcoin. Thanks, Uli.
Thank you.
Welcome back to the Bitcoin Magazine News Desk, powered by MetaPlanet. We're here at Bitcoin Asia 2025. I am Frank Korver, the political correspondent for Bitcoin Magazine, joined to my left by Alan Helm, co-founder at Bitcoin for Corporations, and the one and only Matt Dine, CIO at Build Asset Management. Matt, we were just talking off camera. You have a very cool family Hong Kong story. I was hoping you might be able to share that with the audience.
Yeah, awesome. Well, it's a pleasure to be here. My first time visiting Hong Kong, not the first time in my family, though. Bitcoiners are well familiar with the story, what happened in 1971, right? Nixon takes America off the gold standard first, and then Nixon and Kissinger kind of jointly negotiate a new business agreement with the Chinese government, which basically brought America and China into business with each other, which has been an ongoing relationship for multiple decades now at this point. So that 1971, right? My mom, I'm trying to think when she graduated university and med school from the University of Missouri in Kansas City. But I mean, just because of connections, you know, someone knows someone, however that works. They sent like a foreign exchange trip with the med students, right, back in the mid-'70s. So she visited Hong Kong, other Chinese cities, got to come in as like, it was the first wave of Americans coming into China, kind of, you know, those two cultures meeting for the first time in, I mean, a long time, right?
Yeah.
China and American interactions, integration, all of that. So yeah, she came over here. It's been kind of like part of the family story. She talked about it all the time growing up. I remember just little heirlooms she got on her visit, silk, you know, screens, paintings in our dining room all the time. And I think never in a million years would she be expected that, you know, me, you know, visiting China on behalf of Bitcoin, but also, you know, kind of the U.S. representation, trying to take this relationship into the next era. But something really cool happening here. So you can kind of feel history happening.
Amazing stuff. Alan, I'm going to come back to you right after this. I just got word that we actually have to head back to the Nakamoto stage right now. So let's head back over there. We'll be right back with Alan Helm right after this.
All right. Well, good morning, good afternoon, Hong Kong. Guys, today we're here with Jack and Moshe. We're going to talk about all the liquidity and capital that Bitcoin is draining from traditional markets and traditional finance and just from the world. Could we please start? Jack and Moshe, could you guys please give a brief intro of what you do, what your companies do, so everybody gets a quick glimpse, please.
Thank you. Thank you, everyone. I'm Jack from LTP. We are #1 digital asset prime broker in Asia, regulated in Hong Kong, BVI, Spain, Australia, and also a lot of districts. And we provide service for all the trading companies, the prop trading, hedge fund, also for provide asset management service for the list company, family office, venture capitals. Yeah, our goal is want to be a multi-asset prime broker for all the trading assets. And we are setting up a unified clearing for all the trading solutions.
Moshe Shen here. Nice to meet everyone. Good to be back in Hong Kong. We're Wintermute, so we are HFT trading firm, prop shop, OTC desk. We're fairly large in the market itself, trading anywhere between 15 to 20 billion a day. We're fairly large in DeFi. We're fairly large OTC desk, where we quote risk price blocks as well as API. Yeah, we're fairly large in derivatives as well. So everything from spot to exotics to structures, etc. Myself, I joined 3 years ago. I moved from Hong Kong actually to Singapore to join Wintermute. So at Hong Kong, I was previously at Goldman's. So therefore, 10 years across London and Hong Kong.
So Jack, Moshe, for the last 12, 15 months, Bitcoin has been ripping basically. We've gone up all the way to $125,000 per Bitcoin. Now we're at 113. please tell us like how the demand for Bitcoin has been growing here in Asia, because I mean that you've been getting tons of requests and that business has been growing a lot. Like, how are you seeing the inflow of money in the world outside from crypto into Bitcoin now with all of this price surge and in this bull market?
I have to start first. I mean, one of our part of our business, well, two part of business how we interact with Bitcoin is A, we trade on the exchanges directly, so we see the flow of funds trading against us on the venues, and secondly, essentially on the OTC desk. So definitely throughout the bulls from 70 to 125, we've seen a lot of bids to essentially accumulate, right? So that come from a range of whales, from instis, from retail brokers who have lots of retailers trading on their platforms, and it is being a much more accepted asset class, especially after November, especially after January. That's really picked up. And of course, most recently, the DATCO, so digital asset treasury companies, they're just accumulating not just Bitcoin but tons of other assets as well. So that's been just one-way traffic mostly.
I think in the past 5 to 6 years, all the players in crypto have changed a lot. I joined crypto from 2018. At that time, all the flows come from maybe 80% from retailers, and the institutions are like crypto startups, exchanges, and some venture capital, some projects, some VC. Nowadays, they have been changed to the list company, the pension fund, state fund, or the big whales in TradFi. I think the ecosystem changed a lot. In the past, like when you trade we get a lot of flows. It's like it's maybe the biggest flow is like several million per order. Nowadays, we get the flows is like maybe 1 billion to buy Bitcoin or sell Bitcoin. This kind of flow reflect that the players have changed a lot, and all the players, when they come, they want to find like different service providers. Previously, they just want to have a UI interface or API, just execute some orders, buy some tokens, and they they aim to get like 10x of the returns. Nowadays, the big players, they just want to find a stable yield. They hold like several billion or large amount of Bitcoin, Ethereum. They want a stable yield. They want to put their fund in like a bank or a tri-party custodian. They can access to different like trading pairs. Like you can trade spot pairs or options, and they need to liquidity from the exchange or from OTC. So I think the ecosystem changed a lot.
I'll probably add to that bit. If you look back previous years, as Jack rightly said, it's mostly retail. And if you're an institution, you would have to open an exchange account and trade and custody there. Over the past few years, the service provider landscape has really improved. Now you have a custodian that's separate to a trading, that's separate to risk management, separate to exchanges, and and actually should be the right way of doing this. Crypto did grow because exchange will essentially collapse everything into one. But for it to really grow for institutions, then you need to separate the different business lines. And one of the things that we really see on our side is the percentage of flow going through what we call OTC business versus our own exchange business. And that's really, past 3 years, that's really done a 5x of terms of proportional flow as a proportion of our business. So OTC is really, OTC means that, larger counterparty institutes want to trade in the bigger blocks, right? They come to us and say, I want to buy millions, tens of millions, hundreds of millions of blocks. And one of the typical things with essentially macro manager, they trade commodity, they trade rates. When they come to us, they have a view. They have PPI that's coming up, CPI is coming up. They want to express a view in the market. Bitcoin has become an instrument they use on top of rates, in top of 10 years. To express that view, and it has become liquid enough, and once you deploy in size, for them to really consider part of a portfolio. That's been one of the big noticeable changes in the last 18 months from our side.
Yeah, I think Maybe 6 years ago, 80% flows come from the retails. Nowadays, I think 80% from the institutions. For them, like I think all the high frequency trader in this world, they all come. Maybe they trade crypto for a long time, or they trade the Bitcoin ETF in Nostr, in CME. And or they hold some position in this market. They provide liquidity or provide some service for the institutions in the US. In this ecosystem, I think maybe the infrastructure change a lot, also make the liquidity in this market change a lot. You can see that you can combine all the liquidity in the crypto exchange or the ETF, the exchanges in Nasdaq and in CME. The pool, the order book have been it's much deeper than before. Like 5 years ago, when you want to sell maybe 10 million of Bitcoin, the slip rate will be around 1% or 0.5%. Today, it will be 0.1 or less.
So we've seen this in the recent Bitcoin sale by Galaxy Digital, 80,000 Bitcoin. The market absorbed it beautifully. Guys, this cycle is a cycle where we've had royal families, sovereign wealth funds, countries, corporates create Bitcoin strategic reserves or buying Bitcoin ETFs, whatever. From your position, in your companies, how much, what's the Bitcoin dominance against other crypto assets of the interest of all of these players? Again, sovereigns, corporates, blah, blah, blah. What's Bitcoin's dominance there in that inflow of capital into the industry?
It is mostly Bitcoin. Bitcoin, even and the majors. We as a firm, we trade a long tail of assets. It is a meaningful percentage of our volumes, but when it comes to institutions actually wanting to buy and accumulate in size, it is Bitcoin.
I think Bitcoin is the first step for the newcomers know what crypto market it is, and also know what blockchain technology it is. Maybe they will buy Bitcoin with ETF, and they will think what is Bitcoin? Why the price improve a lot? What's the inside value of Bitcoin? And they will know, there's the other cryptocurrency other than Bitcoin. They have Ethereum, or have some DeFi protocol coins. And you can see it's different wave. 6 months ago, the physical domain ratio is 70%. Because all the newcomers, when they come to this market, the first thing they learn is Bitcoin. Maybe they don't know blockchain technology, but they know Bitcoin. When they know Bitcoin, they will see there's other coins, like Ethereum. It's another thing they will want to build. And on DeFi, also some kind of new concept. And they can try DeFi, they can try trading, lending on DeFi and on another coin like Uniswap, Aave. So someone think Bitcoin ETF will make this industry more centralized. But I think that's the first step to make everyone knows. Then they will know that if they want to hold their own Bitcoin, they need to have hard wallet to hold the private key by their own. It's their own money. It cannot be controlled by any government, any business, any company. So it's different steps.
Guys, talking about this liquidity black hole, something I always love to say is there is no Bitcoin. 21 million Bitcoin is very, it's a tiny supply. I like to say there is no Bitcoin available. How do you see this kind of supply shock with all the demand that you're seeing? How do you see this liquidity black hole trapping all of this capital in an asset that has such a small supply? How do you see this playing out?
I think there's a bit of a running joke on Twitter is like when the OTC desk run out of coin, that's when it's right. I mean, OTC does not run out of coins, right? I mean, as a firm, they should be market neutral. It just means that is priced higher because that's what the market supply, the supply and demand is. Bitcoin, just like anything else, is a supply and demand. There's limited supply, but it seems a lot of demand right now. So that's what basic economics is. You just drive the price up, and there will always be a seller at higher prices, and there will always be a buyer at certain prices.
I think, yeah, Bitcoin, the numbers is limited. And previously, when Satoshi created Bitcoin, they want to be like a cash to use to settlement. But nowadays, it's truly different. Maybe Bitcoin will be the collateral coin in crypto world. Also the asset to hedge the fiat inflation. Also, you can use Bitcoin as a base asset and clearing with the other chains. So it will be the base asset in crypto world. And also it will facilitate the other business when dealing with like all the collateral side use case. Maybe mining, it will be like mining bonus will be less and less, but the use case of Bitcoin will be more and more.
Can we please talk a little bit about Bitcoin treasury companies? And you guys at LTP and Wintermute, these companies are buying plenty of Bitcoin. This naturally is creating additional demand. How is this impacting in the Asian market? Are you seeing investors, partners, clients, and so on interested in investing in these companies, or at least working in these companies? I know that you guys, we were talking before, you also offer services to these companies, Bitcoin-based products, and so on. What's the general view, again, connecting this to Bitcoin trapping liquidity from traditional markets? How are you guys tapping into this new phenomenon, let's say?
Yeah, we think this idea is super great. Our crypto market need the more liquidity from the equity market to make everyone can access to crypto exposure. Maybe like 200, like maybe I think 200 million of the people in the world have held crypto before. But for the equity market, for the capital market, the big potential is like 2 billion or 3 billion. So each will make our market have like 10 times of the potential to grow. And also, we helped some DTAT companies. We invested some. We invested Nakamoto Bitcoin treasury company. We invest some BNB treasury company. We also do provide asset management service for DAT companies, generally based on their Bitcoin treasury. I think, yeah, Bitcoin, the number is limited. We need to try our best to grow our Bitcoin numbers. You maybe buy or you maybe do the asset management. And also we provide some OTC service for the DAT company when they want to buy a large size of Bitcoin.
I'd say the DATCos has been a phenomenon that's really picked up in the last 6 months. I mean, strategy and BitPlanet has written a very clear playbook of how to initiate and continue this. So we've definitely seen, we've been involved in some of them, discussed with a lot of them, and what we've also seen is that the way to accumulate is really changed. You know, you just not just buy from spot and you TWAP in the market. Now there's no more financialization that's been built. Just like with in traditional finance, right? You are using derivatives. I mean, BitPlanet has been famed to do this by selling puts to accumulate more Bitcoin. And once you accumulate Bitcoin, then how do you continue to generate a yield? Because at the end of the day, like Bitcoin is these DATCos buy Bitcoin because it is a harder, it's to them viewed a better treasury over long term. Now, once you accumulate treasury, how do you continue to generate return, ROI to your shareholders, to the investors, to continue to build? Of course, Bitcoin price could go up more, but then how do you actually generate a return on your existing holdings? Now, we're in active discussions with a lot of them using a range of places. I mean, Bitcoin as an asset doesn't really have a native yield, right? There's not too much of a on-chain DeFi yield. Where does yield come from? Really come from two places. One is it's used as a trading instrument, which generates yield, and secondly, from the volatility, right, of this. That's you can selling calls, selling puts. There's a price that people to pay for the vol, to buy the vol. So those are some of the more obvious yield plays that you have. Once you accumulated a large amount of Bitcoin, then you could think to explore. And also these DACOs, I would say it's still the early innings of their development. Again, I don't know how many DACs will continue to come out, but they're still quite early because they're at the raising money accumulation stage. Now, next stage will be think of treasury management, like I mentioned, and the final stage of what is the end game for these DACOs, or these as a treasury. I've got all these Bitcoins or any asset class. What do I plan to do with it? Do I just keep holding it forever? Do I have price targets to potentially sell? Do I have I raised debt? And what happens if Bitcoin falls, right? I encourage a lot of the DACOs to go through this experiment and think, how do they raise money to buy the Bitcoins? Are they at risk of having such liquidation prices? And then what do you do? So just maybe anticipate this before you need to think about it. Because if you do think about it, then it's usually too late. So just have the thought experiment between the companies, between your peers, and what's the course of plan. Of course, the Bitcoin could just keep going up. That'll be all fine. But it is a market. It has the market price dictates whether you're right or wrong. So I say just anticipate.
One last question. I would say I'm going to put two. Are we going to get much more Bitcoin treasury companies in Asia? And any final remarks, final words that you guys want to give?
Sorry?
If we're going to get more Bitcoin treasury companies in the Asian markets, and any final words, remarks you may want to give.
Okay. I think nowadays the Asian market was blocked by some rules from the capital market. Yeah, I think in US it's easy to get a pipe deal to list company, and you can change your the company's goal and change a company to a DAT company. But in Hong Kong, in Korea, it's hard. It's blocked by the compliance issue, the rules by the set up by the SFC side. Or the industry, I think we are trying to persuade or help how we can get there, but it needs some time. I think the need is there, but now it's both blocked.
So, will there be any DACOs in Asia? I think if you're going back to the genesis of just crypto adoption in Asia, it's very, very strong. There's a lot of accumulation, including MetaPlanet, including other DACOs. They might not be Asia listed, but they have the genesis or genes of Asia. Some of the biggest miners are from Asia. Some of the biggest holders, some of the biggest exchange owners are from Asia. So, in terms of, as Jack says, some of the capital market restriction means they might not able to list a listed company in Asia because of restrictions. But that's where they go to US. That's where they go to other countries to actually do the public listings. But if you actually go back to the Bitcoin treasury company list, you can see actually a lot of them are Asian background, and because it's very dear to their heart, dear to their genes.
Thank you. Please, a big round of applause to Jack and Moshe.
Thank you.
Thanks, everyone.
All right.
Welcome back to the Bitcoin Magazine News Desk, powered by MetaPlanet. We're here at Bitcoin Asia 2025. I am Frank Korver, the political correspondent for Bitcoin Magazine, joined by none other than Alan Helm, co-founder at Bitcoin for Corporations, and Matt Dine, CIO at Build Asset Management. Alan, I want to kick it over to you. We've had the Bitcoin for Corporations symposium happening in the room next door. It's also been an amazing 16 months for Bitcoin for Corporations. Bring us up to speed on what's been happening today and what's been happening for the past year and a half or so.
Yeah, man. Well, first off, it's super exciting to be here in Hong Kong at, I think, 15,000 person event almost.
Maybe more. Maybe more.
Maybe more. And I mean, it's just showcasing how global Bitcoin is. I mean, it wasn't even that long ago that we had a Chinese mining ban going on here.
This is true.
So just to see the interest here from a retail perspective is super exciting. But more so on the institutional side, right? We've been running Bitcoin for Corporations now for about 16 months. We've had a quadrupling in our membership since April. So I'm going from 7 members up to 45, which has been super exciting. And being able to bring them here, share a lot of the insights that has been going on in the US, EU, and even now the APAC markets.
Yep.
And just sharing like what needs to happen on not just the regulation side, but general financial engineering topics and
strategies.
How, the different flavors of what Sailor's doing in a safe and effective manner. Has been super exciting, and that's the conversations that have been going on in the back room. I think actually right now Adam Back is on stage with David Bailey, which is very exciting.
Quite the technical engineer and financial engineer, that Adam Back. Yeah, we like that. Yeah.
Absolutely, yeah. But I mean, the representation has just been phenomenal, and I think APAC is definitely ready to run the corporate Bitcoin treasury play.
Love that. Matt, I want to go over to you. Why don't you maybe just give a little bit of an overview of what you have going on at Build Asset Management right now?
Yep. So we've been around for 7, 8 years now.
Okay.
So we've been pushing for adoption. Starting from the standpoint of fixed income and credit markets, right? All Bitcoiners have probably heard the story. There's hundreds of trillions of dollars of
those markets, right?
IOUs out there,
yes.
right? Just a bunch of levered U.S. Treasuries, right? My Twitter handle. But we've been slowly working on Bitcoin adoption through that the dollar itself, the credit-based definition of a dollar that we're all well familiar with. So we've been strong proponents of deploying capital into not just our own balance sheet, but also third parties as well, whether it's high net worth individuals, institutions, public companies as well, stuff that Bitcoin for Corporations is doing. That's kind of our mission, what we're working on. Kind of that Trojan horse of the dollar, fixed income markets, the global reserve treasury, porting over that hundreds of trillions of dollars of capital as much as possible, especially for commercial borrowers who adopt Bitcoin as a reserve asset on their balance sheet, tapping credit capital to fund business operations, which, Alan, you're well familiar with. So recent kind of news developments, number one, just a couple of weeks ago, we onboarded our first public equity company who's going to deploy into Bitcoin-backed loans, originated by our good partners at Unchained Inc. in Austin, Texas.
Amazing.
A U.S.-based firm.
Yeah.
Hasn't yet internationalized yet, but
they'll get
this
there.
is just part of that process, right?
Yeah.
So public company adoption is coming on through the balance sheet on that cash and cash equivalents treasury line. And then alongside that, we run pooled investment funds. We've been working on just regulatory kind of process, just dotting all the I's, crossing the T's with regulators to bring in Bitcoin-backed dollar loans and fixed income. Another word to say the same thing, right? Slightly different.
Yep.
But bringing those into the investment grade capital markets, and when you think about investment grade, it's like your permitted debt that's available to go into the investment fund. So stuff that makes into retirement funds for Americans, target date funds, stuff like that.
Yeah.
Getting Bitcoin a seat at the table for those dollar IOUs there is kind of like our mission of what we're working on.
Quite a mission. Love that. Appreciate that. Alan, question to you. Politics, this is what I'm familiar with. This is my beat. You started Bitcoin for Corporations under the previous administration. We've obviously seen a major shift under the Trump administration. As you were talking, Matt, I'm thinking, are we at a point now where Bitcoin is no longer necessarily taboo? Is it just a macro asset in the eyes of most businesses? Are you noticing this in the conversations you're having, Alan?
Yeah, absolutely. So I mean, we're focused on speaking with a lot of corporate executives, CFOs, CEOs, corporate controllers, and they're not so much worried about the career risk of implementing Bitcoin on the treasury balance sheet, but they're more so asking us hey, how do we do it? Who are the partners that we work with? I'm based in the US, right? Who should I work with at Deloitte? Who should I work with at KPMG? Who are the banking partners that we should work with? And so we at Bitcoin for Corporations facilitate those introductions. But beyond that, once they're ready to execute, a corporate Bitcoin treasury strategy, we work with our members on the public relations and investor relations side to continue to ensure that they're informing their shareholders on best practices and following what a Bitcoin accretive company should be doing, like a MetaPlanet, like a Nakamoto, like a MicroStrategy.
Okay, appreciate that. Matt, we're about to kick it back to the live stage. Just wanted to get a final thought from you. Same topic. Is it getting easier to have these conversations? Is Bitcoin less taboo? Is it just sort of another macroeconomic asset for companies to think about?
There are more people showing up willing to consider, and also hungry. They're meeting you where you are at this point. But there's still people who, will tell you, we don't think Bitcoin will be around for the long run. It'll be something else. And
do you get a lot of that, if you don't mind me asking? Yeah.
Oh yeah, that's the dominant response still. Yeah.
Is that right?
I would say if I talk to 100 investment professionals, it's like the Circle IPO. They still think stablecoins are like where this is headed. The Bitcoin is the path, the straight and narrow kind of road to redemption. That is a variant perception. It is still very.
We're in our own bubble here. You're saying. Yeah.
You have more people showing up to pick up what you're putting down, if you will, on investment committees. Like you might be, met with receptiveness more often than you were in 2021, 2022, 2023. But humility's picked up or turned down a little bit, if you will. But I think the dominant narrative is still, it's greater than 50% still who think they're writing off Bitcoin. It'll be something else. So it's still, very, very early, but it's definitely easier than it was that early part of the decade.
Appreciate that honest perspective. We are about to kick it back to the Nakamoto stage for Dr. Zhao Fang of the Hashkey Group. This presentation will be in Mandarin, ladies and gentlemen. Please check out what Dr. Fang has to say, and we'll be right back after this.
和传统资产、传统金融资产和加密资产之间最丝滑、最好的一个交换方式，一个兑换方式是 exchange， 是交易。但是 ETF 它的规模的增长是来自于申购赎回，就申购赎回，花上3方以上的中介帮助之下。花上1到2天的时间，把一个 ETF 交付给你，显然不如在分布式账本上用一个交易的方式。交易的方式可能是在2分钟、10分钟之内就完成了2个资产的转换。这显然，交易的方式可能是未来主流的。传统金融资产和加密金融资产之间的这样一个转换的方式，这样兑换的方式。所以，更好的流动性，这是它是 DIT 比 ETF 更好的最核心的一个要点。同时，市值比净值具有一个更合适的一个价格弹性。我们知道 MicroStrategy 之所以能够持续的、不断的通过各种融资工具去建立自己的这样一个融资架构，从此能够拥有这么多的比特币，很重要的一个原因是因为 BTC 本身有一个比较大的波动。同时，这些对冲基金之所以愿意有很大的，就 MicroStrategy 的投资者里面有很大的是对冲基金，或者说另类投资策略的一些投资者。之所以这些对冲基金或者那些另类投资的投资者、投资机构愿意给钱给 MicroStrategy， 其中很重要的一个原因就是，你如果给他的，他给钱给你。要么换了你的股份，然后呢，拥有一个波动更大的资产，它可以在场外把 equity 和 bond 拆开，把波动性做成另外的工具，一方面保护自己价格，另外一方面也可以套利。尤其是 CB 这种可转化债券，往往被对冲基金们或者说这些另类投资机构在场外 把它再做成结构化的产品，把它拆开，所以大家会非常喜欢去买这种像 MicroStrategy 这样的一些这样的，或者买股票，或者买它的 CB， 买它的可转债，因为对冲基金可以在上面还可以做别的事情，所以更好的价格弹性，实际上这也是 ETF 所做不到的。那么第三，它有一个更合适的杠杆。我们从单一资产的投资，原来只有两个极端的两头，要么你持有这个单一资产，比如说 BTC 或者 ETH， 要么你去买一个合约或者买一个 CME 的杠杆，中间有一个很大的 gap， 一个缺口，这个缺口就是以一个你不再是对 BTC 或者是 ETH 本身拥有一个这样一个期货的敞口，而是让这家上市公司通过设计一个非常合适的这么一个杠杆融资的架构，你只持有股票，上市公司自己去更好的去管理这样一个带杠杆的融资结构，然后让你能够享受到比 BTC、ETH 这样的加密货币它自身的价格增长或带来更高的一个溢价，这是可以给你带来溢价的一个投资工具，叫 DAT。当然 ，DAT 是自带一个下跌保护的。我们设想一下，如果股价下跌的幅度超过
Welcome back to the Bitcoin Magazine News Desk, powered by MetaPlanet. We're here at Bitcoin Asia 2025. I am Frank Korver, the political correspondent for Bitcoin Magazine, joined by none other than Dennis Koch of the BTC Inc. team, Tad Smith, partner and co-founder at 50T Funds, and Aaron Redwing, Bitcoin astrologer who works on the Ordinals protocol. Dennis, I'm going over to you. What does the future of creativity on Bitcoin look like?
Yeah, so, you know, the Bitcoin conference has done an art gallery for the past few years, and we kind of see this as an opportunity for artists to price their work in sats and just participate in the cultural landscape of Bitcoin, which, you know, I would throw this to Aaron, but the culture itself is really fragmenting in a number of directions.
Yes.
Yeah, so that's probably where we're at, fragmented ground.
Tad, we were talking a little bit about Bitcoin and AI, creatives working on Bitcoin. Your thoughts on the current state of things, art on Bitcoin? What are you paying attention to right now?
Well, we're in a period where the machine, broadly speaking, is encroaching on traditional human turf of creativity. And that's creating a whole lot of opportunity and a lot of anxiety.
Okay.
And I think you're going to see that accelerate as the machine gets better and better and better, and fewer things that have traditionally been the province of our species remain ours alone.
I like it. All right, we're getting deep over here. Aaron, I'm going to go over to you. Any hot takeaways on what's happening with the Ordinals protocol right now, or maybe any Bitcoin astrological takes you want to offer the audience watching and tuning in right now?
Yeah, I mean, I think kind of to Dennis's point about Bitcoin culture, you know, I think what we see throughout all of history is that the winners write history, right? So everyone has their own narrative of what's going on at any given time, and that's not different from the past. And so I think what we're seeing now with something like inscribing on Bitcoin, where Bitcoin is this immutable ledger of not only transactions, but also now cultural data with inscriptions, is you can write your version of history on Bitcoin, and Bitcoin will be around probably for much longer than you will as a human being. And so I think even though we might not be able to see it right now because we have like 2025 goggles, if you think about the power that you have when you can put whatever you want, whether that's art, you know, news, data, whatever that means to you, if you can put that on Bitcoin now, you are the winner that's writing history.
Be a winner, ladies and gentlemen. I think that's what she's trying to tell us here. Tad, I want to go back to you just for a second. You were talking about that anxiety that sort of comes with this future we're moving into. Can we channel that anxiety to some good art that might appear on Bitcoin or some art that might one day be priced in Bitcoin?
Well, let's put it like this. If you have a general anxiety about where value is going in a world dominated by AI, my 2 cents, and this is not financial advice.
Let's go.
The closer you get your investments to Bitcoin, which is a digitally scarce, immutable quality, the better you're probably going to be, and that's certainly the way I operate.
Not financial advice, but good advice, ladies and gentlemen. Dennis, I want to go to you. Closing thoughts, biggest takeaway from the conference as far as the art gallery we had over there, anything you want to share with the folks back home?
Well, I think Tad brought up this somewhat of an existential question about like where we are in the state of Bitcoin, and I'm seeing a number of projects that are talking about identity and viewing one's identity whether on chain or not, and I think that's interesting landscape. We're trying to assess what our identity is going forward, and I would say Bitcoin is really mirroring that in a lot of ways. So. Yeah.
Lots of big thoughts here on the news desk, ladies and gentlemen. We have to head back to the Nakamoto stage, but stick with us. We'll be right back at the Bitcoin Magazine news desk powered by MetaPlanet right after this.
All right, thank you very much. We have some exciting stuff to talk about. Groundbreaking, world-changing, opportunity-changing stuff. The deflation dividend we're going to talk about right now today, but we're going to start off with the shocking number. Some of you guys might have seen this or heard this. 300 million. 300 million is the number of jobs that are supposedly going to be taken away per Goldman Sachs. It's the number of jobs that are going to be lost because of artificial intelligence, because of AI. They try to tell you that the future we're going into, there's not going to be any jobs. We might need universal basic income to take care of people. What are they going to do? Other reports say that maybe as much as half the jobs will be taken by AI. But I'm here to tell you something different. I'm here to tell you that this is not the first time that we've faced this question. In fact, history tells us, it actually shows us and gives us a blueprint for the answer. And the blueprint tells us that this is not a moment to fear, but instead, it's the greatest opportunity of our lifetime. Now, while Goldman Sachs is panicking about AI jobs being taken, what they're missing is the much bigger picture. The much bigger picture is that we're not just in a technological revolution of AI and Bitcoin and decentralization. We're in the final phase of an 80-year financial cycle that's actually resetting right now. There's a 40-year bull market in bonds that started back in the 1980s, and it's ending. Government debt levels, unsustainable. And here's the paradox. The very system that the governments are trying to save right now with money printing is designed to steal the very gains of AI from you. That's the paradox. And this creates a perfect storm. I talk a lot about cycles. It's not just a 50-year technological cycle that we have right now or an 80-year financial cycle I just showed you, but there's actually 3 cycles that are converging right now for the same time: a 50-year technological revolution cycle, an 80-year financial cycle, and a 250-year political revolution cycle. You see, the entire world is shifting right now, but very few see what's actually going on. While Goldman Sachs is panicking about AI, they're missing the bigger picture. But for now, we're going to keep this short. We're going to keep this into focusing on just the single 50-year technological revolution cycle, because that is the blueprint for what I want to talk about right now. It's what I call a quantum leap. It's where humanity takes this giant leap forward, and it happens about every 50 years. It's happened 6 times now in the last 250 years. Since the Industrial Revolution, and I'm going to walk you through those. And this blueprint happens about a 50-year time period, and there's 4 distinct phases that this goes through. Phase 1 is the technology emerges. It was introduced, it's fun, It's revolutionary, it's disruptive. We try a bunch of different things. Early adopters experiment with this technology. We got Bitcoin, then we got a cryptocurrency boom. Phase 2 is where we have the panic and the resistance. This is where AI is right now. The establishment starts to panic. Oh my gosh, governments need to get a control on this. Goldman Sachs is going to take everybody's jobs. What are we going to do? Workers start fearing replacement. Let's start talking about welfare, universal basic income. Phase 3, adoption, integration. Now the technology proves it's valuable. Businesses integrate it. New jobs start to emerge. And phase 4 is the transformation and the abundance. That's where the society is completely transformed. Living standards rise. But not if governments have their way with it. We're going to talk about that. Now, every generation thinks that this time is different. Anyone heard that before? This time is different? Well, I have the receipts. I have the receipts for 250 years of data that every 50 years, the tech wave kills drudgery, not jobs. For 250 years, the doomers have been wrong, and they're going to continue to be wrong, because the mistake that they make is they're mistaking task disruption with job disruption. It's a big difference. All right, we're going to run through this. Now, first of all, like I said, there's been 6 of these, and every time a cycle repeats, it's more likely to repeat again. We're on the 6th one. I'm going to run through these pretty quickly. Let's walk through them. Phase number 1, 1771. It was the birth of the Industrial Revolution. This was the first time we had mechanized machines, machines that could do the work of 5,000 men. Oh my gosh, what do the 5,000 men do? They don't have jobs anymore. The Industrial Revolution of 1771, we saw the birth of a group of people called the Luddites. And the Luddites were afraid of something called a power loom that they feared would take their jobs. And they literally smashed the machines. They burned the machines. They were afraid of technology replacing their jobs. But what really happened? Well, we know that in Manchester, where this started, jobs grew 12 times. From 25,000 jobs to 300,000 people working in factories. New jobs emerged everywhere. Factory workers, engineers, transportation workers, coal miners. Jobs that were never there before. The first factory, Richard Arkwright's factory, had 200 people working in there. By the time Henry Ford's factory came around, we had 40,000 people working there under one single roof. Employment didn't shrink, employment exploded. Wave number 2. This one's very relevant for where we're at today, because AI is going to replace all the drivers, self-driving cars, self-driving taxis, right? The whole transportation industry is under attack, right? Well, we saw the same thing with rails. We used to transport stuff across continents with buggies and carts, and now steam engines and railways would take away all those jobs. But guess what? New jobs emerged. Now we needed people to build the railways. Station operators, locomotive engineers, conductors. The transportation revolution didn't eliminate jobs. It created an entire economic expansion around moving goods, around moving people, but faster than ever before. Wave number 3, steel and electricity, 1875, we saw the panic. Electricity is going to take away manual labor, they told us. The reality? The global economy exploded. As a matter of fact, manufacturing went up 4 times. From 2.5 million workers to 10 million workers from 1880 to 1920. Again, new industries exploded we had never seen before. Electrical equipment, production, steel manufacturing, power generation. Wave number 4, oil and auto production. 1908. For all of humanity, people walked and rode horses, and now we had cars. Amazing. But what about the buggy makers? What about the craft manufacturers? Well, the reality is we created an entire automobile industry from nothing. Auto manufacturing, petroleum extraction, refining, gas stations, mass retail networks. One innovation didn't replace jobs. It created multiple new economic sectors. You see, people think of these things in a vacuum. It takes away jobs that we see right now, but it creates jobs that we never even imagined. Wave number 5, the computer revolution. ATMs, they're going to get rid of bank tellers. We're not going to need banks. All the people working at banks will be gone. Computers are going to replace everybody, they told us. The reality? Didn't happen. Computer-related jobs grew 10 times in 30 years. from 450,000 workers to 4.6 million workers in just 2 decades. The tech sector expanded by 20% compared to just 11% in the traditional private sector, twice as fast. Even warehousing and logistics continued to grow by 48% with computers. They didn't eliminate the jobs, those sectors grew. You see, everybody that's focused on losing jobs thinks about it with this scarcity mindset. But businesses, they want to grow. So because they can become more efficient, they don't get rid of people, they grow the business. That's what happens. Here's a case study. Here's a perfect example of exactly what happens. We have, looking back at the ATM, everyone said they would eliminate bank tellers. Why go into the bank when I can just use an ATM, right? And we see ATMs everywhere. They're out here. But yet bank tellers are still there. Because what happened? Well, the lower costs meant that banks could afford to open up more branches. More branches means more teller jobs. And they persisted because, again, that market expanded. Technology reduced costs, so the markets expanded, and more jobs were created. And this is the pattern that happens every single time. It creates demand in areas that we didn't even know there would be demand. It creates demand for things we didn't even know we wanted or needed until they were there. Anybody ever go online shopping and you see all these things that you need that you didn't know you need until you saw them? Anybody seen that? Oh, it's just me. Okay. Well, that's what happens. Now, the current AI data is that this is what's already happening. The World Economic Forum projects 170 million jobs will be created versus just 92 being displaced. Now, that's a key differentiator, displaced. Some jobs will go away, but others will be created. So you could potentially be in a job that gets disrupted. The wonderful thing is that you can find a new job. You can learn a new skill. LinkedIn reports a 60% increase in AI job postings. There was no AI job postings before. Now those jobs are there. The BLS, Bureau of Labor Statistics, projects 6.7 million new jobs over the next decade. Now, before I explain why you're not getting rich from this AI boom, let me just show you how massive these productivity gains are. Programming productivity is up 126%. Technical analyst tasks are up 70%. Overall task completion up 60%. Document creation 59%. Customer service is 14% more efficient. Productivity gains everywhere. Now, the historical pattern, it never fails us. A 30 to 40% increase in task displacement creates 60 to 80% more roles, new jobs, new positions we didn't think about. So AI deletes the chore, and we as humans get a promotion. We get to work on higher value things. And AI is creating the biggest productivity revolution since electricity, and it should make all of us rich, but it won't. The question is, if every tech cycle creates this massive abundance, this efficiency gains, then why don't we feel it? Why are we working harder just to stay afloat? But why did past generations get so rich from technology, but not us? WTF happened, 1913. Anybody seen the website WTF happened in 1971? Anybody seen that website? Well, this is WTF happened in 1913. Something happened. It's when the Federal Reserve, the central bank of the United States, was founded. It's when the classical gold standard era ended. You see, the world had been on a sound money standard, an equity-based system for millennia. But in 1913, we had the birth of the central bank, the Federal Reserve of the United States, and that was the year that money broke. Everything changed after that moment. Now, when the classical gold standard era ended, it went from about 1870 to 1913. Economists call this era, quote, the most perfect monetary system ever created. During that period, there was massive growth, massive prosperity. The growth of the economy grew by 4.2% on average. Industrial production exploded 682%. Real wages the amount of money that people got to take home to increase their quality of life went up by 60%, making more money, more money, more money. At the same time, inflation stayed at 0. Imagine your wages going up by 60%, but prices not going up at all. That's when real living goes up. Now, when technology made production more efficient, prices fell, so everyone got richer. The deflation dividend, as I'm calling this talk, the deflation dividend flowed directly to working people and increased their purchasing power. Now, after the gold standard era, post-1913, GDP growth started falling. And it fell from 4.6% down to 2.8%, a 33% decline in productivity from the shift. The dollar value lost 97% of its purchasing power during that decline. Productivity growth fell all the way down to less than 1% in the pure fiat era. Now, under sound money, in the gold standard era, technology made everyone richer. Under fiat money, technology makes us all poorer. We work harder and harder, our money buys us less and less, and our quality of life goes down. And this chart shows this evolutionary path. There was really 3 distinct phases, just to sort of get into this real quick. We had the gold standard era up to about from 1870 to 1913. That's when the central bank was developed. Then we went into sort of a semi-quasi, we're still sort of on a gold standard with the Bretton Woods Agreement, but we're sort of now on a central bank standard that lasted from 1913 to 1971. 1971 is when President Richard Nixon of the United States rug pulled the entire world, taking the US dollar off of the gold standard, thereby taking the rest of the world off the gold standard. And you can see average growth falling and falling and falling as we moved away from sound money standard. And here's how this works. Here's how they steal your productivity gain. So as technology, like AI, wants to give us this productivity so our lives can be easier, we can work less. They steal that productivity, and here's how they do it. So, number 1, technology improves, costs fall, prices fall, so everyone gets more purchasing power. You work less, your money buys you more goods and services in the future. But under fiat money, technology improves still, costs fall again, but this time central banks immediately print money to fight that healthy deflation. Real productivity gains get inflated away before they reach working people. It's a leaky bucket. Technology is making our lives easier. We are working less because technology does it, but all of those gains get taken away. Let me put this into some perspective and some numbers for you. About 2 years ago, inflation in the United States reached 9%. That means for the average person making $30 an hour, they had to work an extra 10 hours per month just to buy the same amount of goods and services that they did the month before. An extra 10 hours per month that could have gone to your health or your fitness, your new business, your family. But instead, you had to work those hours just to have the same quality of life that you had the month before. But this time is different. This time we have the biggest productivity revolution with AI that we've seen since the 1870s. It's happening right now. And for the first time since 1913, we have a sound money alternative. We have absolute scarcity meeting infinite efficiency. For the first time in 110 years, we can actually keep the gains. That's where Bitcoin comes in. Instead of watching your purchasing power dwindle down, instead of watching your purchasing power seep out of this leaky bucket for the last 110 years, we have digital sound money. We have Bitcoin. And here's how it captures the deflation dividend. So when AI makes us 40% more efficient, more productive, we can take that time, that cost savings that we get, and now we can store that in Bitcoin. Bitcoin, of course, is the only digital asset, scarce asset with a fixed supply of only 21 million. No central bank can print more, no politician can debase it. your AI productivity gains that the world gets are able to be locked in Bitcoin permanently, and the energy cannot leak out of it. So Bitcoin fixes that leaky bucket of fiat money. So if we look at and compare the properties, we can see the stark difference. Fiat money has unlimited supply, it has central control, and fiat money fights this natural, healthy deflation. Bitcoin, on the other hand, is fixed supply. It's completely decentralized. Nobody controls it. It preserves that healthy deflation, so our money can buy us more goods and services in the future. It stores our productivity gains perfectly across time. This is the first time technology in over a century is actually allowing us to capture the technological progress. Now, remember, we talked about the 4 distinct phases of this 50-year technological cycle. There's the institution phase in phase 1. Bitcoin's in that phase. We're seeing now in phase 2, the institutions are here. MicroStrategy, or now Strategy, is buying up as much Bitcoin as they can. BitPlanet, we keep seeing their ads pop up. They're on a race to buy Bitcoin. Every treasury company is trying to add as much Bitcoin as they can to the balance sheets. Governments are starting to accumulate Bitcoin at a rapid rate. We're watching the smart money position before this mass deployment starts to happen. The frenzy phase for Bitcoin parallels what's happening with AI. Because in these 50-year technological revolution cycles, it's not about one single technology, it's a cluster. And so Bitcoin and AI are tracking together. Both technologies are converging at the perfect moment. It's not a coincidence. This is how the cycles work. And here's the perfect pairing. AI plus Bitcoin equals the productivity revolution that we finally get to keep. Think of it this way. AI is the engine that generates massive economic energy, and Bitcoin is the battery that now stores that economic energy. We like that? Bitcoin is that battery. Now, this is digital abundance meeting digital scarcity for the first time in history. Technology finally serves us, not just central bankers. Now, for 110 years, as I showed you, our productivity gains have been stolen continuously by the money printer. Working against technology, every time we make our lives easier, they take a little bit away. AI is now creating the largest abundance boom in history. Don't get caught up in the doomers. They're just running cover so they can continue to print money and steal that from you. The greatest era of abundance is right in front of us. The biggest abundance in history is right in front of us. And now Bitcoin makes sure we finally get to keep it. You see, every generation has contributed to building the future, but we're the first ones that get to keep it. That's what I got. Thanks so much.
I'm Simon Garovich, president of BitPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal, increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up, and our goal is to become the most held stock.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Asia 2025. I am Frank Gorman, the political correspondent for Bitcoin Magazine, joined by two lovely ladies. To my left, I have Reina Chicas, the Director of Education for Mi Primer Bitcoin, as well as Teruko Neriki, involved with Folger Ventures, co-founder of the Tokyo Bitcoin base. Very exciting stuff. Reina, I want to go over to you. It's been a very exciting year for you. You became the Director of Education for Mi Primer Bitcoin. You're doing incredible work both in El Salvador and around the world, if I'm not mistaken. Please tell us a little bit about it.
Yeah, Frank, thank you for having me. I'm really, really nervous. This is the very first time. I've seen you so many times on these lives. It's so good to thank you for having me. I also just met today with her. As it happens, she has a Salvadorian niece. So we were connecting very, very, very good. Yes, so very exciting things with My First Bitcoin. You know, like we've expanded. We have decided to go global as well. You know, like more programs, more program development, more translations. We want to empower more educators as well. We're going to continue classes and teaching, of course, as many languages as we can. We've been developing more, let's say, software, programs, tools that it can make all of these easier, accessible. I mean, because time is clicking and we feel the urgency of more people finding it. So yeah, we're very excited. We've been through, let's say, transition in terms of team management, insights, policies. Like, it's what it happens sometimes, you know, to like try to scale. So you basically level up your own game. You feel like when you're kind of hitting your ceiling, so then you go back to school. It's like, okay, what else I need to learn? So I am ready for this challenge. And so I am really proud of the team as well, embracing it and taking it. I feel like we've come to create and build a very, very solid team, which I think I'm just excited to see what is going to happen in the next year, 2026. It's going to be amazing. And I'm just very excited to be here in Hong Kong, speaking with so many really cool educators. I just feel so lucky.
Amazing stuff. Super proud of you. Deruko, we have to wrap it up and go back to the main stage, but stick with us. We're going to do something in just a moment. We just got word that Balaji Srinivasan is going to be coming to us live on the main stage. So let's kick it back to Nakamoto. Stick with us. We'll be right back after this.
All right, guys. Okay, so I'm going to talk about when Bitcoin wins, not if, but when. And when Bitcoin wins, actually, the battle begins. And I want to go through a few things, just kind of talk through worldview and then next steps. So, you know, what actually will happen when Bitcoin wins? I'm going to go through basically several different aspects of it in some scenarios. So first, if you're interested in these ideas, we actually have a conference in Singapore on October 3rd, so you should come out there, Network State Conference. So this is kind of the very quick version of these ideas, and then if you want to build with us, come to Network State 2025 in Singapore. Okay, so when Bitcoin wins, it ends the Fed. And what does that mean? When Bitcoin wins, the Fed loses control. The Fed is actually not just the central bank of the United States, but it controls many other banks, central banks worldwide, from Japan to Canada to the UK, and that those then in turn control banking licenses, and they can freeze and seize funds, and of course they can print money. And Bitcoin exists outside the Fed's video game. Okay, so the Fed can freeze and seize everything within this network of banks, but it can't freeze and seize Bitcoin. It can't introduce 21 million plus, more than the 21 million Bitcoin. So when Bitcoin wins, the Fed, oh, further? Yep. When Bitcoin wins, the Fed loses root control, okay? Number two, when Bitcoin wins, gyrating rates get replaced with predictable policy. In the top right there is Fed interest rates, and they go like this, and that's just a function of feels. There's actually a Wall Street Journal article, for example, that actually there's a Fed governor who admits that what he felt like in the morning, he decided, okay, we're going to raise rates like 0.5 point, and it's literally just feels. They scroll the feed, and they put in, you know, the interest rates, and it's not, oh, really? Okay. All right, let's go with that. When Bitcoin wins, all right, is that better? All right, let's do that. Great, okay. So gyrating rates get replaced with predictable policy. What happens is you go from the interest rates going up and down and the Fed just monkeying with everything to something which is algorithmic and predictable monetary policy,
which is Bitcoin. And that's just this enormous leap forward in terms of the ability to plan for the future and not buy something and have rates hike to the moon or crash to the ground. You don't have the entire world thinking about what the Fed is going to do and the entire financial system architected on reading the tea leaves. Instead, it's very clear what the issuance rate is going to be, and so you've got algorithmic monetary policy. Then when Bitcoin wins, payments become packets. Okay, so this is Wireshark showing the Bitcoin protocol. And you can see that essentially there's no reference to a bank, there's no reference to a state. This is purely the network. Payments have become packets. And this is essentially this international network as opposed to an individual states network. When you actually get under the hood and realize what's happening here, it's actually really amazing. When Bitcoin wins, by the way, it wins around the world. It doesn't just win in any country. This is a map from 2024. You can argue maybe the percentages in this country or that country, but you can't argue with the fact that Bitcoin is a global phenomenon. It's not the state, it's a network. And when Bitcoin wins, it can win very fast. So when the faith in currency in Lebanon went to zero, when the full faith in credit in the Lebanese pound went to zero, Bitcoin was there, and it just went vertical like this, okay? So, hodl. When Bitcoin wins, it can win very fast. So next, when Bitcoin wins, Keynesianism falls like communism. And so basically when Bitcoin wins, treasuries will fade. People talk about US treasuries and more generally Western bonds as the risk-free rate of return, but really they're kind of the return-free risk. And if you've looked at the last 5 years, it's been the worst bond market ever with yield spiking. And if you don't know what this is, just look it up if you want. But essentially, this is something where people just they need to have a very high rate in order to hold on to the US and Western government debt. And this is only going to get worse as inflation picks up. So you stop saving in US government bonds and you start saving in the hardest money around, which is Bitcoin. When Bitcoin wins, also real estate falls in real terms. So in the West, since the 2008 financial crisis, the Fed has been printing money to buy mortgage-backed securities, thereby taxing the population in multiple ways. First diluting them down to the printing, and then bidding against them in the market, which is why it's so absolutely crazy in terms of where the housing prices, rental prices are in the West. This is something which is an upward redistribution of wealth to asset owners, and especially real estate owners and property owners at the expense of renters and those coming up in their career. And the counterattack on this is when Bitcoin wins, real estate falls in real terms. And people stop actually using houses as an investment, and they invest in Bitcoin. They hold Bitcoin, really they store value in Bitcoin. In houses, apartments, that's for utility. So when Bitcoin wins, fiat also faces global competition. If you know what happened with local news, when all the local newspapers got online, suddenly their local geographical monopolies of paper newspapers didn't matter anymore. They all had to compete with each other, and most of them failed. And only the global papers, the Wall Street Journals and Financial Timeses and so on, survived. And then they too essentially collapsed against social media and a truly internet-first media. And the same thing is about to happen with the introduction of all these stable coins around the world. As all these coins go on-chain, and they have to, all these local currencies go on-chain, they're going to have to, then they're all going to be in competition with each other. And the ones with bad monetary policies, anybody in their country, they have no geographical monopoly of cash anymore, just like the newspapers lost their geographical monopoly of paper. The distribution, the trucks, that didn't matter anymore, just like the distribution of the paper notes doesn't matter. So every currency, every national currency is in competition with every other national currency, and most of them won't survive, only the very best ones will. And so that means cryptocurrency will take over, because eventually, just like Twitter and social media beat NYT and Wall Street Journal, and those in turn beat local media, so too Bitcoin beats stable coins, the best stable coins, which beat the bad currencies. So fiat faces global competition, and that means states face accountability in a way they never had before. There's actually now a check on what they can do. When Bitcoin wins, fiat billionaires get flipped. And what that means is, several years ago at Coinbase, we calculated that somewhere between $100,000 and $1 million per Bitcoin, half the world's billionaires become crypto. And that means all fiat fortunes get diluted down, because there's around 2,000 something billionaires, and around somewhere between $100,000 to $1 million per Bitcoin, you have 2,000 something new crypto billionaires. So all wealth becomes crypto. All property becomes cryptography. And that means global wealth becomes crypto. And so that's what we call the billionaire flippening. And that's kind of already underway. And you're going to see that in the next few years. And that means genuinely risk-tolerant capital, because that is capital that accrues to individuals as opposed to, you know, things that are attached to the Western state or accumulated in nonprofits. It's really for those who are contrarian but right and bucking the system, as opposed to those who are conforming to the system. B-U-C-K-I-N-G, okay. Next, when Bitcoin wins, the printer runs out of toner, okay? In 2010, there's this really unusually honest article called How to Spend 1.25 Trillion. And NPR, unusually, uncommonly at the time, admitted that the Fed had a unique power. It could just print $1 trillion out of thin air. Now, if you think about what it takes to make $1 trillion, that's like selling a $1,000 iPhone to 1 billion people. That's $1 trillion in revenue. To make $1 trillion in profit is another thing entirely, because your $1,000 phone will have, I don't know, whatever $100, you know, cost, right? You'll have to discount it by the time you get to user 300 million, let alone 1 billion. So to just print $1 trillion out of nowhere is just this absolutely gigantic seizure of wealth that's distributed across billions of people worldwide, not just 300 million Americans. So the entire money printer go burr era just goes away completely, and the printer runs out of toner, and these governments actually need to work for a living. It's just a completely different world. And when Bitcoin wins, it becomes the government of governments. So in the 20th century, there's this book, there's another book called, I think something like Gold, Blood, and Treasure by the Army War College. And essentially the point is that only in the 20th century did you actually have total war, because governments had no constraint on their spending. So they just threw more men, more guns, and so on. That's why the world wars were so damaging. Before then, governments were actually constrained by gold, which they couldn't print. And so when Bitcoin wins, it actually becomes the government of governments. It's like a fusion of the progressive idea of the world government and the libertarian idea of limited government. It's the government of governments that ensures the governments are limited, because they just can't spend that much, right? There's limits on how much they can siege. It's like a minimum wage, except it's a maximum tax. So the max tax, not just a minimum wage. It's a government of governments. And so when Bitcoin wins, though, the battle begins. And the thing is that nothing just rises to infinity. It's never a totally clean exponential. As you hit a new level, there's pushback, and then it goes down, and it goes back up. So there's going to be many kinds of attacks. For example, there will be attacks on coders. The Roman Storm trial, Free Roman Storm, is just the beginning of this. I think that in general, if you are a programmer, you should be in a jurisdiction that you think is going to respect your safety. El Salvador could be that for many Bitcoin developers, potentially the UAE. When Bitcoin wins, the cryptography will be attacked. So quantum cryptography is not a theoretical thing. It is something that poses at least some danger to ECDSA. And there's a migration strategy now, but that migration strategy would mean everybody has to send from their address to a new quantum proof address. And that might take a very long time. And so we need to actually think about this, put research into this, potentially figure out a better mechanism here. So assume the cryptography will be attacked, because it'll just become a life or death scenario for many of these states. When Bitcoin wins, the network will also be attacked. Right now, just recently, the Bitcoin network passed 1 zeta hash per second, which is a crazy amount of hash power. But if you calculate it out, that's somewhere between $10 to $100 billion in hash power if you're just going to buy that from scratch and rack and stack it. That's actually on par with some of the AI data center spends. So I'm not saying there's a large number of actors worldwide who can do this, but there are some. And we're going to have a hash rate race at some point, and that's going to be a fairly big deal. So the network will be attacked, and we're going to have to see whether a coalition of different states and companies can rack and stack enough hash rate in order to keep the sort of balance of hash and prevent one entity from getting 51%. When Bitcoin wins, software will also be attacked. The biggest vulnerability to Bitcoin, arguably today, is Apple, Google, and Microsoft, because between them, they have trusted access to effectively push a backdoor to any computer with Windows Update, with software update, with updating Android phones and Apple phones. This is something which I think is under-theorized as a practical attack vector. And so you can use Linux devices. That's a possibility. You can, in theory, scale some new operating system to 1 billion users. But in practice, the defense here may just, as a Bitcoiner, be joining these big tech companies. Tim Cook actually has said publicly he holds some Bitcoin. And so it may just be something where you join the big tech company and you just make sure that they're not doing this. Look out for basically the civil rights and property rights of all of the Bitcoin holders worldwide. When Bitcoin wins, the community will be attacked. FDR's 1933 gold seizure is a prototype for the kind of thing that will happen. States that are actually running out of money will get very desperate and very, very, very crazy. And so all kinds of crazy things are going to happen. So the next 10 years are going to be wild. And so what I suggest is to pick your location. Your physical location is much more important than your portfolio allocation over the next 10 years. You want to be in a place that respects property rights. And so with all that said, when Bitcoin wins, it's time to build. And I do think that basically we're going to be moving from the two-party system to or the one-party system to the 1,000-city system where anybody can pick worldwide. And why is that good? Because that means freedom of choice. And if you like it, you can keep it, you can stay in your state, and if you don't, you can move. Just like at age 18, you choose your college, at age 18, you'll choose your country, which are actually already things that are happening where essentially, lots of students who used to apply to the West, they used to get a student visa at MIT, and then they'd get an H-1B, and then they would go and get a green card. That process of applying to college, company, and country just becomes applying to a country at age 18, and you get into the best country, the best city, the best community you can, and that's already starting with the startup societies, and that's what Network State is about. And so what comes next? Well, I wrote this book in 2022, and we've been holding this conference, and we actually opened up a network school, and we actually have a bunch of network schoolers here in Orange over there. So, so if you're interested in this kind of thing, after Bitcoin wins, what comes next? If you want to build, if it's time to build, then come to Singapore on October 3rd. Go to ns.com/conference, and that'll be the full day version, which is after Bitcoin wins, what next? And I think we can use all of our cloud capital to rebuild the land and to build cities and build communities. So thank you very much, and see you soon.
This concludes today's agenda. Thank you for all the speakers, moderator, and also the audience for making our day one session success. Please remember to take your belongings when you're leaving.
I'm Simon Gerevich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal: increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up. And our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from MetaPlanet, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
Bitcoin Magazine news desk, powered by MetaPlanet. We're here at Bitcoin Asia 2025, wrapping up the day. I'm Frank Korver, the political correspondent for Bitcoin Magazine, joined by none other than Rena Chicas, Director of Education for Mi Premier Bitcoin, Teruko Neriki, co-founder of the Tokyo Bitcoin Base, and member of Fulgur Ventures, and Shinobi, the one and only Shinobi, technical editor and opinion editor for Bitcoin Magazine. Ladies, we were just talking off camera about teaching people about Bitcoin, how difficult this can be, and also Bitcoin meetups, teaching people in a physical space. Teruko, you founded the Tokyo Bitcoin Base, so please tell us a little bit about what that's like and the type of educational work you do on the ground there.
Okay, so Tokyo Bitcoin Base is a physical Bitcoin space in Tokyo. Fulgur Ventures launched this past April. It's been for a while. We've been hosting a lot of events, including regular meetups for newbies. When we have guests from overseas, we're gonna have like a social event, blah, blah, blah. And then in November, we will have a proper Bitcoin conference. So because Japan is different from any other countries, right? You need to understand the market before you make content, right? So Japan is still blockchain, crypto, not Bitcoin phase.
We don't
so
like it.
Our focus is Bitcoin is different from any other tokens, any other coins. So, but when we said Bitcoin, people still get scared. Bitcoin is still like a stigma, it's a risk. So even before bringing out Bitcoin, I'm trying to teach them what the current system is, why we have all these problems. Because unless they see problems, they don't look for solutions, right? And then fortunately or unfortunately, Japan's having starting having inflation after 3 decades. So people actually now feel pain. Past 30 years, holding on to cash was actually okay. It was actually safest way to preserve wealth.
The yen was a currency that a lot of people used as a safe haven currency.
Yeah,
right?
yeah. But the Japanese yen lost over 30% of value over just 3 years, and the people don't really see that pain directly unless they go to like Hawaii or like Hong Kong.
Travel abroad.
Yeah, but that affects, because most of the stuff we consume domestically is imports. So people feel the pain, but people don't know why this is happening. So we are trying to teach them that fiat system, why inflation is happening.
Understood. Shinobi, we have this conversation a decent amount in the editorial meetings. The work you do as a technical editor, distilling information for a wide audience is not necessarily easy. You're a very smart guy. You know a lot about how Bitcoin works. You try to teach people about how Bitcoin works. What is that process like for you, trying to transmit this information, very new technology, novel technology, technology that's always evolving? What is it like to try to get that message across to people?
I mean, it's really difficult sometimes because you just have to step back and try to think like, what is the closest analogy or like thing in somebody's life that they can compare things to or have some kind of reference point. And then like that in and of itself can be a very difficult thing to just identify like that comparison point. But once you've nailed that down, it's like actually trying to get the similarities across. And then the real difficult part is any kind of analogy or comparison like that eventually falls apart. Like it stops being an accurate representation. And so you not only have to identify the comparison point, figure out how to get that across, but then you have to try to identify like where that comparison starts falling apart and figure out a way to get people across that hump where it's like, now this analogy isn't working anymore and we actually have to talk about what's really happening under the hood. And that last part can be the most difficult part because if you don't nail that, people just kind of keep going with the analogy in their head, and rather than helping them understand, it actually hurts their understanding if they go like past that horizon.
Yeah, appreciate that perspective. Very, very insightful. I was just told that we have a QR code on screen. I believe we're giving away free tickets to Bitcoin Asia 2026. Please correct me if I'm wrong or insane, someone. I guess that's the case. David Bailey, I don't know what goes on in your brain, but everybody, he's giving away tickets. So please scan the QR code in the bottom of the screen. I want to go over to Reina, though. Reina, we were talking a little bit before about Bitcoin education, not just necessarily being a cognitive thing or a psychological thing, but an emotional thing, right? Yep. Bitcoin is a state change. It's something that the world has never seen before. This money that's not controlled by a state. It's volatile. There's lots of reasons for people to be nervous about it. They have to take responsibility for holding their private keys. What is it like to do the work that you do day in, day out, educating people? What is that emotional side of it like?
I think it goes, it varies sometimes depending on ages as well. I think there is pros and cons of teaching adults and then teaching kids as well. I've come to realize that I think one of the hardest part to teach adults is because we have to do a lot of the own learning that we already have in us. It's like you were mentioning about, like it's not super cognitive, like we get it, but we just kind of want to hold on into what we know already. Yeah. We don't want to let it go. Then it's the responsibility part, because these days you forget your password, you just call somebody, and that is it. You have access again. Yep. But a lot of the day-to-day, so sometimes it feels like kind of delivering bad news, right? Like kind of like, yeah, this is not great how it works, but you know what? Like there are good news. Like one of our content says, like, we have good news. Yeah. We fixed the money, but we have to work on it. And on a day-to-day, sometimes on classrooms, we don't do a lot of classrooms anymore, but in my experience was the kids get it like very quickly. It's like you just explain about inflation. Yes. It's like, okay, yeah, that makes sense. But because you are at that stage of when everything, you are not questioning that much. And I think we've lost a lot of that as well. Yeah. Growing up in the current systems, we are not being encouraged to critical thinking anymore. We just basically have to accept. Yeah. There is another wall that goes down on either privacy or control, and it's just normalized. Yep. If you notice, but all of the platforms now, even to make a reservation, you have to KYC yourself so much, and it's just normal. Yep. So then people, sometimes when you come up with these concepts and trying to teach about Bitcoin, it is very hard to people at the beginning to understand how everything that it's involved also into the, like our daily lives, but also if you learned the principles, if you learned the, let's say, philosophy, ideology part of Bitcoin, it can cover that as well. Yep. So it can be a little bit overwhelming. It can feel a little bit overwhelming, but, like trying to start with the basics, make it relatable, build trust. Sometimes you just kind of want to feel heard, right? Like to have sometimes you feel things are off and you don't know why, but you're finding someone that you can okay, that's what's happening. That's what on the news or like on the food and stuff, everything. So it's very important to sometimes don't feel like we know everything already.
Right, sure. Yeah. Yeah, appreciate that perspective, Reina. Thank you all for joining us. We're wrapping up the final panel of the day here on the live desk. We heard from some amazing speakers today, Mark Moss, Balaji Srinivasan. Tomorrow, be sure to tune in to hear from Changpeng Zhao, CZ from Binance, Eric Trump, I believe Simon Garovich from MetaPlanet, our lead sponsor here behind us. Again, I am Frank Corva, political correspondent for Bitcoin Magazine. We want to thank everybody for tuning in. We're going to be going live 9 a.m. local time tomorrow. I think, Teruko, you'll be joining us first thing in the morning. Thank you, everybody, for tuning in. Again, I hope you scanned that QR code, got your free tickets, so that next year you're not watching it on the screen, but you're here with us in person. And on that note, I'm going to leave it there. Thank you, everybody, for tuning in, and we will see you tomorrow morning. Take it easy.
I'm Simon Garovich, president of MetaPlanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal: increasing Bitcoin per share. Today, we become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up, and our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from MetaPlanet, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning. I'm Simon Garrett.